Freddie & Partners CEO, leading alternative asset manager focused on real estate, mortgage finance and corporate credit as well. Great to catch up with you, Don. Let's just start there. The risk of the W. How big is that risk right now?
Well, we think the W risk is quite real. And without CARES 2, we're going to be in a position, certainly, that the increase in the amount of mortgage defaults that are likely to take place and credit defaults will be quite real. And while consensus numbers right now on corporate credit defaults, for example, have a broad range between 3 and 8% depending on who you're looking at, our expectation is that we will get some sort of CARES package, but we'll be still in a 4 to 5% default world.
Without that CARES package and just looking at the reality of now, does it make sense to you that last month was the best month for the lowest rated junk bonds going back to 2016 as we saw record numbers of hospitalizations and increasing number of people filing for jobless claims?
Well, when we talk about the financial market as an indicator of the economy, we have to also remember that it's also an indicator of global liquidity, the volume of savings that is in the system, the amount of liquidity the Fed's putting out. And so the question is, are we seeing a real forecasting of expected GDP growth, or are we seeing a desperate need to invest on a part of a meaningful cohort of investors around the planet? Our expectation, talking about the 10-year that you just mentioned, is we're going to see a tremendous drive for yield in 2021 and beyond. And so our concern remains that yields are not necessarily indicative of the type of risk that's in the marketplace. We have the opportunity to look at a market that could be very rich in opportunity, but it'll be a tale of two cities. Good credits will get unprecedented low spreads is our expectation, and that we'll see a lot of volatility and that low single B, triple C category as we continue to see uncertainty about the economy and the realization of the defaults that are embedded in the marketplace today that may be not well priced.
What an agonizing situation for a credit investor. And I wonder from your perspective, Don, given your years at Bear Stearns and as the head of credit at Goldman Sachs, is that golden era of credit where it actually mattered when you actually looked at the fundamentals? Is it over?
I think we're moving from an environment where it's been many years of beta trading. And all you had to do was avoid the industry that was problematic of the year to be a successful manager, into an environment where it's a real stock pickers type of market for credit. So I'm hopeful that in 2021 and beyond, we're in an environment where your credit skills will be rewarded instead of just your momentum trading skills, which is really what's been going on for the last couple of years. I think that bodes well for active managers. We haven't really seen the era of the active manager play out for some time. There were certainly several that did well this year, but I'm hopeful that this will be the year that the coming year where we see that play out, that credit selection is critically important. And we've seen that within industries, within even parts of travel and leisure. There have been winners. In parts of retail, there's winners. And so our belief is that selection is critical, whether it's in corporate credit, structured credit, or mortgage credit. You're really going to see that beta isn't the play, but selection is.
Don, walk us through the alternative space in really simple terms and why you think that might be becoming mainstream now because of the forces you've just gone through in the last couple of minutes.
Well, I think we start to see it mainstream because of that, as you pointed out, or I pointed out and you emphasized, that need for return in yield is increasing so dramatically when, the 10-year is at these incredibly low numbers. The expectation is that the Fed will hold rates down and that people need to have cash flowing assets, a strong preference for them, and the ability to access returns that are not readily accessible by all the momentum investors in the world. So our expectation is almost the harder it is to do, the more valuable that task is, or that asset management skill you bring to someone. So we invested in single family rentals long before anyone else because it required a huge barrier to entry, and it keeps liquidity out, and you can drive investors better returns by the difficulty of accessing that return. And so we see that throughout many of the markets. As mortgages are another example of that, where in stressed and distressed mortgages, you need a very specialized skill. Once upon a time, as Lisa referenced, credit was like that. That's gone away as it's become more popular. And we've had almost, I think, 780 credit managers in the world. That hardly allows for great differentiation. But in new areas like stressed mortgages, even more so single-family rentals, I think you can see a new skill set developing enabled by technology that allows you to be in a position to perform for investors in a very differentiated way that isn't beta, but is actually alpha.
Really interesting perspective on the industry. Don, come back soon. Fantastic to catch up. Donald Mullen there of Prenium Partners. Lisa, a huge issue with spreads being compressed to the degree they already have before this recovery has even started.
You have to wonder what people are actually going to get if some of these companies default, right? I mean, given how low the risk premia are, given how low some of the assets, the value of the assets they have are that could potentially be used to liquidate and get paid back, given how dispersed they have begotten with different assets, you just wonder what the downside risks are and whether people are adequately prepared for that.
Look, I know there's a lot of pushback against the central banks for what they did 8-9 months ago. Can you imagine what the economy would look like if they hadn't done that?
It would be rough. Look, they did. Look, I'm stuttering over my words because I am probably one of the people who has been critical. And yet, if you look at what they have accomplished, yes, they have cushioned the decline. How much have they taken attention away, though, from fiscal support? And that, I think, is a key question.
Sure. That was the argument we used to hear in Europe a lot over the last 10 years, too. Coming up on this program, Stuart Kaiser of UBS on this equity market, just ripping through the month of November, and this December, we add 37 points to the S&P, up a little more than 1% this Tuesday morning. Good morning to you all. This is Bloomberg.
The big concern is climate change. We can see the global warming accelerating at the moment, and the goals that we must hit are so ambitious. It's 1.5 degrees by 2050, being climate neutral in terms of emissions by 2050. That's a huge challenge. We have to reduce emissions by 50%, 2030, 2040 again. It's very, very ambitious, and mobility plays such a crucial role in there. One thing is to do it in developed countries. I think we're going to get there by 2030, but then the rest of the world, and that's just as important. If you look at developing countries, emerging countries, that's where probably the biggest challenge we are going to face, to also deploy EVs there and make mobility greener in those countries. I know it's possible to move mobility forward fast enough to be able to do its part in this fundamental threat that we're facing.
CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
The resurgence of the disease certainly promises nothing good for the U.S. economy.
The continued weakness of the labor market is something that is going to drag the whole economy down.
We're still in a deep recession.
There's pent-up demand for getting out of the house.
It's time to get in big and spend big.
Whatever the damage is done over the next few months, entrepreneurial America will come back.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
From New York and London for our audience worldwide, good morning to the second hour of Bloomberg Surveillance live on Bloomberg TV and radio. Alongside Lisa Abramowitz, I'm Jonathan Ferro. Tom Keene taking one final extra day off. He'll be back with us tomorrow. This market ripping through the month of November, adding some weight to the rally this December. First day of the month, Lisa, up 1% on what? On nothing, it seems, ahead of this testimony with Chairman Powell and Secretary Mnuchin a little bit later this morning.
Yeah, Tom Keene is so upset that he is still in triple leveraged all cash funds that he had to take the time out to start his own cooking channel on Twitter, which is what he seems to be doing over the past few days. Look, there is a question how much good news is baked in. We have gotten some news about vaccines looking for approval, and yet at this point, and you've raised this again and again, John, how much scarring is there from record numbers of cases of COVID as well as hospitalizations? I mean, the numbers keep breaking all-time highs.
Look, the numbers aren't going to be great the next couple of months. That's a given. I just don't know how much we need to see that's really going to weigh on people, considering how well anchored their outlook is right now for 2021. The vaccinations could begin in a couple of weeks, Lisa. Do you want to be short going into that? I think that was the question even before we got the vaccine news in the month of November. When do you want to sell the vaccine story? Bank of America already talking about doing it, right, by the way. They had a note out in the last 24 hours talking about that. Maybe we've got to that moment of peak optimism. I think that's the big challenge for everyone to figure out.
You know, there could be a question when they actually start to vaccinate people and people realize that it takes 6 weeks to get immunity, when they realize that it's going to take a while to roll out all of these vaccinations and get everybody on board to actually get stuck in their arms. That might be a reality check when people are still social distancing, John, and still wearing masks. I know that's what my kids worry about every day. When can we stop wearing these?
It's a slow process, as you point out, Lisa, a really slow process. Let's whip through this market quickly for you. About 90 minutes away from the opening bell in New York City. Equity futures up 38, up a little more than 1 percentage point. Talked a lot about that single currency, the euro stronger by a third of 1%. The dollar weaker. Took a while to come through. In November, it was a slow start. Then the dollar weakness flushed through this market. Euro dollar 119.68. Cable with a breakout over the last couple of weeks as well. In the bond market, yields up 2 basis points to 0.86%. Right on the average for the month of November. 0.8586 is your yield on the US 10-year. And we just pulled back a little bit on crude, down about 5/6 of 1%, $45 and about 10 cents on WTI. Lisa, we're delaying the OPEC Plus meeting just a little bit. Talks about talks, which I know you love to talk about.
I love talking about that.
But that's what OPEC Plus has been doing. They've been having talks about eventually having talks, and those talks about talks haven't gone so well.
Man, you make it sound scintillating, John. How can I follow that? I mean, really, to build on the talks and talks and talks and talks, it is adding some pressure to the price of oil because people are concerned that some of the OPEC Plus members might increase production. I don't know how much of a risk this is, though, John, when you actually read into the details.
Forgive my tone this morning. I've just been exhausted by the consensus views of the last several weeks that are just, annual outlook after annual outlook reads exactly the same, Lisa. Pretty much every single one about the year to come. 2021 is going to be better. That doesn't depress me. That makes me happy. I'm with you. But then every single trade just seems to be the same. It's the cyclical rotation. It's the beaten up names through the year 2020 that are going to perform well in 2021. It's yields up, but not by a lot, to about 150. Maybe we'll test that kind of level. Don't you find it all a little bit boring at the moment, Lisa? Just the same calls after the same calls?
I love that you're setting up our next guest, basically laying out the consensus and then asking him what his view is. And when he gives his consensus, you can try to act excited. Look, I agree with you. It is boring. And yet there is still a lot of excitement, if you want to call it that, or still a lot of unknowns that are much more real about how the economy is going to do, let alone how markets are going to respond, Sean. And hang in there.
Stuart Kaiser joins us now from UBS, hoping that I didn't just tick off every call they've got for 2021. Stu, great to catch up, sir. Lay it out for me. 2021, what are you guys looking for?
Yeah, you know, I think it is a little bit more of the same, Jonathan. I think the risks that probably are being a little bit less discussed would be if we do get the vaccine introduction and the growth that people expect. You know, what does the Fed's posture look like middle of the year? So that's maybe one area where there is a little bit of underlying risk that people aren't as focused on. From our perspective, from a volatility perspective, for instance, you know, there is still a lot of risk premium out there in the market. You know, I know the VIX is down to a 20 handle, but the futures are still, you know, at about a 25, and longer dated risk premium, i.e. like S&P 500, 12-month puts and stuff like that, still do carry a lot of risk. So that's either sending you a signal that it's not at all clear, or that is going to be a fairly big opportunity to invest in as those longer term kind of risk premiums need to compress. So yeah, big picture, we do expect to pick up in growth. You know, our rates view, I think, is fairly similar to what you've described. We do expect tighter spreads, though we do think could be some pressure on spreads early in 2021, sort of first kind of 3 to 4 months. But beyond that, once the vaccine's introduced, et cetera, yeah, we do have a fairly positive view on things, with the caveat that, you know, maybe eventually the Fed becomes a discussion point, higher than here, obviously, but does become a discussion point. And again, risk premium in the bond market is not as normalized, I think, as some people think.
Stuart, sometimes boring makes money. I get it, and I don't want to insult you personally. I'm close with you. You know we get on. I'm just trying to work out, when these calls happen with clients and they speak to every single strategist and every strategist is saying something similar or a different flavor of the same thing, what's the conversation go like? What are they looking for right now?
Well, look, I think people are looking for the added consensus view, and I think really the big risk or uncertainty here is a lot more to do with timing. You know, it's when do we get the vaccine introduced? When does it get widely distributed? To Lisa's point before, you know, how many people take it? How long does immunity last, et cetera, et cetera? So I think, you know, there is some concern of the Georgia runoff in early January. You know, the fact that the data will look probably pretty ugly for a few months, and we won't probably have broad-based FDA approval until late March, early April. So you've got kind of this dark winter period. And I think what clients are struggling with is, you know, how bad will that be? And is it bad enough that I can't just look past it? So I think really that's the debate, is much more on timing than what the eventual outcome will be.
So do you recommend that they just go long and go home?
I think we're probably a little more cautious than go long and go home. I mean, in our view, talking about the quote-unquote rotation trades, I think we are more comfortable with something like EM or something like, you know, global cyclicals than we are with going, you know, deep down, you know, the value hole or chasing kind of lower quality stocks. So I think, yeah, you want to have long exposure. Potentially you want to do that in a risk-managed fashion, or just be a little more selective in terms of the way you go after that. I don't think we're in the position now where you just kind of close your eyes and buy beta and just buy the lowest quality stocks you can find. I do still think you need to understand what the cadence of growth is going to be and try to identify the assets that are most levered to that. You know, we like global cyclicals, things like Nikkei, things like, you know, emerging markets within the U.S. still favor high quality cyclicals as opposed to going into that deep value stock. Small cap is something we like, though that is, you know, that chart is a little bit hard to buy right now. So yeah, we think you should be long, but I'm not sort of, you know, over my skis excited about the lower quality trade yet.
All right, so let's get John a little bit more excited and start talking about potential for a disruption to the consensus. I know you were talking about some of the catalysts. I'm wondering from a structural perspective, how crowded is the trade? I was looking, for example, on the dollar side, that there is the greatest volume of short bets against the dollar ever. Is there a similar kind of really crowded feel in equity derivatives?
Honestly, I don't think so. We've seen, just using small cap as an example, because it's an easy one, small cap was up about 20% in November, massive increase in options open interest and in call volumes. But the volumes were up much more than the open interest, which suggests you're getting a lot of kind of short-term tactical trading behavior, as opposed to people stepping into that trade and putting real money to work. So yes, I think, people have moved in that direction, certainly. But it doesn't feel, I wouldn't say it feels overcrowded yet. We were coming from a real low point, and maybe we've gotten ourselves to something that's above average, but I don't think we're completely over our skis long, some of these cyclical rotation trades yet. And what we always go back to is people have been building this sort of safe, high quality portfolio for a couple of years. That's not specific to COVID. So in our view, it's going to take a little more time to unwind, than a lot of people hope for. And, just 1 month isn't going to do it. So I do think the positioning has moved in that direction. But our view is that it's not, not done yet. And I don't think people are fully invested in it yet.
Stuart, I love you. It's great to catch up. As always, looking forward to catching up soon in person as well. Stuart Kaiser of UBS. Stuart, thank you, sir. Just want to get some news coming out of the United Kingdom. As you all know, we have this tiering system. Tiers of restrictions around certain places, certain regions. Tier 3 down to Tier 1. Tier 3 being the most severe. Tier 2 is London, by the way. London is in Tier 2 for anyone that's interested. The Prime Minister says he thinks England and the tiers will be needed until spring. So that's the story around the restrictions, Lisa. So the vaccinations could start before the year is out, but the tiering, according to the Prime Minister, will be needed until at least spring, and any extension will only be had by a vote. So it's set to end February 2nd, but an extension will require a vote. But that just gives you an idea of the time frame we're working with. The vaccinations will begin in the United Kingdom, we hope, before year end. But the tiering system, the restrictions around the economy will exist potentially into spring.
Yeah, but how can restaurants survive that? How can some of the small retailers that count on foot traffic and on people going into offices in city centers, how can they survive if they've hung on until now? This is the question, though, again, about the scarring and the economic damage in the meantime. It's going to take a while before we can go back to some sort of new normal.
Well, this government has put out a fiscal package again to try and help some of these companies, individuals that have been hit by all of this, and I imagine there'll be more pressure to do that once more in the 3-4 months still ahead of us. Lisa, I think the key question for the United States is if we're set to see more restrictions as well around economies like California, when does the pressure really start to build down in the capital again in Washington, D.C., to do something like what they did before to help out, to try and offset and replace the losses of income, to help some of these businesses, in your words, survive? Alongside Lisa Abramowitz this morning. Good morning to you all. I'm Jonathan Ferro. Ignore my tone. This market is a whole lot better than it. It's only Tuesday too. I think we just all want to get through December, don't we? Up 35 on the S&P. Great month of November. We add some weight to it. Up 1% on the S&P 500. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. The OECD has cut its global forecast and warns the economy could get worse. The Paris-based organization now expects 4.2% growth next year. That's down from 5% in September. The OECD says that the economy could slow down even more if governments withdraw support too soon or fail to deliver effective vaccines. Fed Chairman Jerome Powell will warn lawmakers that the U.S. economy is still in a damaged and uncertain state. Powell testifies today before the Senate Banking Committee. In prepared remarks, he said that recent news about vaccines is very positive for the medium term. Still, Powell said a resurgence of the coronavirus is concerning. And Pfizer and partner BioNTech have asked for regulatory clearance for their coronavirus vaccine in Europe. That puts it on track for a potential approval there before the end of the year. A study of almost 44,000 people showed the vaccine prevented 95% of symptomatic coronavirus cases. Global news. 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Never met, obviously, Walt Disney, but if you had a chance to talk to him, what would you want to ask?
Obviously, probably the number one question would be, how am I doing? You know?
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
I would say that not just Citi, but I think the banking industry had a good relationship with her. And if she is elected or she is voted into the seat, I think she'll do a great job, and I would expect that relationship to continue.
Michael Corbett on Janet Yellen, Citigroup CEO, speaking with David Rubenstein. You can watch that entire interview this Friday at 10 a.m. Eastern Time. From London and New York this morning, good morning to you all. Alongside Lisa Abramovitz, I'm Jonathan Ferro. This is how we shape up this Tuesday morning. After a massive month of gains through the month of November, we add to it, up 34 on the S&P 500, 36.57. We advance 0.9%. In the FX market, bit of dollar weakness, euro strength again. Euro dollar approaching 120 through that level yesterday briefly, then came back 119.68, up a third of 1%. And in the bond market, just a little bit of a lift, but it's a mild one. up about 2 basis points to 0.8553%. And the data, Lisa, still ahead of us. ISM a little bit later this morning. Final read of the PMI. I think people will get past that pretty quickly. Get to the ISM. Then we've got that testimony from Chairman Powell and Secretary Mnuchin. Then we've got claims. And then we've got payrolls Friday.
And the key is what could possibly move the needle given the enthusiasm for the world beyond now? What real-time data could actually change the view? And I think it's going to be interesting to hear what we get from the Fed chair as well as Steve Mnuchin trying to toe that line, being confident about the recovery, but also really skeptical of its continuation without fiscal support.
Let's start this conversation right now with Joseph Minerick, the former chief economist of President Bill Clinton, now the conference board chief public policy economist as well. Joseph, we're lucky to have you with us this morning. Thank you, sir. Let's just start with your experience working with Janet Yellen in the Clinton administration. We've had many conversations over the last week or so about how she'll find that transition from the Federal Reserve to a seat in the Treasury. How do you expect her to find that transition?
She'll do outstandingly. She has experience in the White House environment, having been chair of the Council of Economic Advisors, where I saw her firsthand. She was fantastic. She has the perfect blend of real-world experience and experience as an academic economist. So she knows how to bring economic science to bear to public problems in a political environment. It's the best possible combination for President Biden.
Let's build on that, because the experience that many people have with Janet Yellen is former Fed chair Janet Yellen. News conferences, a successful news conference by definition is a dry one where you don't make headlines. And many people might look at that and say, this isn't someone that can negotiate with Congress and get things done. Do you disagree with that?
I do, in the sense that Janet does have experience at the CEA, so she has worked in a political environment. Now, obviously, if you could find a policymaker who had an academic background and had served at the Federal Reserve, an elected official with all of that experience, that might be a little better. Let's be realistic. She'll be working with a president who formerly served in the Senate, a vice president who formerly served in the Senate, and a legislative affairs team, to be sure. So I think she brings the pieces of the puzzle to the table that will be needed to put it together.
Joseph, you could have the best people in the whole world, but if you've got political gridlock and if you have incredible opposition with the numbers behind it, it will be very difficult to get anything done. And looking at where we are in the likelihood of a Republican Senate, does it even matter? How much could Janet Yellen or anyone else as an economic advisor or even a Treasury Secretary do to bolster the economy as per Joe Biden's wishes?
You want to bring the best economics to the table. You're absolutely correct that among the most important people in the economic team between now and January are going to be the voters in Georgia. It will make an enormous difference who has control of the agenda in the Senate. That will be a determining factor. That having been said, the better the case that you can make to the Senate that it is necessary to provide fiscal support for this economy, the more likely that you can pull off 1 or 2 or 3 votes for a package that might be a little bit larger, that will help you out a little bit more. So it's going to be a difficult environment if the president does not control the agenda in the Senate, but obviously, you're going to be fighting for every yard in this game.
When we talk about economic priorities, there's been a lot of discussion about the diverging fates of lower-income households, smaller businesses versus wealthier households, larger businesses. What is the argument longer term of the economic impact if these gaps aren't at least started to be bridged at this point with another round of fiscal support?
Well, you've been hearing the word scarring used very frequently. To the extent that smaller businesses can't keep going and have to fold, to the extent that workers are separated from their jobs, spend time idle and losing their morale, losing their skills, losing their connections to possible alternative jobs. All of those things will tend to slow an ultimate economic recovery. So the better we can hold this economy together today, the stronger we will be tomorrow. And that's going to be, as you've heard from many people, that's going to be the priority of the Biden administration. And that is an important part of the formulation of this team.
Joseph, just quickly, in the short time that we have left, can you talk to me about the debt load that this administration will be inheriting? Monetary policy officials have the luxury of saying, we're going to keep rates low for a long, long time. They can make it state contingent as well. Fiscal policymakers don't have the same accommodations sometimes. How do you think they should handle the message, manage the message in the years to come around America's debt?
The first thing that we need to do is to get the economy moving again. The longer the economic slowdown goes on, the more that burden of debt is going to increase in the near term. In the long term, we have got to get back to sustainability. There won't be an option. We want the economy to grow. If the economy grows, borrowers will be willing to pay more for money. And if they do, interest rates rise. We're going to have an enormous debt, which is going to provide a lot of leverage on raising the cost of government. So it will be necessary to make the case gradually as the economy improves for turning around the nation's finances and doing some innovative things in managing the debt that we are accumulating right now.
Joseph, it's great to catch up, sir. Please come back soon. We'd love to catch up. Joseph Minerick there of the Conference Board. Lisa, this is a huge challenge. It's not just about the economics of this. There's no pressure right now in the Treasury market. It's about how you manage the message for the years to come around this issue.
Yeah, and how you set the priorities in a way that won't necessarily hamper markets, especially given where people's positioning is.
Coming up on this program on the U.S. economy, the risk of a little dip going over the next couple of months. Ethan Harris of Bank of America. That's next. Futures flying. This is Bloomberg.
Retirement is confusing. That's one reason why 42% of people age 18 to 29 have no savings, and partially because of things like student loans and other priorities like just being able to pay rent. But if you do have the means to save it all, here are some ways to get started. First, there's the one everyone thinks about, which is your 401k. This is a savings account that lowers your taxable income because you don't have to pay taxes on the money you contribute. The downside is that when you take that money out, you have to pay taxes based on the income bracket you're in at retirement age. But there's one major benefit to your 401k. Employers often offer contribution matching, which means essentially you're getting free money. Another option is the Roth IRA. With this, you pay taxes now on the money you put in. This gives you a savings account you can withdraw money from at retirement without having to pay taxes on the money you take out. You can only put $6,000 a year into a Roth. This is also a great option because with a traditional 401k, you may have to pay a penalty if you have to cash that money out early, but that's not the case with a Roth. Most financial experts suggest a combination of the two if you're able. To save more and worry less, you can set up automatic transfers into a savings account from your regular bank or credit union. Tools like Betterment can also help you set up automatic payments into a Roth IRA so that investing can be simple and mindless.
It is possible we could have negative growth if this resurgence gets bad enough and mobility falls off enough.
We knew that things were going to slow down after the bounce back in the third quarter, and you're seeing that in the data now.
We're going to be well into 2021 before there's some sort of equilibrium that we achieve.
From New York and London, this is Bloomberg Surveillance, and here's the Tuesday morning price action in the equity market. The ISM comes out at 10 a.m. Eastern, going into that futures nicely positive, up 0.8%, call it 0.9% on the S&P. The Nasdaq up by 0.8%. The outperformance on the month of November was the small caps, and on the session as well this Tuesday, up again by 1.2%. Here's the monthly performance. Touched on this earlier. For all the talk about what's happened in small caps, the cyclicals, elsewhere at the sector level, just look at the benchmark, the S&P 500, still up 11% for the month of November. Killer month, absolute monster month. Where do we get the outperformance over the next 12 months? That's where the debate is right now, and you've heard how consensus it has already become. It's about the cyclicals, the recovery, the rotation. It's not about the index level, it's about active management. S&P just had a massive month. Can we do that again through 2021? Switch up the board, and let's finish on this. I want to finish on the bond market just briefly. 10-year Treasury yield, said a little bit earlier, the average through November, 86 basis points. The yield right now, ding, ding, 86 basis points. The yield curve, well, the giveaway is where the 10-year yield is, because the 2-year hasn't done much at all, because the Federal Reserve's reaction function is so powerful. It doesn't matter how good things get in 21. They're not going to do anything with rates. The 10-year, 2s, 10s, that's spread about 71, 72 basis points. That's spread right now about 71, 72 basis points. Lisa, a really well-behaved bond market, even with all this happy talk about vaccinations, 2021 getting a whole lot better.
I kind of love exasperated John with the year of 2020. I mean, join the club, right? I think everyone's exhausted after this year, and everyone's trying to figure out.
Do you know what I'm really upset about?
What?
Shall I tell you what I'm really upset about?
Please, go ahead.
I'll back away from the camera. I'm getting a lot of feedback and insults about the length of my trousers, or pants, as the Americans would call them.
So?
This is a tapered trouser leg.
Yes.
For the Americans out there. In Europe, what we do is we take the suit and we tailor it, and we take the pant and we taper it. So it cuts down into the leg from the waist. Does that make sense?
Do notice, though, that you are not wearing purple socks today, so it is a little less.
No, these are blue because I took so much criticism in the last 24 hours.
Well, John Farrow...
I just want to say, you know the story. Lisa, come on. How many Americans do you know that buy the suits that are about 3, 4, 5 sizes too big for them, and they never get tailored? You know exactly what I'm talking about.
I know exactly what you're talking about.
Go around Wall Street. I know not many people are wearing suits right now, but when you get a chance, just spend 5-10 minutes just walking around and look how far the suit jacket is off the shoulder and how the bottom of the pant rounds the shoe.
John, you're in rare form today. I love it.
Not
John,
a fan.
No, John, I like the tapered pants. I think that they're great. And anybody who wants to debate that can continue to. And yet we are going to stand by John's style. I will say you've got John Farrow with the shopping channel and you've got Tom Keene with the cooking channel. Let's get to the vaccine channel, the question of some of the approvals that we've been getting today. The latest, Pfizer and BioNTech seeking regulatory approval from European authorities in order to possibly start unrolling some of the vaccine distribution later this year. Sam Fazeli joining us at Bloomberg Intelligence. Sam, does this move the needle at all?
Hi, yes. Can I just say something about the trouser story?
Please, go ahead.
You have to also think about it the other way around. Europeans are getting shortchanged. The clothes are getting smaller and more tapered and shorter, and we're still paying the same or even more for them. So let's hope that doesn't happen with the vaccines. Does it move the needle? Well, obviously, this is something we'd expected. It started the process filing their manufacturing paperwork and every other bit that they could have except for the clinical data before. And the regulators in the US, Europe, UK, everywhere, I think, have been fully engaged together with the companies. So if it hadn't happened, I would have started wondering what's going on.
Sam, the rollout's set to begin maybe before Christmas in the United Kingdom. Still not clear to me where people in the groups that wouldn't be categorised as at risk would actually receive the vaccination, and to what level we'd need to get a nation vaccinated, whether it's 60%, 70%. Sam, in the work that you've been doing, what are we learning about that?
Yeah, so, Jonathan, it all depends on which vaccine you're talking about. If you've got a vaccine like Moderna's and Pfizer's that's hitting at the efficacy level of 95 or so %, then you're potentially going to be able to have to vaccinate fewer people. And unfortunately, as the infections rage everywhere, especially in the United States, you're going to have 10, 15, 20% of the population who've already had the virus. So assuming, therefore, they'll be immune. So I think the expectation should be that you should start seeing vaccinations move the needle in the second quarter.
Sam Fazeli, great to catch up. A serious conversation following a not so serious conversation. Getting a ton of feedback about this, Lisa, about the best wear Geiger suit, whether the Europeans do it better, whether America does it better.
You know what, John?
I'd like to come back to the United States at some point, so I'm not going to insult my friends too much.
Can I just say what it highlights to me?
Please
I think
do.
a lot of people are bored, just as you are, of the market that just seems to go up despite a reality and a scene that seems incredibly predictable despite the unpredictability of 2020.
I find the conversation about the economy far more interesting. Ethan Harris joins us now, Bank of America Securities Head of Global Economic Research. Ethan, great to catch up, sir. Talk to me about the difficulty in the months ahead and how much better you expect it to get in the year after.
Well, before I start there, I should point out that in this world of remote access, I've got a gutter cleaning crew that just arrived at my house, so it could get interesting here in a minute.
We understand, that's fine. You just work through it.
Hey, at least I'm not showing my legs off, though. But anyways, there's some kind of slowdown coming. I mean, we know that people have learned to live with the virus. They figure out ways to get around it and continue to do economic activities. But we're at a almost worse than in the spring in terms of the caseload. The shutdowns we've seen at the local level have been pretty limited, but they're going to be persistent because the number of cases isn't going to go away quickly, given all the holidays coming up and the kind of pandemic fatigue we have out there. So we're looking for growth to slow to about 1% in the first quarter as kind of the last vestige of this COVID crisis. And then from there, the vaccine story kicks in, the fiscal policy story kicks in, and we're much more optimistic.
Ethan, we're looking at the economic data come through worldwide, not just in the United States. We've had some soft jobless claims prints over the last couple of weeks, but worldwide, the PMIs have been terrific, particularly in Asia. You expect that as you come off a low base, their diffusion indices. You've written about this earlier this year. Ethan, my question, though, is how difficult is it to draw a distinction between an inventory rebuild off the back of an unprecedented shock that is happening on a synchronized basis worldwide right now, and a robust early-stage recovery? Can you make that distinction, Ethan?
Yeah, I mean, I think that what we're seeing now is what you'd expect for PMIs to be if you're growing at, say, 5-6%. And that's where we are right now. This isn't a surprise. It's a little bit strange that it took this long for the PMIs to get to this level. I mean, where were they back in the summer when we, second quarter U.S. GDP growth was 33% and the PMIs were like at 55 or something? That's way too low. So there's something a little bit strange about the way they've kind of been lagging behind. But readings in the high 50s are a normal, healthy recovery. I do think they're going to cool off a little bit in the next couple months, just because there's some real slowing going on in Europe, U.S., and much of the northern hemisphere. But I don't view this as an unusual thing to have numbers like this.
Yeah, meanwhile, though, we are getting this incredible divergence between the manufacturing side of the economy and the service side of the economy, which has really led to an increased number of jobless claims. Are you seeing the likelihood increase of a negative print on this Friday's jobs report?
Well, we don't expect a negative print, but I mean, the job market's going to be one of the sectors that slows a lot here in the next few months, because while you can, when you do restrictions and activities, you can certainly continue retail sales, you can have online spending, you can do, you find ways around the restrictions and shop and keep shopping. But what you can't prevent is a very weak holiday hiring season, because brick and mortar is the dominant source of jobs. And so some slowing in the job market's inevitable. We're still seeing, a couple 100,000 gain in payrolls, but we could get to flat numbers by the time we get into the first quarter.
So when people talk about scarring, what numbers do you have to see before you start getting worried about a double-dip recession?
Well, I think that if we drop to the kind of growth numbers we have, and there's no fiscal package, then you worry that you're going to dip into negative territory before the vaccine kicks in. I mean, when you talk to people about the vaccine, it's important to keep in mind is you don't need herd immunity. You don't need everyone immunized to benefit the economy. You need to have vulnerable populations immunized to the point where everyone feels comfortable that they're taking low risk, that this is something you can live with, and so there's an increased engagement that comes with vaccinating vulnerable people and essential workers. You don't need to wait for the herd immunity to help the economy. But yeah, I mean, we're gonna have a bit of a dead spot here, as we go into the first quarter, and the economy does need fiscal stimulus. I mean, local governments need help. The small business need help. Unemployed need help. As the benefits keep diminishing. So. It's very important they get a deal done. We do think they will. We think that's probably the only serious legislation we get in the next 2 years will be a stimulus package out of the gate, because I think we really need it. If we get split government, it's going to be solid gridlock once we get past this initial kind of emergency funding situation. Unless Democrats somehow manage to pull the Georgia, we're going to have rock solid gridlock, I think.
Ethan, great to catch up, sir. Always appreciate your insight. Good fun as always. Ethan Harris there of Bank of America Securities. Lisa, it's intuitive. It's very obvious in many ways. But can you imagine 2 years of basically nothing on the policy front, apart from what might happen in the next couple of months?
Downside surprise, right there.
Coming up on this program, Jody Guest of Emory University from London and New York this morning. Good morning to you all. Up 9/10, call it 1% on the S&P. This is Bloomberg.
With the First Word News, I'm Ritika Gupta. Joe Biden is setting up his first confirmation fight by naming Neera Tanden to be his budget chief. Tanden's nomination drew swift objections from Republican senators who will vote on her. Texas Senator John Cornyn called her selection radioactive. Tanden is a longtime Democratic operative who has frequently criticized Republicans on Twitter. Senate Majority Leader Mitch McConnell has set up a vote to advance the nomination of Christopher Waller to the Federal Reserve Board. Waller is research director at the St. Louis Fed, but McConnell has taken no action to open Judy Shelton's path to the Fed. That dims the chances for the controversial nominee. Her confirmation was blocked before the Thanksgiving break. ExxonMobil is about to face the biggest write-down in its modern history. Exxon says it will write down the value of North and South American natural gas fields by $17 to $20 billion. Meanwhile, the company will drastically reduce capital spending through 2025. Exxon has been hammered by the collapse in oil prices, a global supply glut, and the pandemic-driven crash in fuel sales. And Airbnb is hoping to cap the biggest year ever for IPOs in the US. The home rental platform filed today to go public. Airbnb is seeking to raise as much as $2.6 billion. Shares will be marketed at $44 to $50 each. At the top end of the range, that would give Airbnb a market value of roughly $35 billion. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need is surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
We are working very closely in the US with Operation Warp Speed, General Perna, who is working to make sure that within 24 hours after approval, products will be out the door and that vaccination can start so we can help protect as many Americans as we can. We have said that we are still on track to deliver up to 20 million doses in the US before the end of the year.
Just unbelievable, the pace of progress. Stefan Bancel there, the Moderna CEO, and an unbelievable month of November in this market to follow up that progress in the world of science. From New York and London this morning, good morning. Alongside Lisa Bravitz, I'm Jonathan Ferro. Coming up a little bit later on Bloomberg TV, I'm so happy to see this man right here, Krishnamurthy, back in a seat. He's now at Lafayette College. He's the CIO of the endowment, and looking forward to catching up with him a little bit later this morning.
Nice. I can't wait to hear what he has to say from his new position, managing money from there. John, I'm going to let you go and field all of the comments about your tapered pants, which I am sure are flooding in.
Mixed comments.
Yeah.
Very mixed comments, obviously.
Well,
with the transatlantic divide.
You like to be provocative. Anyway, I will be listening to those comments not only about your suit, but also about the bond market and what Krishnamurthy is doing. Right now, let's turn to the issue at hand, which is still the pandemic. It is still 2020. And the question is, how quickly can we unroll or roll out these vaccinations in order to stop the pandemic and fulfill some of the hopium that we continue to see in markets? Joining us now, Dr. Jody Guest, Emory University Rollins School of Public Health, Department of Epidemiology Vice Chair and Research Professor. Dr. Guest, let's just start with what the road looks like ahead to get a critical mass of people vaccinated.
Good morning. Well, we certainly need a big uptake in the vaccine, which means we really need a lot of trust that the science has been great behind it and that this is a safe and effective vaccine that we want to make sure we get to everyone across the globe.
All right, so the reason why I ask this is because a lot of people are saying, well, we've got a vaccine, so you can fast forward to a better time ahead and price that in. But there is a question of how long it will take and how bad the pandemic could get before then. Can you talk about that process? In other words, that we're heading into the winter season, people are getting complacent, we're seeing virus numbers go to record highs, and we still are a ways away to that critical mass.
Absolutely. So we've got a light at the end of our tunnel, but we are not there yet. And so we need everyone to continue to do what we've been asking, which is stay socially distanced, wear their masks, keep their gathering small, which is hard. We have a lot of pandemic fatigue at this point in time, but we are close. But we must continue to do all of those incredibly important prevention measures to keep our numbers down. As you said, they are skyrocketing across the United States and across the world at numbers that we've not even seen up until now.
So who should get a vaccine first? I mean, yes, we're going to have older individuals and perhaps nursing homes and healthcare professionals. Who next?
I think we're going to see a lot of frontline workers be offered the vaccine next. Today, actually, the CDC is meeting and having a panel to discuss what the priorities will be and how those vaccines will be rolled out. Once you have a vaccine that has FDA approval, you have to go into a vaccination process. A vaccine by itself doesn't work until we get it to people. And so that decision will start today to really put together a robust plan of how the vaccines get rolled out.
What do you think is the most effective public relations effort to get people to have confidence in the vaccine, to go seek them out? Because that has been one of the biggest concerns.
Absolutely. So I do believe that the fact that the FDA, which is going to start reviewing their data from Pfizer and Moderna coming up, they will be doing those data reviews online and anyone could watch them. I think that is an incredibly important offer for us to be able to all watch that. Additionally, the CDC review today about who's going to get the vaccine and the order in which they will get it will also be available for anyone to watch. And that transparency is really important because these vaccines have been studied very quickly, but it does not mean the science has been too quick. And we want to make sure that everyone gets a chance to see that.
Dr. Guest, I want to talk a little bit about morale among nurses, among doctors. I've read a number of stories and heard from people that it's exhausting. It's emotionally draining. It's traumatic. They went through the first wave. I know in New York City, it was really traumatic for them. And now they're seeing numbers creep up again. And we're seeing that across the nation. How does that factor into what we are seeing now, the structure of our healthcare system, and how stretched it's getting?
Well, I think as we think of supply chain that we've talked about a lot with COVID-19, where we were concerned about having enough gloves and masks and hospital beds, one of the things we've not spent enough time talking about is enough employees, enough clinicians to care for all of these patients. People are working so many days in a row without days off, and that's exhausting. And when you see incredibly high death rates, that takes an emotional toll that we can't under-describe. We need to make sure we're caring for them. And a lot of clinicians I've talked to are stressed about the number of patients that they're caring for, but also the lack of attention to the prevention messages that we are consistently putting out there. And so it really is an honor to all of the people who've been working so diligently to care for those who are sick. We need to make sure we continue to wear our masks.
I ask everybody this just because I have a diligence to my children at home who ask every day, when is this going to be over? When is this going to be over, Dr. Guest?
Well, I wish I knew that. I wish I had a magic ball that would tell us that. What I can say is we are getting one of the best modalities to help us with this, with the vaccines coming up. But it does not mean that we will be without our masks the minute people start getting vaccinated. We still have a lot of work to do, and we need to reach a certain threshold of folks who have been vaccinated before we are going to want to change those additional messages of social distancing, masking, and hand washing.
Thank you so much.
But it is coming.
Good. I hope so. From your lips to all of our ears, Dr. Jody Guest of Emory University, we really appreciate you being with us. Certainly people are looking ahead to that better time right now in markets. You're looking at an S&P that is positioned to open the first day of December up about 1%, following more than 10% gains for the month of November. Meanwhile, we are seeing 10-year yields creep just a little bit higher above the average for the past month, as John was talking about, to 87 basis points. The question is why the yields have been so well behaved, given all of the hope for a brighter time. The euro just creeping back up to that 120 mark, up about 0.5%. And the VIX index coming down, people looking forward to a lack of volatility as we have a low yield environment, a Fed that is meeting on December 15th and 16th. And we are going to look for more stimulus at a time of improving economic outlooks. Coming up on Bloomberg Television and on Bloomberg Radio, Roger Altman, Evercore senior chairman and founder, talking about the M&A situation, about alternative investments, about banking, and everything else that's going on in this transformative year on Wall Street. Keep with us on 9 o'clock, Bloomberg The Open with Jonathan Farrow. I'm Lisa Abramowitz, and this is Bloomberg.
हमारा सर्वाइवल सिर्फ और सिर्फ इस इलाके में ड्रिप इरिगेशन सिस्टम की वजह से है और इससे हमारा मुस्तकबिल भी और इससे हम फ़ायदा भी ले रहे हैं।
तकरीबन 20,000 स्क्वायर किलोमीटर लैंड जो है वो अबंडेंट पड़ी है, जिस पे कुछ भी एग्रीकल्चर टेक्निकल तरीके से नहीं हो रही।
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
From New York and London, for our audience worldwide, good morning, good morning. The countdown to the open starts right now. 30 minutes away from the opening bell, we add some weight to the rally through November. Up 36 on the S&P, we advance 1%, and we begin with the big issue, counting down to the main event on Capitol Hill. Treasury Secretary Stephen Mnuchin and Fed Chair Jay Powell testifying before the Senate Banking Committee at 10 a.m. Eastern. Chairman Powell planning to warn Congress about the delicate state of the economy, writing in prepared testimony the following. Recent news on the vaccine front is very positive for the medium term. For now, significant challenges and uncertainties remain, including timing, production, distribution, and efficacy across different groups. Vice President Mike Pence moving to ease some of those concerns, indicating the vaccines could be distributed before year's end, telling state governors in a conference call, quote, "We strongly believe the vaccine distribution process could begin the week of December 14th. The American people deserve to know the cavalry is on the way." But the Americans are still waiting for the fiscal cavalry to arrive, still without another stimulus package, despite the increasing calls from both sides of the aisle.
Some major parts of the historic CARES Act have already run dry. Many others are set to expire at year's end. We need a second round of the job-saving Paycheck Protection Program for the workers at the hardest hit establishments.
As the pandemic increases in severity, so does the economic pain felt by countless working families and small business owners. So first and foremost, on the Senate's to-do list is COVID relief. Both sides should come together and negotiate a COVID relief bill in a bipartisan way that meets the needs of our businesses, our schools, our healthcare systems, our workers, our families.
And as Americans continue waiting for economic support, the pandemic continues, forcing some of the country's biggest states to warn about even tighter restrictions.
I hope people understand the magnitude of this moment, and that's why we are making this point very loudly today. If these trends continue, we're going to have to take much more dramatic, arguably drastic action.
All of which is putting the focus squarely on Capitol Hill today, with the spotlight on Fed Chair Jay Powell and Treasury Secretary Stephen Mnuchin. Joining us now, the Bloomberg team, Michael McKee and Kevin Cirilli. Mike, let's start right there. 58 minutes away. What are you looking for?
Well, it's a classic case of glass half empty, glass half full. Jay Powell's going to be the glass half empty guy, and it looks like Stephen Mnuchin's going to be the glass half full guy, while Wall Street sits on the sideline yelling, "Let's you and him fight." Everybody wants to know what they're going to say about the Treasury's decision to cancel Fed lending programs ahead. Things may get better soon, according to the testimony that we have from the Fed chairman. Jay Powell's prepared text, making it clear, though, that the decision to end the lending programs was Mnuchin's, not the Fed's. Things may get better soon, but for now, there's still a lot of uncertainty, even with a vaccine on the horizon. The virus is still in charge. Those are the lending programs that the Treasury Department is ending. Powell goes on to say in his text that the rise in new COVID-19 cases, both here and abroad, is concerning, could prove challenging for the next few months. A full economic recovery is unlikely until people are confident it is safe to re-engage in a broad range of activities. Of course, Powell's going to go on to say that the Fed will do whatever it takes to keep the economy going, although he doesn't say in his testimony anything about what the Fed might do, if anything, at their next meeting on December 16th. Now, this is a Republican hearing. It's in the Senate. Republicans control the Senate. So they'll probably be a little more sympathetic to the Mnuchin testimony than to the Powell testimony. But it's important to remember, Stephen Mnuchin is losing his job. Jay Powell isn't. So anything Powell says about the future is something to pay attention to.
Mike, we'll touch base with you a little bit later in the hour. Kevin, I want to bring you into the conversation. As Mike points out, I think a lot of people are looking for some daylight tension maybe between Mnuchin and Powell. They likely won't get it. These two individuals have worked so well together over the last several months. I can't imagine them having some kind of fight publicly in front of the Senate Banking Committee over these issues. Where there could be daylight is between Chairman Powell and the senators over what to do next on fiscal aid, Kevin.
Yes, and in fact, the dynamic in the policy debate that is happening between Secretary Mnuchin as well as Chairman Powell is really largely a foreshadowing of the debate that's going to happen between likely Treasury Secretary Janet Yellen as well as the Republican-controlled Senate Banking Committee. Let's pull up a quote that we have from Secretary Mnuchin's prepared text because I think it does a good job of illustrating this entire debate. I strongly encourage Congress to use the $455 billion in unused funds from the CARES Act to pass an additional bill with bipartisan support. That right there, Jonathan, is what Senator Pat Toomey, likely going to be chairman of the Banking Committee, that is what he is going to say when there is a fiscal stimulus debate. And it's in a Biden administration. This is a remarkable foreshadowing of what is to come in February and March of next year.
Another fight over more fiscal aid. Kevin, great to catch up. Krishna Mamani of Lafayette College hoping the testimony can lead to another stimulus deal. He writes the following. On the one hand, Mnuchin is going to be asked about pulling back the funds, and I'm sure he will use it to score some political points. On the other hand, he could take the high road and urge Congress to come back with a stimulus package and do it soon. Krishna, I'm pleased to say, joins us now for more. And Krishna, first of all, congratulations on getting in a new seat. It's great to have you back, sir. I'll move on to the first question quickly, but I wanted to get that in first. Krishna, talk to me about what you're expecting on the fiscal front. You told me many years ago, and it was a lesson that I really struggled to deal with in financial markets, that good policy offsets bad economics. And we become wedded to the bad economics, and it's difficult to look past it. But as you always point out, good policy is the story behind financial markets and market performance. Do you see good policy on the horizon?
Well, so if you take a step back, we probably saw the best set of policies 6 months ago. So, kind of looking at one small political fight to come to the conclusion that we won't get really good policy down the road, I think it may be slightly premature. So what Mnuchin actually may be doing everyone a favor by providing $500 billion worth of funds that were not available, not being considered. Maybe he narrows the spread between the Republicans and the Democrats. And so the likelihood may actually of a fiscal policy probably goes up. The funny thing in all of this is, these types of policy differences happen all the time. The difference this time around is in the Trump era, it has to happen in public rather than behind closed doors. So that's kind of a bit of a tragedy after a fantastic coordination in March. But we'll go beyond that, and we will see a stimulus because everyone agrees that one is needed. And I think having crossed the Rubicon with $1 trillion here, $1 trillion there, I don't think Congress is stopping.
Krishna, let's get to 2021. We can skip past December. It's what people love to do. We'll get to the year ahead. In the bond market, incredible stability in 10-year treasuries, 86, 87 basis points, the average through November. That's the number on the screen this morning, 0.8766. A little bit of a lift in the last 20 minutes or so. Krishna, you're the first person that I've spoken to in a while that has suggested that we could get the kind of consensus growth people are looking for, an uptick, cyclical appetite, risk appetite returns, but the bond market won't do a lot. Better growth, you won't get higher yields. Krishna, why?
Well, so it's very simple in my mind. That is, what the current stimulus and the current growth rate is really, it's making up for lost growth in 2020. So even if you look at in fiscal terms, and monetary policy doesn't really accelerate growth, it basically stabilizes things from getting far worse. So on the fiscal front, all the things that we have done really have been income replacements more than anything else. So we haven't really spent any money in infrastructure or changing the productivity outlook. So if you look beyond 2021 into 2022, my expectation is once we reached or once we get close to where we were beginning of 2020, the growth outlook is probably going to deteriorate and deteriorate sharply. I mean, we won't go to negative or minus 10 or 15%, but we are not getting significantly higher than 2%. So in that sort of an environment, the way I look at the virus was it got us to where we were going even before the virus. That is, rates were going to go to sub 1%. That was my forecast in January of 2020, and I think we just got there in a hurry. So, so
Krishna, I've got to jump in because this is so important. A little bit later this hour, I'll be talking to people who will walk us through a regime shift. And when we talk about the back to normal story, back to normal for you is back to exactly where we were before. Trend growth doing this, lower, and not escaping that story at all. So, Krishna, if that's true, if sub 1% is a story we need to get used to in the Treasury market, talk to me about the implications for the capital allocation decisions that you need to make.
Well, so and that is precisely why the equity markets will do well. So I think from a capital allocation standpoint, I think unless the productivity outlook changes meaningfully, unless the growth outlook changes meaningfully, the likelihood that companies will get into a huge capital expenditure mode in 2020, late 2021 or 2022, I just don't think it's on the cards. So the growth outlook will remain the same. The inflation outlook will remain the same. The employment outlook will probably deteriorate. Rates don't go anywhere. In that case, the only game in town, it's Tina. It's kind of repeating the same thing over and over again. But equities is the only capital or asset allocation tool that you have for you to meet your liabilities.
Where in the equity market, though, Krishna? Because that's where the debate is at the moment.
Sure, and I think that is actually, and if there is a regime shift, it's probably in that more than anything else. So if you think about it, the revival of growth and the long-term, and the difference between the long-term outlook of developed markets and emerging markets in 2021 will get sharper. Layer over on top of that, the outlook for the dollar, which kind of is given the fiscal spending that we have without really changing our growth outlook, the dollar is in a softening downward trend. Combine that, I think international and especially emerging market equities is where those allocations are going to be, or at least that's where I would be allocating my money in for 2021 and beyond.
Krishna, it's wonderful to catch up with you and great to see you back in a seat, and I hope we catch up before year end. The wonderful Krishna Mamani there, formerly of Invesco and now of Lafayette College. In this market at the moment, we advanced on the S&P 500 at about 1% to the S&P. Little lift in yields over the last couple of minutes, last 30 minutes or so. Let's get to the market desk and get you your movers. Here's Abigail.
John, let's start out with the big one on the morning, and certainly a piece of the optimism that traders and investors are showing with the futures popping sharply higher. That is Tesla. The stock is up about 5% in the pre-market, now up 8 out of the last 10 days. This, of course, on the news that the S&P 500, that the S&P Dow Jones indices has decided to add the company in one shot instead of breaking it into 2 tranches. This, of course, because it has a huge market cap, nearly $540 billion, by far the largest addition ever. This stock now up more than 40% since it was first added. The cyclical trade is in full charge as a result, John, also as we have more optimism around the vaccine.
Tesla gets a lift off being added to the S&P, and then it gets another lift off the way it's being added to the S&P. Tesla just getting a lift through 2020, it seems, all the way through. Coming up on this programme, from the pandemic to the vaccines, trying to just turning the page on 2020 before we even get to year-end, forecasting a big year ahead. That conversation up next with Alpha Omega's Peter Cecchini. From London and New York this morning, good morning. The opening bell 17 minutes away. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market, it's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Valuations, particularly, sort of technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
We might see the economy actually really start to benefit from policy, from stimulus, from this changing of the guard, but the markets might not be able to do much because so much is already priced in. And we're still not talking about the possibility of higher taxes, which I think is something that we really have to start, being at least mildly concerned about.
The pandemic fueling a massive disconnect between markets that keep marching higher and a virus-plagued economy, a dynamic that could end up reversing next year, according to Academy's Peter Cheer. Wall Street now looking to the vaccine and publishing their outlooks for the year ahead. Bank of America recommending investors sell the vaccine. They write the following. We say sell into strength on vaccine in coming months. Credit and equity prices to peak on peak positioning, peak policy, peak profits as optimism tops ahead of vaccine distribution. But by the reopening and the recovery in 2021. For more on that, let's bring in Bloomberg's Kayleigh Lyons. Good morning, Kayleigh.
Good morning, John. Well, that by the reopening call really is just a rotation call coming from Bank of America. The strategists there seeing really a continuation of the trend we just witnessed in the month of November in 2021. They see small caps outperforming large, value outperforming growth. They also expect commodities to top credit, and within credit, high yield to perform better than investment grade. Now, B of A is warning that rotation could be disorderly, maybe some moments of doubt, but they say to use those moments as opportunities. And really that call for a rotation for the cheaper areas of the market to outperform is echoed across the street. Jefferies chief global equity strategist Sean Darby just turning bullish on the financials for 2021, citing that sentiment shift toward value. And both JP Morgan and Morgan Stanley are calling for that value rotation, not just to extend from sectors here in the U.S., but also to global equities. They say that Europe should get a bid in 2021 due to that shift towards value, where at BlackRock they are saying small caps will outperform large caps. The question, John, is how far does that rotation actually run? Because it certainly has ample room to do so. If we can hop into the terminal at GTV Go and take a look at value's relative strength to growth. We are coming just off of record low relative strength. Yes, the month of November did make a difference. You saw a slight tick up when it comes to that chart that I think we're getting ready to show you right now. But basically the point of the story, John, is value has a long, long game of catch up ahead, John.
So consensus right now into 2021. It's value over growth. It's cyclicals over defensives. Kaylee, thank you, by the way. It's small over large. It's international over the United States. Yields are going to be higher, not too high. They'll stop around 150. We don't want to disrupt that rally, do we? Nothing could disrupt that rally. That's the story around markets. I know it sounds like I'm complaining. I hope it's great for everybody. I truly do. Just become very consensus at the moment, looking a year out. Alpha Omega's Peter Cicchini remaining cautious following a record month for global equities. He writes the following. The recent rally in the small caps only reinforces my view that the equity market is being driven by qualitative narratives and emotion rather than quantitative rationale or by logic. All in all, the rally is about as overdone as I've ever seen. Peter joins us now for more. Peter, fantastic to catch up, sir. And good for you in your latest note. A bit of a mea culpa at the top. But let me run through the year for you from my standpoint. Start of the year, pretty bearish compared to the street. Weren't comfortable with the record highs we had going into the pandemic. Coming out of the pandemic, became much more constructive before most. Then June happened, Peter, and that's when you sat out the move and the run-up from June into what we've just had, a massive month in November. Peter, walk me through your thinking now, the lessons learned through 2020.
Yeah, thanks, Jonathan. And by the way, I'm a huge fan of your fashion sense, and I do.
Thank you, sir.
I like a shoulder.
I appreciate the support. I need it.
Yeah. You know, the tapered trousers work for me. Look, you know, it's interesting when you're on the wrong side of a trade. You know, you have to look deeply into why that might have been the case. And I think one of the things really that's sort of absent from the narrative right now, Jonathan, is valuation. And Peter Scheer alluded to it, and he alluded to the higher taxes that must eventually come from gigantic deficits. But the conversation about valuation rarely, if ever, enters the narrative, especially if you look at some of the narratives that are going on social media. And frankly, I think retail really is in charge. And one of the reasons why I sort of reversed my tactical stance into the end of the year is because I think there's going to be an institutional chase of retail flows into the end of the year. And markets could very well go higher with window dressing and with those flows into the end of the year. But at the end of the day, when we look at valuations and we look at the trend of earnings before the pandemic even began, earnings were trending lower, especially for cyclicals and small caps. The growth was not gangbusters. We had a yield curve inversion, which is one of the reasons why I was not constructive on 2020 coming into the year. And even for the S&P 500, earnings were flat. And so I think the assumption here for most investors who remain bullish is that we're resuming some sort of a trend that was already in place pre-pandemic. And I just simply don't see it that way. And investing should be about what you get in terms of future cash flows for a price you pay today. And from my perspective, the risk reward there is not very good at all.
Peter, I think a lot of people agree with you. It's just been really uncomfortable to sit it out, given the rally that we've seen. You said a couple of things there. I want to unpack one of them. Retail in the driving seat. What is it about the price action, the flows, that speak to you and screams the message, the argument that retail's in a driving seat right now, Pete?
Well, you know, the flow data that I have available from various banks bears it out. I think when you look at retail option call activity, for example, that also speaks to what's going on in the retail space. When you look at skew, even on the indices, you see that single name call buying has actually helped to keep volatility on the VIX elevated, for example. And that to me indicates more than anything else, frankly, speculative activity that investors or market participants are renting rather than wanting to own the market at these levels.
Pete Cicchini, we've got to leave it there. Always looking sharp, Pete, and love catching up with you, sir. Appreciate the support. I support you, you support me on what the fashion trend should be like on Wall Street, for anyone that cares. Coming up next, the analyst action you need to know. That'll be next in our morning calls. Then later, turning the page on a record-setting November, forecasting the year ahead with Morgan Stanley's Lisa Shallett. That conversation just around the corner. Should we get you some price action? The month of November wasn't about the S&P. It was about the small caps up 20%. The S&P was still up 10, 11 percentage points. Just an unbelievable rally in the equity market broadly in the United States and all around the world as well. This morning, we had some weight to that rally. The S&P up 32. We advanced 0.9% for our audience worldwide. The cash open just around the corner in New York. This is Bloomberg.
The pandemic swells the gap between the rich and poor around the world. There may be no starker case of inequality than Venezuela, where the socialist leader Nicolás Maduro has kept his hold on power by fostering a Darwinian dollarization under quarantine. The nation's mighty oil industry has collapsed. Water, electricity, and gasoline are barely available, and hunger hunts vast portions of the population. 4 out of 5 Venezuelans can't afford a basic food basket last year, according to a research by the main universities. Meanwhile, Caracas neighborhoods have a dozen new delivery services bringing to their doors everything from truffle salmon poke bowls to electronic cigarettes and $50 gluten-free birthday cakes.
Me indigna a forma que esses governantes dirigem esse país pensando só naqueles que já têm muito e já têm demais. E é mais uma vez por isso que a gente optou por ocupar esses espaços, para que a gente lá de dentro possa exercer a mesma pressão que a gente já exerce na rua, de fora para dentro. A gente quer abalar essa estrutura.
Eu tenho muita esperança, tenho muita fé em Deus que aqui a gente ainda vamos conseguir a nossa moradia digna, a nossa casinha para, ao menos nos últimos dias de vida, se vender numa casa.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Leaving behind a monster month of November and adding some weight to it. The S&P 500 up 0.9%, the Nasdaq up 8%, the Russell up 1.3%, the Russell up more than 18% in November, best month ever, the Nasdaq up 11%, best month since August, the S&P still up about 10.75%, the best month since April. Hello December, switch out the board in the bond market, your 10-year yield breaking out a little bit this morning. Yields up 5 basis points now to 0.8881%. The average through the month of November, 0.86%. We start to get a lift in the last hour. A test of that lift. The PMI, then the ISM, then claims Thursday, then payrolls Friday. In the FX market, the euro making another move for 120, 119.82, up about 0.5%. Stronger euro in the mix. In the commodity market, weaker crude, OPEC plus just stepping away. Having more talks about talks. $45 on WTI, down 0.8%. That's the cross-asset story this Tuesday morning. Good morning to you all. At the market desk with your movers, here's Abigail.
John, well, with that truly risk-on tone, let's take a look at one of the sources of the bullish optimism, and that, of course, the vaccine news that we have out of the likes of Moderna, Novavax, and Pfizer. Really new old news, if you will. Moderna yesterday, of course, announcing that's filing with the FDA and the EU. Novavax today getting a little bit of a break as the UK study is fully enrolled, bouncing back from yesterday's decline. And then Pfizer and their partner BioNTech are seeking EU clearance for their vaccine. So these stocks are up in a big way. And unlike yesterday, where we did have Moderna soaring on their news around the FDA and the EU, today we have the cyclical trade back in action. We have American Airlines and Carnival Cruise Lines both higher. So folks perhaps going to trade again, traders focused on that. And then, of course, energy, yesterday's worst sector, down more than 5%, the worst day since June. Today, popping back higher. ExxonMobil is higher. And the bank's getting a bid, too. You were just showing those yields backing up. The yield curve is steepening, too. So we have J.P. Morgan up 2%. But the big stock, John, and another big source of optimism, that, of course, is Tesla. The stock is trading higher on the news that it will be added in one chunk to the S&P 500. It's interesting, John. This stock now up about 600%, more than 600% on the year. One question will be what happens on December 21st, after December 21st, after all of this manic buying into being added to the S&P 500. Will that be a sell the news event? But today, all the buyers are out.
How disruptive will it be? Abigail, thank you. 2 minutes into the session, as Abigail points out, energy on top, up 2.64% in the early part of trading. For the month of November, we trimmed some of the gains in yesterday's session, but what a month still. Up by 26.57%. Massive month of gain for the energy sector on the S&P 500. Every single sector in positive territory. It's been quite a rally on the S&P 500, not just through November, but also into this morning's session as well. As Abigail pointed out, the financials very much on top this morning with a gain of 1.74% off the back of a move on Treasury yields in the last hour or so, up about 5 basis points on a 10-year. That's the story of the market. What a month it's been. UBS's Stuart Kaiser expecting the cyclical rotation to continue leading international markets even higher.
I don't think we're completely over our skis long, some of these cyclical rotation trades yet. It's going to take a little more time to unwind, than a lot of people hope for. And, just 1 month isn't going to do it. So I do think the positioning has moved in that direction, but our view is that it's not, not done yet, and I don't think people are fully invested in it yet.
Let's bring in Bloomberg's Kelly Lyons back in for more. Hey, Kaylee.
Hey, John. Well, this phrase has definitely been overused in the past week, but I'm going to say it for one final time, and that is a November to remember. A record-breaking month for global equity superlatives really everywhere you look. Just to run you through the numbers, the superlatives for different regions across the world, the Stock 600 over in Europe had its best month ever in November. UK equities, their best month since all the way back in 1989 for the DAX in Germany, as well as Asia-Pacific stocks, the best month since 2009, and the MSCI Emerging Markets Index with its 9% gain saw its best month since March of 2016. Now, the MSCI All World Index, which I just mentioned had a record-setting month, is now at a right around record highs. But what's interesting about that, John, if we can pull it up on a chart, a large part of that does have to do with the U.S. When you remove the U.S. from the equation, which is the white line we're looking at here, it's not as stellar a performance. That ex-U.S. index is only sitting at its highest since back in 2018. Now, within the U.S., we know it was the cyclical, cheaper areas of the market that led the charge in November, as you just mentioned. Energy, financials, industrials, the top performers within the S&P 500, and small caps really notable as well. The Russell 2000 logging its best month on record, and a lot of strategists think that will continue into 2021. My question is, where does that arrow point across the Atlantic? It may actually point to UK equities. If we can hop into the terminal at GTV Go and take a look at the forward PE ratio of UK stocks relative to those stocks in Asia, Europe, and the US, you can see how cheap they look at this point, John.
Kelly Lyons, thank you. I heard a lot of calls coming through for Europe, but also for the UK as well in the last couple of months. All morning I've been talking about how boring some of the calls have become. It's become so consensus. Sometimes boring's great if you're right, if you're early, and you were the first to come up with what many people are now calling the consensus view. For many people, that was Morgan Stanley earlier this year. Morgan Stanley's Lisa Shallett still expecting the V-shaped recovery to continue, fueling the rotation into value, writing the following. US growth stocks, mega caps, tech stocks and passive indexes are likely to lag as economic growth broadens out and changes shape. Value stocks, small caps, mid caps, international equities and active stock picking are more likely to benefit. Lisa joins us now over the phone. Lisa, it's called consensus now, but when you made this call originally, it really wasn't. Walk me through how your thinking has evolved, though, as we enter a new year just a month away.
Good morning, John. I think that what has come to pass is largely a confirmation in some of the data on the manufacturing side and in terms of consumer durables, durable goods orders, and obviously the strength of the housing market. I think those are pieces that have been upside surprises to our call from when we originally made it. We've also seen, very good follow through in global trade markets, centralized around China, which is doing, significantly better, I think, than we had originally thought. And they, kind of came out from underneath the weight of COVID-19 somewhat faster than perhaps originally forecast. But I think from here, we've gotten a lot of good news. As you talked about, the results in November, we've made it through the uncertainty, huge uncertainty around U.S. presidential elections, which now finally seems to be resolving. And the market, I think, likes that and likes the likely divided government outlook. there. I think the news on vaccines has been fantastic. And so, I think from here, the question really becomes, reopening and getting the last leg of this V-shaped recovery and getting the timing right. And right now, markets seem to be highly anticipatory. And as we know, when Wall Street gets too far out in front of Main Street, we could be setting ourselves up. So, we're trying to temper enthusiasm here with our clients. We're trying to tell them, look, if you're willing to look, 6, 9, 12, 18 months out, certainly the direction from here is up. But, let's be smart. Let's not, pile in and chase, after the kind of month of November that we had and the pile of positive catalysts that we've seen. Because goodness knows we're probably going to have to consolidate a little bit in the interim.
Lisa, when it was just you and very few others making this call, you were comfortable making this call. Now it's become consensus. I can feel you getting just a little bit uncomfortable with how quickly this market has moved. So let's talk about that. If I came to you, I was a client, and said, Lisa, I'm with you. A lot of people have piled into this trade. I followed you at the start of the year through spring. It's worked out fantastically. I'm nervous about things over the next 3 months. Where should I trim? What do you say to them, Lisa?
So, look, I don't know that we'd be saying, trim so much as, whatever cash you have left sitting on the sidelines, let's look, more creatively, not at the obvious suspects, not at in things like emerging markets. To your point, you mentioned, some of the value plays that still exist in Europe, and you've got the tailwind of the currency there. UK is very interesting. It's been, among the most beat up stories in the past year. And then there's, of course, Japan, which, I think has been stealth, and has, been making some new highs here, below the headlines. And that would be something that we're encouraging people, to look at anew.
Biggest monthly gain, I think, since the mid-90s on the Nikkei. Lisa, great to catch up. Let's catch up before the year is out. I'd love to speak more about the year ahead with you. A big call on the bond market in the mix there in your outlook too. That was Lisa Shallett at Morgan Stanley. Coming up on this programme, the main event on Capitol Hill. Coming up at the top of the hour, Fed Chair Jay Powell, Secretary Stephen Mnuchin testifying before Congress with another big week of economic data on tap. That conversation up next with Vanguard's Ann Mateus. That's next on Bloomberg.
Never met, obviously, Walt Disney, but if you had a chance to talk to him, what would you want to ask?
Obviously, probably the number one question would be, how am I doing?
So the reason we're interested in Post Office Rock is just the extreme nature of the erosion that is ongoing here. In the last, since 1940, it's eroded about 100 metres and in quite a unique fashion. By having a map of the seafloor and hopefully being able to capture some movement in these transverse dunes, we'll be able to see after the erosion where the sand is going and why it is not replenishing the coast, as sometimes and most often happens.
with continued sea level rise and future climate change, we're just going to see much more of this kind of event taking place. So it's a good proxy of what we expect to take place much more commonly by 2050, 2100 than is currently the case.
The economy is slowing. In fact, the labor market may be going into reverse already. And we no longer have the targeted emergency packages, facilities. We are likely to see higher household economic insecurity. That's the scarring that economists talk about.
That is the scarring economists talk about. Some of the concerns going into 21 from Mohamed Al-Arian, raising concerns about the trajectory of the recovery, with investors bracing for another big week of economic data capped off by the US payrolls report. As we wait for a final read of the PMI, at the top of the hour we also get the ISM manufacturing. Let's bring in Bloomberg's Michael McKee for a little bit more. Hey, Mike.
Good morning, John. The manufacturing sector has been the one success story around the world as economies have come out of the post-COVID recession. Manufacturing has managed to expand pretty much everywhere, while services still remain a drag on the global economy. Now, we're just a few seconds away from a couple of different bits of information on that. First, from market, they report on U.S. manufacturing. Then, as you mentioned, the ISM, they have a much longer track record, so people tend to pay more attention to it in the United States. But in terms of market, the forecast was for 56.7, and it comes in bang on that number. So no change at all over the month on the market manufacturing index. Does suggest that at this point, manufacturing hanging in there. We'll get, of course, the read at the top of the hour on ISM. And then we listen in to Jay Powell and Stephen Mnuchin. They will air their disagreements over ending the Fed lending programs. Everybody kind of knows where we are with that. So really, John, what Wall Street's going to be watching today is the Fed's effect on the markets, whether or not Powell gives any indication of what the Fed might do in terms of its December 16th meeting. Will they term out? Will they extend the maturities that they're buying for their QE program? Would it make much difference? Doesn't look like it at this point. You got 10-year yields about 85 basis points, and spreads have narrowed. They haven't gotten any wider. They've actually come in. So there isn't necessarily an economic case, but there is a Wall Street case for the Fed at this point doing it. So does Jay Powell ratify Wall Street, or does he start to push back against it? There's only about 2 weeks until the meeting.
Mike, thank you. The Jay and Steve show. I have no idea who's responsible for that graphic from a couple of minutes ago. The Jay and Steve show coming up in about 14 minutes' time. Alex Steele and Guy Johnson will run you through the Jay and Steve show right here on Bloomberg. Vanguard's Ann Matthias weighing in on the Fed's impact on the dollar. She writes the following: a weaker dollar likely continues even as US growth outpaces Europe. The dollar grin moves to a dollar grimace thanks to Fed policy. Ann joins us now for more. And let's start there. The basic concept of the dollar smile is that the dollar appreciates in value at the two extremes. Either global growth is great or global growth is terrible, hence the smile. Walk me through the grimace. What is that, Ann?
Well, dollar is going to strengthen if economic growth is slow because you have an extremely credible central bank that is willing to take action. You have a large economy, and it's a safe haven currency. So that piece of the smile is still there. What's changed for us going forward is the strengthening of the dollar as economic growth really gets going, even if the U.S. is outpacing Europe and the other developed market economies. In the past, that used to cause appreciation of the dollar. So the dollar would smile like this. It would appreciate when times were bad, and it would appreciate when times were very good. And the appreciation during good times was because the Fed was expected to raise rates. And raising rates is something that should strengthen a currency when you have a credible central bank. This time, the Fed has said, we're taking that tail off the table, or we're flattening that tail, at least for the near term. And we're not going to raise rates. If economic growth accelerates, if inflation starts to rise, we're going to be happy. We're going to sit on our hands. We're going to wait, and we're going to push average inflation up. And the Fed proactively wants to create more uncertainty around inflation, uncertainty around the path of interest rates, and all of that pushes against dollar strengthening on the upside as the economy grows. And that turns the grin into a grimace. And that's one of our major themes in terms of looking forward over the next year.
Very clearly explained. So let's talk about that theme and the capital allocation implications of that theme and that change in how the dollar could behave in your mind, Dan. Are you thinking more internationally now in a much more pronounced way?
Well, I think that cross-market investment strategies will become more interesting, playing the U.S. off against Europe. I think within Europe, you probably will also have something of a periphery core compression going on. But I think interestingly in the U.S., you have corporate credit really, really, really highly valued. You know, we're near, 10-year tights in terms of spread across a number of sectors. But there are still a few areas that are pretty interesting and that should be supported by this trend toward a weaker dollar, a very accommodative Fed, and that's a bit lower quality credit. If you're in investment grade, lower quality within investment grade, and then into high yield, and a little bit longer out the credit curve, longer maturity credit. And you may ask yourself, wait a minute, if the dollar is depreciating and interest rates are rising, not interest rates, inflation is rising, why would you want to go out the curve in credit? And that is because the Fed, which you just mentioned, or Mike McKee just mentioned in the prior segment, the Fed is likely to sit on the curve. The Fed is likely to do some kind of maturity extension program, Operation Twist 2, and actually start buying longer maturity debt to keep nominal yields at the 10-year point lower if they start to rise too much. And that's good for lower quality credit, and it's good for longer duration credit.
So, Anne, this shift in the reaction function of the Fed has a whole range of outcomes for markets. You're now looking for a weaker dollar at a time where if we did have really strong growth, typically it would lead to a market start to price in rate hikes. Won't happen. Weaker dollar, okay. Looking for the extended average maturity of the asset purchase program over at the Fed. That means you want to be longer duration. That makes sense too. Go down in quality as the market, as the economy picks up. And I've got all of that. When it comes to the policy mistake, what I think is really interesting about some of the work you guys are doing, people are thinking about the Fed. What's the policy mistake going to be? They're thinking about fiscal. What's the policy mistake going to be? And are you thinking more about regulation?
Yes, actually, and I think it's very interesting. I was thinking this before, but then when Yellen was, raised as the next Treasury Secretary, it became even something more important to me and to us on our team, that the Fed is really going to be accommodative on monetary policy, but they will be concerned about financial stability, and they will be concerned about leverage bubbles. And there is a lot of leverage in the system, and there is a tremendous amount of non-bank leverage in the system. And Yellen, when she was the chair of the Fed in 2011, actually, or 2017 rather, she gave a very important speech about the risk of leverage in the system and the importance of macroprudential policy to combat excessive leverage, excessive risk-taking. And I think that's really going to be a focus. So it'll be a focus at the Fed, and then at the Treasury, you're going to have a secretary for whom that is also a very important focus. And I think it's important, but it's a place where those two entities, the Fed and the Treasury, could create a situation where if they make a policy mistake, a miscommunication, are seen as overly aggressive, you could see liquidity lockups or liquidity concerns in leverage lending markets. And I'm not predicting that. I'm not saying it's going to happen, but I do think that's a key risk in the economy going forward.
One of these conversations that I walk away with and I'm going to be thinking about for a while. Anne Matthias, fantastic to catch up with you. Brilliant to catch up. Thank you. Coming up on this programme, the market moving events you need to be watching and the countdown to the Jay and Steve show. I don't like that name. Chairman Powell, Secretary Mnuchin, 8 minutes away on Bloomberg. Record highs on the equity market, 24 minutes into the session. The S&P up by about 1.2%. Let's get to the trading diary. At the top of the hour, Fed Chair Jay Powell and Secretary Steven Mnuchin testifying on Capitol Hill, plus ISM manufacturing numbers too. Then Fed Governor Lael Brainerd participating in a panel later this afternoon. We get the Fed's Beige Book on Wednesday, another round of jobless claims coming up as well on Thursday. And then the main event, it's Payrolls Friday, coming up this Friday. For more on the main event in the next 5 minutes, let's bring in Kevin Cirilli down in Washington, D.C. Kevin, give me the playbook for what's about to take place down in Washington in 5 minutes' time.
So on the warm-up act. All right, look, I think the main battle lines, Jonathan, are going to be between Fed Chairman Jay Powell, who is going to continue to sound the alarm on there being more fiscal stimulus, and that despite the positive developments on the vaccination front, that more fiscal stimulus is needed in order to get the economy back on track. Meanwhile, Treasury Secretary Mnuchin, in his final weeks as Treasury Secretary, is going to lay down a marker for conservatives that will shape the debate of fiscal stimulus for months to come, even in a Biden administration. And that's that $400+ billion worth of fiscal stimulus that was returned from the central bank, that ought to be used as a foundation for more fiscal stimulus talks to happen. Now, while he is going to be met with skepticism from Democrats, Republicans, including the likely soon-to-be new chairman of the committee, Senator Pat Toomey of Pennsylvania, will really hear that message, as will Senate Majority Leader Mitch McConnell.
Kevin Cirilli down in D.C. Looking forward to the main event in about 4 minutes' time. We have a new all-time high in this equity market. Your intraday record high, 3666.06 on the S&P 500, just off that level right now. This was the countdown to the open for our audience worldwide. Catch me on Twitter at Faro TV. With that testimony just around the corner, this is Bloomberg.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Months after Hurricane Maria, Puerto Rico is still in peril. Huge swaths of the island are still without power, running water, or access to medical care. Experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA for a slow response in comparison to recent disasters on the mainland. But recovery from a disaster of this complexity and scale has proven more challenging than anyone anticipated. And filling the gaps between an overextended public sector and a suffering populace falls on the private citizens. Robert Anderson is a Puerto Rico resident of 4 years.
The eye of the storm came in south of El Yunque, swept up towards San Juan and out to Arecibo. Everything on the right-hand side is what we call the dirty side of the storm.
This isn't his first time in a disaster zone. With a military and telecom background, Anderson worked on repairing damaged cell phone towers in New Orleans after Hurricane Katrina. Some might be tempted to label him a disaster capitalist, seeking lucrative government contracts for his expertise. But as Anderson finds himself in the middle of a humanitarian crisis, he and his associates are developing a variety of pro bono recovery projects that target the island's hardest hit areas.
I see two Puerto Ricos. We're here in San Juan. They have telecommunications restored. They may or may not have power, but basic services are in place. They're able to get food, they're able to buy things, they're surviving. And when you look outside of the San Juan area, you can go 15 minutes from here and find areas that are devastated. I'm working on the devastated side.
Today, he's put together a boots-on-the-ground mission to provide medical care to some of the island's most isolated and vulnerable residents. Steve Berenbaum is one of Anderson's business associates. He offered an extra car and a set of hands.
So we received an initial report from a nurse that was out in the area. We're headed to the northeast region of Utuado for some people that are in need of urgent medical assistance.
Dr. Sally Priester is a physician from San Juan. She filled a van with medical supplies at her own expense and brought along a team of nurses. Google Maps estimated our first destination to be a 90-minute drive. But it didn't account for obstacles like this. Our first stop was the home of an 82-year-old blind Vietnam veteran. His roof was blown off by the storm, and he's been living alone in a back shed for nearly 2 months.
His cane actually got broken in the storm, so he's limited mobility. He has a number of medical ailments. Dr. Priester's having a look at him. We called the VA. They're going to get him set up with what he needs, get him stabilized so he can then be transported either to an evacuation center or off the island. It's when the chain gets broken, when those families that are connected to them leave the island or take off, these guys get left at the end of the road, and it's tough.
FEMA was not officially part of Robert's team, and their arrival caught everyone by surprise. Their job here was to survey and report back to their superiors, and did not come with medical aid of any kind.
People think that FEMA is there to hand out bottles of water, and it's not what they do. FEMA has a role to play. They have a very specific role. They bring in ships, they bring in airplanes, they bring in tractor trailers with pallets of things. But they're a big machine, and there's gaps in that thing. And you're seeing one of the gaps here, and we help fill that role. These guys are in a bad situation before, and now they're struggling for real basic things. One of the risks that you run is people going from fear to hopelessness. Those are the folks that we're trying to reach.
And how are they reached? How are they even found?
Word of mouth, mostly.
And what's your role in all of this?
Ghost in the machine. I'm lucky enough to be able to communicate with folks in FEMA, the state of Puerto Rico.
For a ghost, Robert makes his presence well known. Not only was he the de facto leader of the mission, now with FEMA in tow, he created his own maps to survey storm damage.
So we're right here.
And delivered them to FEMA HQ free of charge.
I have pretty good reach.
Perhaps that's how he managed to earn himself a coveted FEMA badge without actually working for them. And it's these relationships that allow him to operate more efficiently than an NGO or a government agency.
We're able to resolve problems at a different level.
Our next stop was on a mountaintop, a family of 11 struggling to care for their special needs brother in what was left of their house.
Probably we are the first health team to come and visit this family.
Muy bien, todo muy bien.
The patient has Down syndrome. He is all day in bed. The difficulty with this is the patient cannot be alone. The most important thing is that you need to take care of the chronic disease besides disability, because they have been not going to a doctor, and no doctor has come in here yet.
So we need a refill of this medication.
After maybe 54 days, it's not getting better. And the only way that you can be able to see that is coming to the ground, drive, and see the people and talk to the people.
You can see San Juan from here, but you can't get there. It's like the Emerald City.
On this stop, we caught word that a man living alone at the edge of the jungle was in need of care.
So we decided to take a little detour, come up here and check out and see what's going on. One of the challenges is to find those people that are at the end of these roads that need help.
¿Pero por qué estás solo? ¿Por qué estás por acá tan solo? I'm asking about why he's alone right here. He said things in life happens. You know, I'm here by myself. So ¿dónde vive acá? En la parte de... This is not a job. To do this, you need to have passion for what you can do. You're not going to get paid.
It's said in disaster response and emergency response that the real first responders are your neighbors. You don't need to wait for a lucrative FEMA contract to go out and do good and to help the community.
In the end, do you feel like you're making a difference?
Lives you touch and people that you can affect. I don't really think about it in those terms.
But why do you do it?
It helps me sleep at night. I think it's as much for the people that are going out to help and do things as it is for the people that you affect.
Whether out of altruism, or the lure of a paid gig, or some mixture of the two, Anderson hopes to stay here to help shape Puerto Rico's future.
Puerto Rico's essentially been a colony for 400 years. It was treated poorly by the Spanish. It was not treated well by the United States when they first got here. Puerto Rico can continue in the way that it's always been, or Puerto Rico can rebuild itself like nothing that's ever been. And we have to do everything we can to make that real. That's the bottom line.
When I met him first online, I found him to be really sweet. I think I was the one who was talking for an hour. He was just listening.
When we met, I saw her. She was beautiful, intelligent, and kind, which was, I mean, something that I was looking for.
Anshu and Sumit are one of about 12 million couples that get married in India every year. Unlike their parents' generation, they're not from two close villages, but from two cities on opposite sides of the country. And their love didn't start through community matchmaking, marriage brokers, or classified ads in newspapers, but began online.
So we met through jeevansathi.com. So it's basically an online portal where we have detailed profile of different grooms and brides.
It makes a lot of remote profiles who are located in distant areas more accessible.
Thanks to growing internet and smartphone usage, matrimony websites and apps in India are starting to disrupt the matchmaking industry. More and more people are finding their partners at the click of a mouse. jeevansathi.com, where Anshu and Sumit met, is one of the biggest players. Young Indians looking for love set up profiles including their caste and horoscope, but their criteria for choosing spouses appears to be changing.
We have seen the shift from traditional caste community conservative parameters to something like which is more focused on education, employment.
Anshu and Sumit's marriage was initiated by their parents, but modern Indian couples like them have more input than previous generations.
We looked up to them to agree for the proposal, but it was primarily our decision that we wanted to be with each other.
So what's the emoji like you use the most to send to each other?
There's a bear which basically we use for indicating a hug.
Yeah, that's our language basically, bear icon for a hug.
Time flies when you're in love, and just 1.5 months after they first met online, the couple got engaged. They decided to hold their wedding less than 3 months later. But planning a traditional Hindu wedding on such short notice is no easy task. The massive event usually lasts 3 days, has various ceremonies and celebrations, and involves the entire two families and hundreds of guests. Luckily, there are websites and apps for that.
We searched online, we got in touch with Wedding Brigade, and they helped us finalize the venue, and it makes the search faster and efficient.
Startups like the Wedding Brigade are challenging traditional wedding planners in this $50 billion industry. It provides various services from booking banquet venues to buying wedding gowns. The website makes money by charging commission from vendors.
People don't want to be limited to what is available around them. They want to know the entire range of options available before making a decision. And now it's easy to find almost everything on one portal.
Anshu and Sumit are officially married in a ritual that has gone on for thousands of years, but their love started in a very new way. Technologies might be changing the way couples meet, date, and get married in India, but they're definitely not changing everything.
The technology was only the first level help that we could get to find each other. Everything else was like very humanly and emotions and feelings based.
Massachusetts Senator Elizabeth Warren has become a symbol of everything the Republican Party stands against.
Everyone gets a right to basic health care. We need strong oversight of these banks.
A legal scholar and a consumer advocate turned politician, Warren has branded herself as a champion of the working class and made a career out of standing up to big business. While rumors of a 2020 presidency bid remain just that,
I'm not running for president.
her Senate seat is up for re-election in 2018, and Republicans are already pumping millions into super PACs to defeat her. This is the story of how a law professor and politician came to be seen as the biggest threat to Republican values and the greatest hope for progressive America. Elizabeth Warren was born Elizabeth Ann Herron, the youngest of 3 siblings, on June 22, 1949 in Oklahoma City to middle-class parents. After waiting tables to help her family pay the bills, Warren became a star on the high school debate team. She landed a scholarship to George Washington University at the age of 16, but 2 years later dropped out to marry her high school sweetheart, Jim Warren. By 1980, Warren was a mother of 2, divorced and remarried, had earned a bachelor's degree from the University of Houston, a juris degree from Rutgers, and practicing law in New Jersey. Warren then went on to become an influential law professor, teaching, lecturing, and publishing highly cited work on bankruptcy and commercial law at 7 universities around the country, eventually settling at Harvard Law School. But Warren wasn't always a liberal lion.
Elizabeth Warren used to be a Republican, actually.
That's Stephen Dennis.
I'm a Senate reporter for Bloomberg. Around the time that Elizabeth Warren switched parties, she became a fierce opponent of a Republican drive to make it much harder to file for bankruptcy. She fought that for a decade. It ended up passing anyways.
While her efforts ultimately failed, her warning calls were heard in 2008.
We're in the midst of a serious financial crisis. Our entire economy is in danger. And without immediate action by Congress, America could slip into a financial panic, and a distressing scenario would unfold.
Professor Warren was tapped to help with oversight in the government bailout.
She would excoriate bankers and their bonuses and their practices.
Why should the U.S. taxpayer alone carry city?
She proposed a series of tough regulations, which became the basis for much of the Dodd-Frank financial law that we have today. That sort of catapulted her to national stardom, particularly among the progressive left.
Encouraged by her newfound notoriety, Warren declared her bid for the U.S. Senate on September 14, 2011. During the race, her opponent Scott Brown tried to derail Warren by accusing her of falsely claiming Native American heritage, a controversy that earned her the nickname
Pocahontas.
Nevertheless, she was victorious and won the Senate seat by a comfortable margin. She used her new tenure to challenge everyone, from banking regulators and Treasury officials to members of Wall Street and Congress.
I'm really concerned that too big to fail has become too big for trial. We need tough new laws to hold corporate executives personally accountable. No one should be above the law.
She called for Wells Fargo CEO John Stump to resign for fraud, introduced the Bank on Student Loans Fairness Act, and reintroduced the 21st Century Glass-Steagall Act. In 2016, after staying silent during the Democratic primary battle, Warren finally endorsed Hillary Clinton and had some harsh words for candidate Trump.
Donald Trump is a loud, nasty, thin-skinned fraud who has never risked anything for anyone, and that is just one of the many reasons he will never be president of the United States.
But she was wrong.
The forgotten men and women of our country will be forgotten no longer.
Warren wasted no time resisting Trump's agenda.
Have you ever managed or overseen a $1 trillion loan program?
I have not.
How about a $1 billion loan program?
I have not.
In the Donald Trump era, Elizabeth Warren has been playing defense and trying to prevent Donald Trump and his cabinet appointees from rolling back protections that she helped enact.
Warren actually found herself rebuked by Mitch McConnell for reading a letter by Coretta Scott King about Jeff Sessions' record on racism during his confirmation.
She was warned. She was given an explanation. Nevertheless, she persisted.
That moment became something that's on T-shirts, bumper stickers, slogans, and that really galvanized a lot of support for her. It's been very hard for Republicans to get much of anything done this year, and that's at least in part to this resistance movement that Elizabeth Warren has helped champion.
We are here to fight back.
Enough of Elizabeth Warren. Like you.
Millions of dollars are being funneled to defeat Warren in the midterm elections in 2018. But it's the rumors of a 2020 presidential bid that has further prompted powerful donors to fund her opposition, often using the same playbook of constant and ruthless ad campaigns that many believe helped Trump win in 2016. It's anyone's guess if she will endure what Hillary could not.
You know, the question for Elizabeth Warren is whether she can go from being a liberal firebrand to somebody who can regularly get 60 votes for initiatives in the Senate and 218 in the House and drive an agenda, and whether she can bring together coalitions for political victories. That's the challenge, and we'll see what happens.
Sadiq Khan, the mayor of London, has made some powerful opponents.
He doesn't know me, never met me, doesn't know what I'm all about. I think they're very rude statements, and frankly, tell him I will remember those statements.
My message to Donald Trump and his team is that, your views of Islam are ignorant.
He's the first Muslim mayor of a major Western capital and proud of it. This is how Sadiq Khan went from the son of Pakistani immigrants to a lawyer, lawmaker, and now the mayor of London. Khan's parents emigrated from Pakistan. His father was a bus driver, his mother a stay-at-home seamstress. The 10-strong Khan family squeezed into a 3-bedroom flat in South London. He wanted to be a dentist, but TV in the 1980s convinced him otherwise.
Objection!
LA law with its swagger and ill-fitting suits caught Khan's eye. He graduated in 1991 with a degree in law from North London University and joined a human rights firm. Khan worked a number of high-profile cases, often clashing with London's Metropolitan Police Force. But he had bigger political ambitions.
This is what being a new MP is like, squatting on a bench in the absence of an office, dealing with letters from constituents.
Reports are just coming in of an explosion here in London.
And there's just explosions, and then it was just smoke everywhere.
Everyone's just asking what's happened.
Only 2 months after Khan entered the Commons as a Member of Parliament, London was attacked by Islamist extremists.
That day will stay with me for the rest of my life.
He spoke out against the attacks both as a London MP and as a Muslim.
He has been very clear about his opposition to violence, opposition to terrorism, and has set out to make the case for a more open and peaceful Islam.
That's Thomas Penny, one of Bloomberg's Westminster correspondents.
Here is a man who is a Muslim, and he is standing up and being open and straightforward and being clear that the problem here is not Islam, but it's Islamic extremism.
In 2015, a decade after the attacks, Khan ran for mayor of London, and his faith was back in the headlines. His opponent, Zach Goldsmith, trying to link Khan to radical Islam.
The debate got again personal and nasty.
The Goldsmith camp has called Khan extreme and accused him of associating with, quote, those who seek to do our police and capital harm.
It's a pattern of behaviour.
Even the former Prime Minister David Cameron repeated the allegations.
He shared a platform with Sajil Shahid, the man who trained the ringleader of the 7/7 attacks and accused the United States of bringing 9/11 on themselves.
But the smears didn't stick.
Zach Goldsmith ran a very negative campaign that was based on what people knew was a lie.
This election was not without controversy. And I'm so proud that London has today chosen hope over fear and unity over division.
After taking the mayor's office with a comfortable majority, Khan has brought a business-like efficiency to the role, scrapping expensive vanity projects like the Garden Bridge and the new Routemaster buses, which cost £350,000 each. The former lawyer who used to fight the police in court is now praised for his close relationship with them.
I was talking to a very senior police officer in the Metropolitan Police who said there was a sea change when he went into City Hall, and the police were saying how much they welcomed this because they knew where they stood and it was more straightforward to work with. So he works like a lawyer, he works like a government minister.
Khan's kept his faith at the fore. He's an outspoken voice for moderate Muslims across the world.
Donald J. Trump is calling for a total and complete shutdown of Muslims entering the United States.
Now, by giving the impression that Islam and the West are incompatible, you're playing into the hands of the extremists.
The ongoing spat between Khan and US President Donald Trump escalated when Trump went after Khan, misquoting him on Twitter just hours after the terrorist attacks of June 3rd, 2017. Khan's now one of the most prominent Labour politicians in the UK. In fact, a recent poll of Londoners found Khan was more trusted to keep the country safe from terrorism than the Prime Minister or the Labour leader. His story of going from the son of an immigrant bus driver to the mayor of one of the greatest cities in the world plays well with Londoners. But can he appeal to the rest of the nation? Has Khan got his eye on the top job? And is the UK ready for a Muslim Prime Minister?
What does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, U.S. Navy, and other branches of the U.S. government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hacked emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning. He used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the collateral murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped in the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness. Don't you think?
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks!
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
When it debuted, the 4G wireless we have today allowed people for the first time to hit the road and explore unknown places with only a smartphone for directions. When 5G arrives, it could enable driverless cars to take us there as well. 5G stands for 5th generation mobile networks or wireless systems. It's insanely fast and can accommodate a lot more connected devices. But the reason it's being called revolutionary is because 5G will allow connected devices to speak to each other as well as people.
Right now we're living in a world where really it's a one-way experience.
That's Bloomberg tech reporter Ian King.
The network talks to your phone, you look at your phone and access data, then you send something back to the network. What we're being told about 5G is that really for the first time we're going to see machines communicating with each other over mobile networks in a meaningful way.
5G could end up being 100 times faster than what we have now, with speeds that could reach 20 gigabits per second. In plain English, that means downloading a full-length HD movie in seconds. 5G will also increase total bandwidth, which we will need in order to accommodate the growing Internet of Things. We're talking about the class of devices like internet-connected refrigerators, thermostats, dog collars, but 5G will enable many, many more.
Things like your utility network, factories, where machines are just sat there not connected at all. Suddenly they're all going to be connected. Suddenly we're going to be able to have real-time monitoring. Other things like cars, like utility poles, like your light, the light poles.
But perhaps the biggest advance will be a huge reduction in communication lag time, known as latency. A network of driverless cars will need the speed of 5G to ping each other multiple times per second to avoid collisions. Near instantaneous data transfers could allow doctors to perform surgery remotely with a robotic scalpel. So how will all this work? First, you need to improve network density.
And that's just a fancy word for saying you put more towers out there. What we're being told is that's not actually the case with 5G.
The idea is 5G will not only use the existing mobile spectrum, but also tap into higher frequencies called millimeter waves. Millimeter waves can carry more data, but only travel short distances. This may mean you'll see a lot more of these base stations around town. And the new towers may have as many as 100 antenna ports, compared to about a dozen on 4G cell towers. So when will we get 5G? Getting 5G ready is expected to cost providers $275 billion over 7 years in the US alone. Look for the first 5G service to pop up in big cities sometime in 2019.
When people think of Vladimir Putin, they think of capital P, power. And that's exactly the impression he creates. Whether it's physical power, firing different weapons, riding in various James Bond-esque modes of transportation, or tossing hapless opponents in judo. Or political power, ruling his own country with an iron fist, crushing his political opposition, or, most recently, being accused of meddling in foreign elections for his own benefit. This is how Vladimir Putin went from a poor, tough kid in Leningrad to a KGB spy to the very symbol of modern Russia. Vladimir Vladimirovich Putin was born in 1952 in Leningrad, which is now St. Petersburg. His father was a factory foreman and his mother a homemaker. It is widely said that Putin's public-facing tough guy persona can be traced back to him getting into fights when he was younger, which paved the way for him to take up judo. After getting a law degree from Leningrad State University, Putin joined the KGB Foreign Intelligence Service. He spent 16 years in the KGB. When Putin returned to Russia, he began his political career.
He went to work for
Anatoly Sobchak, who was then the mayor of St. Petersburg.
That's Leonid Bershidsky.
I'm a columnist at Bloomberg View.
Putin thrived in Sobchak's administration because
he was sort of considered pretty efficient city official at that time. He was very loyal to Sobchak.
So loyal and efficient that
he was noticed by Yeltsin's close circle.
And those people soon brought Putin over to Moscow to work in Yeltsin's administration, where he quickly climbed the political ladder.
Then, of course, he was promoted to Prime Minister of Russia.
That's Dmitry Trenin.
I am currently director of the Carnegie Moscow Center.
Around this time, Yeltsin and the people around him, the so-called family, decided that Putin would become Yeltsin's successor. And then this happened. The apartment bombings were carried out in 3 Russian cities, killing 293 people and injuring more than 1,000. Putin immediately accused Chechen separatists for the bombings and followed it up with action.
He was credited with having a very successful military campaign against the terrorists.
And it worked.
After that, he became an heir apparent in the eyes of the Russian people.
3 months later, Yeltsin resigned. And on his way out, a famous exchange.
He was getting into the car in the Kremlin, and the last words that he addressed to Putin before getting into his car was, "Take good care of Russia."
So Putin took over as president, and 3 months after that, won his first election. But just because Putin won the presidency, that didn't mean he had all the power. This is Michael McFall.
I was U.S. ambassador from 2012 to 2014. In the 1990s, there was a fire sale of all the things worth owning in Russia, and certain people,
the oligarchs,
did better than others in that fire sale, sometimes called privatization, and those people tended to be well connected with the Yeltsin regime, and they weren't Putin's friends.
But they probably miscalculated, thinking that they could easily find a way to influence him. It became impossible almost from the start.
From that very moment, there was warfare between him and the oligarchs.
That's when Putin gave the oligarchs a choice. Putin's way?
Some of those people from the 90s managed to figure out a new way of dealing with Putin and have survived.
Or prison.
Others could not find common vision, and so they lost their assets.
Khodorkovsky once was Russia's richest person, worth $15 billion, but he ran afoul of President Vladimir Putin and spent a decade in prison.
With domestic power consolidated, Putin focused on restoring Russia's global influence.
Putin is the guy who believes in the expansionist Russian state. Georgia and Ukraine and all the other Soviet republics that split off when the Soviet Union fell apart, he still believes that they're traditional Russian satellites. A lot of his strategy is about keeping them in the orbit. That Yeltsin line, take good care of Russia, that's how he understands it.
And he used annexation and invasion, as well as oil, gas, and trade to keep former Soviet republics in Russia's orbit. In 2008, Putin's 2 terms were up, and he decided to step down as president. Dmitry Medvedev stepped in as president, and Putin went back to prime minister. But really,
Putin never left power. He pretty much continued running the country, and Medvedev was a bit of a figurehead.
There was actually a period of cooperation between Russia and the U.S. that benefited both countries during Medvedev's presidency.
Because Medvedev did not have the same negative attitude towards the West as Putin did.
But when Putin came back to run for a 3rd term, in the lead up to the 2012 election, it was widely believed that both the presidential and parliamentary elections were rigged, and Russians took to the streets. Putin blamed the protests squarely on America, and more specifically, Secretary of State Hillary Clinton.
He believed that she had sent, and this is his words, a signal to demonstrators.
Still, Putin won by a huge margin and set about crushing the protest movement immediately upon his return to the Kremlin. Over the next few years, Russia's economy tumbled. Putin annexed Crimea, leading to sanctions. The price of oil fell drastically. The ruble hit a new low, and America played down Russia's influence, with Obama calling Russia
a regional power.
Despite all of that, Putin's approval rating remained sky high, and then an opportunity for payback.
I think I'd get along very well with Vladimir Putin.
In 2016, there was one candidate who called Vladimir Putin very smart.
Trump exhibited tolerance towards Putin's actions annexing Crimea, and similar views on NATO and sanctions.
Secretary Clinton didn't support any of those views.
Even though Putin denies any wrongdoing,
U.S. elections.
Yes,
the U.S. has accused Russia of being behind the leaking of 20,000 Democratic National Committee emails, which many say helped Trump beat Hillary Clinton in the presidential election. Which leaves us here, with the possibility of a President Putin until 2024, positioning Russia to be the world power he always imagined it should be.
Jack Ma is Asia's richest man and most recognizable business tycoon. He's the chairman of Alibaba, China's e-commerce giant and one of the 10 largest companies in the world, yet he still wants more.
We know where we're going. We want to be the 5th largest economy.
Big words from the man some call Asia's Jeff Bezos. He's confident, he's charismatic, and he's definitely not the average CEO. This is how a poor school teacher went from the classroom to being one of the most influential multi-billionaires in the world. Ma was born in China's southeastern city Hangzhou in 1964. His parents were traditional musician storytellers. As a teenager, he started to learn English from foreign tourists after China opened up in the late 1970s.
And then for 9 years, Jack Ma hung around outside the Hangzhou Hotel, which is now called the Shangri-La. He would get up at 5 a.m. to talk to travelers.
That's Bloomberg technology reporter Lulu Chen.
And I cover China Internet for Bloomberg.
Ma failed China's National University entrance exam twice before being admitted to local teachers' college. He graduated in 1988. He applied for 30 jobs and got rejected, including from the fast food giant KFC.
When KFC came to China, say 24 people went for the job. 23 people accepted. I was the only guy.
Then Ma got a job at a local university and taught English there for about 5 years, earning just $15 a month. On the side, he started a translation company with several friends. During a company trip to the US in 1995, Ma had his first encounter with the internet at a friend's place in Seattle.
I searched the first word beer. I don't know why, because it's easy to spell, baby. And I see beers from Germany, beers from USA, beers from Japan, but there's no beer from China.
So he searched for the word China instead and still couldn't find anything. And that got him thinking. He wanted to build something that would put China on the world's map.
He started China Pages, a Yellow Pages-like website, but it didn't take off. Then Ma joined a government agency in Beijing to help set up a website. By 1999, the internet stock boom had gripped Wall Street, and back in his Hangzhou apartment, Ma decided to try again. With his wife and a group of friends, Ma raised $80,000 and set up Alibaba, a site that allowed businesses to sell stuff to each other.
人家美国人强就强它的硬件，强就强它的系统建设，这方面确实比你早。但是玩信息玩软的，中国人的脑袋绝不比你们差。我们在座的所有人的脑袋绝不比你们差。
By 2000, Alibaba had raised $25 million from investors, including Goldman Sachs and SoftBank.
He had no business plan and zero revenue, but his eyes was strong eyes.
In 2003, Alibaba started Taobao, a platform for individual sellers to trade with each other, and publicly declared war against eBay, who had started to make a foray into China.
Jack Ma has this famous saying that Alibaba is a crocodile in the Yangtze River, whereas eBay is a shark in the ocean. And if they fight eBay in the ocean, then they'll lose. But if they fight them in the Yangtze River, then they have a home base advantage.
In 2007, just 1 year after it forced eBay out of China, Alibaba debuted its business-facing division on the Hong Kong Stock Exchange. But it delisted 5 years later as its performance sagged. But in 2014, Alibaba raised $25 billion in the world's biggest IPO in New York.
Everybody should have a dream. What if that dream comes true?
After achieving dominance in the business of e-commerce in China, Alibaba has been building an internet empire worth $472 billion, with businesses in cloud computing, online video streaming, movie production, healthcare, sports, retail, and even news media.
Alibaba buying into South China Morning Post really raised eyebrows. This is the largest English newspaper in Hong Kong, and it shows that Jack Ma's ambitions weren't limited to e-commerce. He wanted to influence not just Chinese users, but also overseas users as well.
The US has criticized Alibaba for allowing companies to sell counterfeit and poorly made goods, but in China, it enjoys the favor of China's government. It's part of Ma's company philosophy.
In love with the government, but don't marry with them.
Jack Ma is an extremely fortunate man for jumping on the internet sector so early. Note that this is a person who has no coding skills at all. He's a natural showman and a gifted public speaker, and really able to convince others to believe in his vision.
Ma's vision of growing Alibaba to be the world's 5th largest economy faces strong competition at home and abroad. It will require more than just naked ambition and charisma, but Ma is great at getting himself in the right place at the right time. So far, it served him well.
Peter Thiel is a walking contradiction. He got his bachelor's in Juris Doctorate from Stanford, but speaks out about the horrors of higher education, saying college is
as corrupt as the Catholic Church was 500 years ago.
He's a staunch supporter of the free press, yet he bankrolled a lawsuit to bankrupt an independent media company.
But these were not journalists.
And most of all, he's an immigrant libertarian who's the most public supporter of Donald Trump in all of Silicon Valley.
What Trump represents isn't crazy, and it's not going away.
This is the story of how an openly gay, immigrant genius, libertarian billionaire went from tech contrarian to Silicon Valley's biggest Trump supporter. Peter Thiel was born on October 11, 1967 in Frankfurt, West Germany, to Suzanne and Klaus Thiel. Peter's family emigrated to Cleveland, Ohio when he was 1. An Ayn Rand devotee during his youth, Thiel attended Stanford University majoring in philosophy.
His Stanford experience shaped a really big part of who he decided to surround himself with.
That's Lizette Chapman.
And I cover technology and venture capital here at Bloomberg.
He and his Stanford friends made their first big splash in tech with PayPal. After selling to eBay for $1.5 billion, they would become known as the PayPal Mafia for each incredible success after PayPal. For Thiel, that began with an early, modest $500,000 investment in Facebook.
And in VC speak, early means big risk, but also big reward. He turned that initial $500,000 investment into more than $1 billion in cash.
But Thiel was just getting started with Facebook, and he went on to make a whole bunch of wildly successful investments.
From SpaceX to Airbnb to one of the largest, most powerful companies in the United States, if not the world, and of course that's Palantir.
The incredibly controversial secretive data mining startup he founded with his colleagues from PayPal. It connects data silos and then allows non-technical people to search that information for patterns. Data like
financial information, feeds from video cameras, biometric details, passport information, flight manifest.
Palantir doesn't talk much about how they collect this data, who has access to it, or what they do with it. But they have contracts with
the Department of Homeland Security and the CIA and the Department of Justice and the Securities and Exchange Commission
and several other federal agencies. It's the richest company you've never heard of, valued at $20 billion. But there are plenty of obscenely wealthy people in Silicon Valley. What makes him different?
He's a complex ball of multiple contradictions.
Take college, for example. Even though college was extremely important for Thiel, there's something called the Thiel Fellowship.
In exchange for dropping out and a promise not to pursue college, Thiel would give them $100,000 each.
You basically tell people that if you get a diploma, you're saved. Otherwise you go to hell. You go to Yale or you go to jail.
Also, his relationship with the press.
Here's another contradiction. He's donated to free press initiatives, including the Committee to Protect Journalists.
But he also secretly spent tens of millions of dollars bankrolling a lawsuit filed by Hulk Hogan over the publication of a sex tape and bankrupting the independently run Gawker Media. Why did he do this? Because in 2007, one of Gawker Media's blogs, ValueAg, outed him as gay. And with the lawsuit, he
found an opportunity to get back at them by funding the lawsuit that Hulk Hogan was able to bring then, but he wouldn't have been able to do that without Thiel's money.
And finally, Thiel's biggest contradiction, his endorsement of Donald Trump.
When he was asked about his support for Trump, he was surprised at the outrage that came with it from many of his colleagues in Silicon Valley. He didn't want more of the establishment.
No matter how crazy this election seems, it is less crazy than the condition of our country.
After briefly supporting Carly Fiorina in the primaries, Thiel pivoted to Trump, donating $1.25 million to Trump and his associated super PACs in October 2016. And he didn't just help Trump financially. He gave a full-throated keynote speech supporting Trump at the Republican National Convention.
I'm not a politician, but neither is Donald Trump. He is a builder, and it's time to rebuild America.
And when Trump was finally elected, Thiel was given the reins to an enormous amount of power.
And I want to thank you, man. You have a very special back.
He was named the transitional advisor. And in that role, he did a lot of interviewing and a lot of vetting to fill hundreds of cabinet positions and different jobs within the administration.
But it turns out Thiel's support isn't unconditional.
Talking to people who spend time with him, I have also heard that he is no longer a great supporter of Trump.
It was reported that Thiel was unhappy with the direction of Trump's presidency. Ever since, he's been mum, making no public appearances, no statements, and staying out of the spotlight altogether. Although there have been suggestions that Trump could tap Thiel for a top intelligence post or ambassadorship, there's no indication he'd accept.
He's described his relationship with politics as schizophrenic. He gets really involved, and then he runs away as fast as possible.
Whether Thiel takes a new position or simply continues as a board director at Facebook and Palantir, at just 50 years old, he's primed to wield some serious influence in technology and politics for decades to come.
Two 2016 was again the hottest year on record, and the previous 17 years have seen our 16 most scorching. Scientists overwhelmingly agree. Global warming is the culprit. And it's just getting started. Ice caps, extreme weather, wildfires, droughts, and the hits keep coming. What are we doing about it? In 2015, the world took its boldest step yet to stem climate change with a historic accord in Paris. But now comes the hard part. Nations must change energy policies and invest huge amounts of money, and they will likely do it without the United States. President Donald Trump announced on June 1st that the U.S. would withdraw from the accord.
The reality is that withdrawing is in America's economic interest and won't matter much to the climate.
Here's the situation. Decades in the making, the Paris Agreement united the U.S., China, and more than 190 other nations in a push to limit fossil fuel pollution. The UN-sponsored plan secured pledges to cut greenhouse gases, the emissions that trap heat in the Earth's atmosphere, in an effort to avoid the rising seas and other environmental disasters that climate models predict. But even if all pledges are met, the globe is expected to warm by as much as 3.4 degrees Celsius this century, more than the UN target of well below 2 degrees. Meeting the Paris Agreement means that governments will have to offer more incentives for clean energy, scale back support for fossil fuels, make emissions more costly, and reduce deforestation. It's estimated that the deal will require $13.5 trillion of spending through 2030. Here's the argument. Unlike past climate pacts such as the Kyoto Protocol, each country set its own Paris targets and then promised to revisit and improve them. The U.S. was primed to play a lead role in climate change, but Trump's Energy Independence Executive Order reverses Obama-era rules and directives put in place to combat climate change, and expands production of coal, the dirtiest fossil fuel. The resulting policies threaten the global fight against climate change. Without the U.S. commitment to emissions reduction, other countries may join it in abandoning the Paris Agreement. This could make it almost impossible and even more expensive down the line to stop climate change. Optimists argue that the shift to a lower carbon future is already underway. Businesses, cities, and U.S. states such as California are already investing in wind and solar and taking other steps to make it work.
I've actually been called an environmentalist, if you can believe that.
There's an inherent attraction to light and being human. And I think on a very deep psychological level, light is this way in which we experience the energy surrounding us in a very personal manner. My name is Matt Dilling. I'm the founder of Light Bright Neon Studio, and we manufacture, produce, and restore neon works of art and design. origins of the creative content of a lot of the work at Lightbright comes from a variety of sources. Sometimes people come with a napkin sketch, some people come with an Adobe Illustrator file, and we have a whole design team who then we kind of work together to help create layouts of what it might look like. Scale it up and create a paper template using a pen plotter. And that paper template actually becomes our guide for what we're going to bend the neon to. We take from the office into the glass shop. We pick out the right size tubing with the right color for the right size project. From there, we heat up the glass tubing. The torches heat the glass well in excess of 1,000 degrees in order for it to get into its molten state. We heat up and bend the glass tubing to match the template. One of our chandeliers has over 100 different bends in it. So each one of those bends has to be marked for a heated up bend. We also have to allow the glass to cool between the bends so that the next area can be worked on and heated up in its own unique fashion. It turns into spaghetti, and then we have to make sure that that spaghetti lines back up and cools to the template. We use a blow hose to connect our mouth to the tube, create a volume that's closed, and we can control the pressure in there with our mouth. There's just a variety of challenges that come up inherently in working with glass. Glass can crack due to stress, and sometimes you'll just have a batch that all it wants to do when it gets near a torch is crack. After we've bent various components, we have to go in using the crossfire or the hand torch and actually weld all of those pieces together. The last step on that is then to weld on electrodes onto either end. Each one of those steps is very, very specific. I draw inspiration from so many different experiences. It's hard to come up with one thing that's particular, but one of the ways that I really am able to connect with the creative is to float. Floating is a similar experience to meditation, to psychedelics. Going into a blackened room and laying out in a body of water and salt that's heated to your body temperature, and it allows for all sort of external stimulation to fall away. And your internal world really begins to bubble up and manifest. You really get to experience a different relationship to your mind. I think I work with neon because I can't not work with it. It's so challenging and so rewarding. And those things are so intertwined that there's no way of separating it out. I learn so much and continue to learn so much by working with it. I find so much inspiration in working with it, and I just continue to experience new and different things through the medium. It's that close to me at this point. Once the neon tube is completed, we have to hook it up to our manifold for bombarding. The manifold is opened, a vacuum is drawn. We check the tube for leaks with our Tesla coil. We close the tube back off, and we heat it up using a very large and powerful transformer. As the tube is heated up, it releases anything that's not inert inside the tube, and we evacuate that out. We introduce the gas into it, and we seal the tube off, sealing into that tube whatever gas we introduced into it. I think my favorite part of making a neon light is when I see it lit up for the first time. Different gases, when electrified, emit different wavelengths of light. Neon gas is this very bright orange, fiery red color. Argon gas creates a very intense blue, but that light output that is produced can then be expressed in a different wavelength by coating the inside of the tubes with a phosphor coating that takes that one wavelength of light and emits a different wavelength. We bring it over to the aging table where we hook it up to an age-in transformer and allow it to settle, age the gas in that we've introduced to it. There's always a stray particle of something left inside the tube. But that time that the oxide coating can act to scrub whatever is left inside the tube while things are getting settled into place. Once the tubes are aged in, we move on to our process of assembling two halves of the fixture together in a jig, gluing up the center of the fixture to its spindle. Once the adhesive dried, we would connect the wires from the fixture together into a transformer, and we turn on power and it lights up. Part of what we love about what we do here is that we try and put out into the world the kind of things that we'd like to see. I still am surprised when it lights up. I'm still excited when I get to see it illuminated. There's an ineffable quality to it. To me, it is this insight into the inner workings of the universe. It literally is. It's a way of looking at what is surrounding us in the cosmos in a new light.
A bit like an addiction. You've got to make something, you have to do something. It's borderline obsession. And every bike we build is my favourite bike at the time, and as soon as it's done, I want to build another one. Sven cycles is something I've been thinking about ever since I started cycling in my late teens. We want bikes that ultimately you'll really enjoy riding. There's never a bike that's the same. There's always a slight change. And as we build them individually as well, they have the marks of a bike that's built by hand. Most people I know cycle have an idea of their dream bicycle. And it may be an evolving idea you've had in your head. And we've worked with a lot of people that have come to us with sketches and scrapbooks. It's really, really nice to build something that's just one-off and unique. I think a lot of people see a bicycle as two wheels and a frame in the middle. There are a lot of subtle changes and nuances in design which can change the riding characteristics quite dramatically. I'm a really big fan of modernist architecture, and the simplicity of a modernist building is really hard to achieve. And with some of our bikes, they may look very simple, but I think people should not underestimate the time and effort that goes into designing a product. Tubing is key to a bike's feel and ride. Reynolds tubing has been in my life ever since I can remember. Growing up, I could never afford a frame manufactured with their tubing. We can now put a badge on our bike saying manufactured at Reynolds, which is a sort of thing as a kid I just wouldn't have believed was going to happen. Every part of the bike has a specific tube. It's not universal. The first thing we do is get the tubes out, check they're correct, check the wall thicknesses, sand the edges, make sure it's all really clean, because if it's not clean, the tubes won't join together correctly. We build in steel because I still believe it's one of the best materials to use. It's been used in bikes since the late 1800s, and they're still using it now for a very good reason. It's the flexibility that we can replace the tube, repaint the bike, and you wouldn't know it's damaged. I just like working with it. It's very sculptural. This isn't sort of aerospace precision engineering. It's a steel rule and a marker. So when we're cutting the tubes, it's within a mil or two. But what we're trying to do is take the best from bicycle building in the past and add a little bit of modern flair to it. There's various techniques for building bicycles. We do a thing called fillet brazing, where you connect a pipe together. We use a bronze rod and a flame. We heat the tubes up to the same temperature and we fill the joint with bronze. And it gives a very, very sort of fluid, lovely, sort of quite sculptural feel. You've got to practice, you've got to be able to judge material temperatures, you've got to just look at it and you just get a feel for it. It's the stage where your tubes start to look a bit like a bicycle. My father's a jeweller. He'd make sort of very pretty things, which are lovely, but for me, they don't really have any function. What I love about bicycles, you can start on a Monday with a box of tubes, and you can be riding it by the weekend, and it can last you for the rest of your life. Outside of the frame and forks, the other most important part is the wheels and tyres. When you build the wheels, you have to lace them, so there's little holes going all the way around the rim. You poke the spoke through. We do build all our wheels by hand here because a machine can't get 30 years worth of wheel building experience. Colour is very, very personal. With any of our bikes, you can have them painted whatever colour you want. We've matched one to a teapot, so we can get that scanned and we can match that, or someone's favourite item of clothing. I like to let the bike sit for 4 or 5 days minimum, just so the paint can have time to cure a little bit, and then we assemble it. We get out all the new components, and it's a case of putting them together. Some bikes you can assemble in 3 hours, some will take 3 days. And we've built bikes that cost in the £10,000 plus mark. Some people, they're saving up and this is their bike and they're going to own it for the rest of their lives, so we just want to make sure they get the right thing. I think the bike for me was the first time I had some freedom, so as soon as I had one I was off. A lot of people still get that thrill as when they were a kid blasting down a hill, wind going through their hair. It's fun. Everyone has their favourite jacket or something, it just makes them feel good. If you've got a bike that fits well, you actually feel part of it. Building bicycles as a creative outlet is fantastic. It's not something you do because you're going to get a big paycheck at the end of the day. You do it something you have a passion for it.
If you ever saw a wooden surfboard, it was probably hanging in somebody's house or underneath the deck. But kind of in the last 10 or 15 years, wood has made a big comeback. They surf wonderfully. It's beautiful and it feels great to be on one of them. I always had a love for wood and kind of passionate about things that went in the water. I've kind of been around wooden boats most of my life. There's just so much character. The way they're built, the stories that come with them, a lot of that has translated over to why we build surfboards the way we do. When we first started thinking about building surfboards, wood was the natural material we chose. They have a very high strength to weight ratio. Wooden surfboards have the longest history of use in the surf world than any other material. People have been surfing wooden surfboards since kind of the first documented history of people riding waves. The board starts in CAD, where we take a 3D model, break down the shape, and kind of create frames and templates and all the inner parts of the board that we get cut on a CNC machine. We take those frames and we just pop them out, assemble the frame into kind of a skeleton. We go out to our lumber shed, pick a bunch of cedar, and bring them into our mill shop, put glue along the edges, clamp it all together into a panel. Everything's book matched, you have symmetry in the colors and texture of the wood. Cut your outline. take our assembled frame, gently put it down right on top of the plank. Once that foundation is started, you're basically building up the three-dimensional shape, the outside part of the board, using lots of strips that kind of interlock and fit together. Every piece of wood is going to be different, and it's all going to react differently. There are frustrations with it, but I think that's one of the things that keeps it challenging. You learn to read the kind of what the grain lines are doing and what the color of the wood is telling you. Once those rails are cleaned up, we put our top planks on. It's a little bit like putting a lid on a box. It's like, this is it. Whatever's inside that board is staying inside that board. And by tensioning some rope, you can clamp the two together. It's like a time capsule. What makes our boards unique are they are built right here in York. They're built using material that grows right here in the state of Maine. They're built 100% by hand by local craftspeople and surfers. There's a lot of time that goes into these boards, between 40 and 60 hours start to finish. We wanted to build surfboards that were as hollow as they could be, but still be strong enough to work well. Too light and they don't surf well, but too heavy and they don't surf well. So there's a balance point there, and that's where we try to be. Taking the board off the rocker table once the top has gone on, that is by far one of my top favorite parts. It's just you and a shaping stand, a board, and a hand plane. Everything else is out of your view. It's simple, it's pleasurable, it's quiet. You can be with your thoughts and you can just kind of be present. There's something about taking a nice sharp edge tool to a beautiful piece of wood and feeling the curls coming off and knowing that every pass that you're making, you're kind of getting it closer and closer to what you have in mind. Once we've shaped it down and the board's looking like it's supposed to look like, time for it to go into the glassing room. 4-ounce fiberglass, laying it over the board, draping it over the edges, cutting it, applying epoxy, and on the board. Once both sides are lamb coated, it's time to put in the hardware. Drill and router and install the fin box. And on the other side, we drill and put in the leash plug and a vent. There's a lot of air just naturally inside the board, and that air wants to expand and contract with temperature changes. And that vent has a little piece of Gore-Tex fabric in it, and it allows air to kind of breathe both ways, but it doesn't allow water to get in. Once all that hardware is put in, it goes back into the glassing room. We brush a nice, beautiful, thick coat of epoxy over the whole surface, and that we call a gloss coat. That's supposed to look beautiful and glossy and shiny and flawless. You get to see that board come to life. Whatever the colors in the wood, they really come out. It just makes it look like candy. You just want to touch it and run your hands down it, and it's just kind of the icing on the cake. Once everything is hard, we put it into what we call the oven, get that epoxy to cure, really kind of bake it, and just get it to harden. Put in the fin, screw in the vent, and ship it out. We just love the idea of building something that's sustainable and long-lasting and made by hand. Kind of gives you a deeper connection to the product over something you might buy on a shelf. When a customer gets the board, they feel it. They 100% feel the amount of work and the amount of passion that went into the board. So I'm not really looking at hours and efficiency. We're looking at like doing it right and enjoying it as we go.
Ma Baoli, better known as Gang La, is one of the 4 Grand Marshals leading New York's Pride Parade this year. But in the country he comes from, being gay is still a social taboo. The CEO of a Beijing-based internet company is on a mission to improve the lives of millions of gay men in China.
对于每一个 LGBT 人群来说，即使这个国家不允许你跟同性爱人结婚，但是你仍然要勇敢地去选择你自己的生活，你仍然应该拥有幸福生活的权利。
Ma's company Blue City runs an app and a website specifically for gay men. Blued is one of the biggest gay social networking apps in the world, with an estimated 30 million registered users. Unlike most other apps, Blued is more than just dating or hookups.
大家可以在我们这个软件里面找他自己的情感，然后可以阅读相关的内容，然后可以进行一些娱乐，比如玩游戏啊，比如看直播啊等等。
Back in 2000, when Ma studied at a police school in northern China, he realized he didn't feel like everyone else.
因为他们都找女朋友，然后谈恋爱，但是我对长得好看的同性的男生，我反而觉得对我更有吸引力。所以那个时候我就到互联网上去找这样的一些资料，然后希望能够告诉我自己我到底是谁。互联网上所有的信息都是负面的，都是错的，就是说同性恋要电击疗法，要被治疗，然后要吃药等等。
After visiting some foreign websites with different attitudes to homosexuality, Ma created his own site for a Chinese audience, encouraging people that
他们也是正常的，他们不用自卑，然后也不用自杀。
Even though attitudes towards homosexuals are slowly changing in China, it's still a social stigma. The virtual world of Blued, where members can be open about their sexuality, is for most a striking contrast to their real lives. This is live streaming, a function added to Blued in late 2015, right as the internet craze was starting to take off in China. Many self-made stars like Jin make decent amounts of money by receiving audiences' virtual currencies and gifts.
我们不是彼此的初恋，初恋这种事儿多不靠谱啊。
For Kyle and Klaus, a couple who have come out, live streaming on Blued means something different.
其实我经常会收到很多粉丝的一些互动的留言，就是类似就是说你们让我们看到了同志情侣之间的一些希望啊，我看到这样的留言我是很欣慰。
The government's rules for acceptable content online may shift quickly in China, with LGBT material in a grey area. Many companies feel the chill of the recent internet crackdown, but Blue City still runs as usual. Ma has won the Chinese government's trust by helping with HIV prevention among gay men. A third of the company's staff are dedicated to screening pornographic and politically sensitive content.
我不太多的愿意去对抗，我更多的愿意去对话，去改变他们的想法。我觉得这个可能在中国来说是更有效的。
In the past 5 years, Blue City has grown from a team of 7 people to a promising business with about 250 staff. Ma said the company earned over $15 million last year, mainly through advertising and selling virtual currencies to live streaming audiences. Now the company is expanding overseas.
我希望吧，通过我们的努力，Blue能够成为全球第一家在美国纳斯达克或者是纽交所上市的这样的同质互联网公司。
This is Rich Chiga. He's a Chinese rapper by way of Indonesia, and he's very popular on the internet. This is Joji. He's a Japanese-Australian singer, and he's also very popular on the internet. Plus, Joji invented the Harlem Shake meme. Let me say that again. This guy, Joji, in the blood bathtub, invented the Harlem Shake meme. But we'll come back to that. So Rich and Joji are both signed to 88 Rising, an entertainment company hoping to build a lasting global brand that will outlive singular moments of virality. They primarily create content combining Asian culture and hip-hop, a formula that apparently pleases the internet gods greatly. They've only been around for 18 months, but they're already putting up major label numbers.
I think that we have an unprecedented collective of talent, a group of like predominantly Asian artists, you know, really like making waves globally, which from an independent point of view as well.
88's founder, Sean Miyashiro, cut his teeth launching Vice's electronic music channel, Thump. But quickly, Sean became interested in life beyond dance music.
I knew that after launching a whole content platform that I have kind of the ability and the know-how to do it again, but like for what was the question.
So Sean moved to the Bronx to start over and figure it out. He couldn't afford an office space, so he worked out of his car at the top of a grimy parking garage.
Everything kind of started here. If you look around, this is my environment. This is my serenity, really. 88 Rising was built here. Built on the grounds of LA Fitness, residence in a parking garage. I was living in the Bronx. I'm just like, damn, where the hell do I go? So I just come up here and I like, you know, I just kind of figure things out every single day. Being like, okay, what the hell is this thing? Coming here was kind of like my own kind of private office, basically. Like, to be honest, I would even go to the bathroom here. I would like take pisses here, you know what I mean? Like, it was, you know, it's just too far to go back down there. When I need Wi-Fi, I'd spend a good part of the day at Dunkin' Donuts. Hi, how are you? Can I get a chicken snack wrap?
Before 88 Rising officially launched, Sean caught a surprise break in the form of a Twitter friendship with a funny 16-year-old kid from Indonesia named Brian, who taught himself English by watching Rubik's Cube tutorial videos on YouTube. Seriously, that's true.
I thought his Twitter was genius, from the future, just crazy, and like just the shit that he was saying, like the memes he was making. But I didn't know that he rapped or anything like that. I really didn't, and he came up with that stick like 2 weeks later.
12 in the morning, pop shells for a living and baby gon' smell blood trail every minute road.
Dat Stick was Brian's first ever attempt at making a rap song, and it immediately went viral.
Everything was great about it, but the one thing that I noticed is the song was hard as hell. Just like everything about it, man. Just like, it was menacing, bro.
Soon after the video dropped, Brian signed with 88 Rising.
I'll FaceTime with Rich. Sorry for calling you Rich Chiga on my phone, Rich. Brian, he gets like super pissed off that he's saved in my phone as Rich Chiga. He's like, dude, am I not a human to you? What's good, bro?
What's good, brother?
How you doing?
Doing great. I did the sound check.
How was it?
It was tight. Hold it still glocks, but you been a bitch, suck a thick cock.
So Brian could definitely rap, but some viewers understandably took offense at a Chinese kid satirizing rap cliches and calling himself Rich Chiga. But if a group of well-known rappers saw the video and genuinely liked it, that could at least help validate Brian as a legit hip-hop artist. Plus, it could be really funny.
It was just kind of an idea that I just had on the spot. Everything that rappers say is better and funnier and smarter and wittier, you know, and it's just more entertaining. We just edit it as tight as possible, put it up, and it really worked.
12 in the morning, pop shit, still living in.
Yo, this nigga got a pouch on and a Reebok pouch. This is the hardest nigga of all time.
You said when you come for a trigger like me, that was dope.
It's just lit, and I think people will take it as a joke at first, but it's like if he ran with that and kept doing more videos like that, it's just lit.
You know, I'd never been to America before, and like all of a sudden, it's like I see like all the rappers that I listen to just like reacting to my stuff, and I was like, what? How did this happen?
The reaction video also went viral, and even led to a remix of Dat Stick featuring Wu-Tang's Ghostface.
I'll get on that track. You know what I'm saying? Yeah.
Really, on the remix?
Yeah. Oh, you know him?
And yeah, the remix went viral too. Brian has since acknowledged the misstep in his name and claims he may change it. But for the time being, he's still Rich Chiga to his fans. An ever-growing global audience, hungry for more releases from emerging talent around the world.
I didn't know that it was gonna be this impactful and this important to people, and I'm very thankful and blessed that it has. And every day now that I wake up, it's like it's just like a new mission every day.
A major part of that mission involves Joji. Remember the bloody bath guy? He's a former YouTube personality in the middle of a career transition.
The sound of this song, Will He, it's like a trap song that you can like slow dance to. Awkward prom shit, you know what I mean? I used to do crazy episodic internet videos. It was going well, and one day it was me and a few friends just in a room. We were casually chilling, and then someone plays the song, and it's brand new at the time. I happened to have a lot of costumes laying around, so I told the other guys, I was like, get in these costumes and let's just dance to it, like who cares? We were like, okay, let's just go crazy at the drop. So that video goes up, I go to sleep, and the next morning, everyone's doing it, like next morning. That taught me a lot about the internet, how people want to just be a part of something. And from that point on, something changed, and I was a little better at understanding demographics and people and what they want to see and what they want to hear. I was friends with a couple other artists who were affiliated with 88, and then I also started to realize that 88 is the bridge between Western and Asian entertainment, and I really wanted to be a part of that.
Joji just released the In Tongues EP, his first project as a serious artist.
Joji's In Tongues record came out a couple weeks ago. It's #2 on Billboard on the R&B charts, which is crazy for independent release, and he's like a brand new artist.
And the success is even more impressive, knowing he went from creating something like this,
it's just Taco Bell, what could possibly go wrong?
to creating something like this, the newest music video for his song Demons. Tonight, Rich Chiga has a show in New York City. Tickets sold out in an hour.
I came here, I'm first online. I was here at 1. I was the third person online.
So why'd you get here so early?
Because I want to see Rich Chiga. I want to touch him.
What do you guys think of Joji?
Oh my God!
That's my dad, son.
You guys cop the new EP or like?
Yeah. I woke up at 6 in the morning just to cop that shit. And then I listened to it, and that shit started making me cry.
This is actually kind of exciting. Every time, this never gets old. Like, you live online and social media, but like, there's nothing like just being with the people.
said I should quit.
More often than not, viral success happens by accident. And then after an appearance on Ellen or Jimmy Kimmel, the creator's star power fizzles out. But Idiot Rising has figured out how to turn potential gimmicks into brands with an actual following that keeps coming back for the next thing.
Oh, shit!
So keep an eye out for Idiot's next move. But more than likely, it won't be covered on network television or terrestrial radio. Although, as they've already proven, nowadays that really doesn't matter.
Online retailer Farfetch is betting it can shape the future. This is its concept store, showcasing the latest in retail tech.
How do you capture all of that fantastic information that you gather in store with customers, touch and feel products? And we've created a concept called the connected rail. And this is using a combination of RFID and ultrasound. The RFID signal recognizes the product, and the ultrasound recognizes the movement. Take the product off, and then you'll start to see your products appear. And essentially, it's like online browsing behavior. Whichever products you touch and pick up in the store are automatically sent to your app. This is effectively what you've created is your in-store wish list. In the middle, you'll see essentially a hologram of the product. What the customer sees, they control the experience on a touch device. What this allows the customer to do is take elements of products and then add their own style to it. Right, so this is the connected mirror. So in this example, I see my products. I select a coat, and that's tried it, and it's slightly too big for me. So what I can do is choose an alternative size and send a request to the sales associate, and they'll bring that size to me in the fitting room mirror. You'll also see that we've got some product recommendations here. Crucially, the sales associate's able to push items into the mirror from their device. If you wanted to, you could simply use the mirror and pay and go. Your items would then be packed and dispatched to you afterwards.
Do you want me to turn you so you're looking outwards? Yes, please. How about there? First time we came out with B, Jade said it feels like I've been released from prison. Do you want these, Mrs? Definitely. Definitely. Right. Yeah. And she could say hello to everybody, people she hadn't seen for months. It's Jade. It's Jade. Oh. So you can talk to Jade through this. Hi, Katie. She's there. Hi.
Every time anyone's seen her, they want to know why she's there. And it's kind of the opposite of when you're in a wheelchair and people see you and they kind of go, oh, should I look? I don't know what the right protocol is. When there's a tiny robot with its bright little eyes going around just looking happy everywhere, it really opens you up for conversation.
You've got some friends here, look. Hiya.
When I saw her for the first time, I remember thinking, this is going to change things. This is one of those points where if this was a book, this would be the cliffhanger. condition called Ehlers-Danlos syndrome, which means that I have a lot of dislocations, there's a lot of pain, and a lot of seizures and whatnot. So I can end up on my own in my room for long periods of time. A lot of the time, with a condition like my own, of course there's the pain, and the pain is bad, and the dislocations are bad, and the seizures and being in paralysis and never knowing whether you're going to be able to wake up properly tomorrow, that's bad. But what's worse still is being able to count the number of people you see a day on one hand.
Are you ready?
Sure am, I'm just hoping the connection's going to stay.
Yeah, me too. Alright, here we go.
When you're used to just the same little metre by metre and a half window every day, and you've been there for months, being able to just see the sky from somewhere else, or the tops of trees, or a sign, is incredible. Or being able to have that kind of chat in the car that most people would probably take for granted.
I'm going to go past Grandma and Grandad so you can give them a wave. Now, if Jade is particularly seizure-y, she can still take part. And that's brilliant, really, because before she would just be left in a bed or in a house with just her carers. It's quite a small world, that.
Right, so there's one of her. Here, this costume I'm busy making at the moment. When I'm not on bed rest and I'm not just wearing pyjamas all the time, I enjoy being able to dress as different characters and go to Comic Cons and that kind of thing, because it just lets me show a different side of myself, and it's a bit of fun. If you can't go out that often, you've got to enjoy it when you do.
Was that? Good.
It's one of those weird things where I want to not have to use B because I want to be well enough to be able to go to those places myself. Like, it really makes a big difference to me to be able to go into school. But the thing is, with my condition fluctuating all of the time, I can't go into school reliably. He's written it out bigger on the board. Thank you. Today's the first day that I've been in school via B, and so far it's interesting. Still a few little things that we need to work out, but for the most part I think it's going fairly well. And it's brilliant because I can really tell the difference between today and yesterday. How yesterday I forced myself to go into school when I wasn't very well, and I was really tired afterwards and ended up having loads of seizures, whereas today I've been able to do all of the work. I've been able to keep a clear head and not be ill, which means I'm able to be more focused on my schoolwork.
So there is my first step of working, is to simplify root 8. The algebra test is next week.
Now I'm trying to make friendships which I'll be able to maintain with B. Before that, I end up letting people down quite often. B gives me hope, yeah. She's just always there. And if I can't do something, she can. And if I need sort of assistance to be able to make commitments, then she's there, and she means that I feel like a more valuable person because I'm more reliable.
When it debuted, the 4G wireless we have today allowed people for the first time to hit the road and explore unknown places with only a smartphone for directions. When 5G arrives, it could enable driverless cars to take us there as well. 5G stands for 5th generation mobile networks or wireless systems. It's insanely fast and can accommodate a lot more connected devices. But the reason it's being called revolutionary is because 5G will allow connected devices to speak to each other as well as people.
Right now we're living in a world where really it's a one-way experience.
That's Bloomberg tech reporter Ian King.
The network talks to your phone, you look at your phone and access data, then you send something back to the network. What we're being told about 5G is that really for the first time we're going to see machines communicating with each other over mobile networks in a meaningful way.
5G could end up being 100 times faster than what we have now, with speeds that could reach 20 gigabits per second. In plain English, that means downloading a full-length HD movie in seconds. 5G will also increase total bandwidth, which we will need in order to accommodate the growing Internet of Things. We're talking about the class of devices like internet-connected refrigerators, thermostats, dog collars, but 5G will enable many, many more.
Things like your utility network, factories, where machines are just sat there not connected at all. Suddenly they're all going to be connected. Suddenly we're going to be able to have real-time monitoring. Other things like cars, like utility poles, like your light, the light poles.
But perhaps the biggest advance will be a huge reduction in communication lag time, known as latency. A network of driverless cars will need the speed of 5G to ping each other multiple times per second to avoid collisions. Near instantaneous data transfers could allow doctors to perform surgery remotely with a robotic scalpel. So how will all this work? First, you need to improve network density.
And that's just a fancy word for saying you put more towers out there. What we're being told is that's not actually the case with 5G.
The idea is 5G will not only use the existing mobile spectrum, but also tap into higher frequencies called millimeter waves. Millimeter waves can carry more data, but only travel short distances. This may mean you'll see a lot more of these base stations around town. And the new towers may have as many as 100 antenna ports, compared to about a dozen on 4G cell towers. So when will we get 5G? Getting 5G ready is expected to cost providers $275 billion over 7 years in the US alone. Look for the first 5G service to pop up in big cities sometime in 2019.
The cubicle represents a tyranny. It confines your imagination, your thoughts, into a small physical area. Imagine pretty much every software engineer or finance person being able to, disconnect from their desk and look at holographic monitors on a beach and doing their work from there. That's not going to be science fiction. It's the modern office place.
Silicon Valley is all about building the future. A startup called Meta thinks it's getting there first, thanks to a big bet that it's made on augmented reality.
How are you?
Good, thank you. Welcome to Meta.
Thank you.
Call it a 360-degree office where you can spatialize your thoughts as part of your workflow for education, architecture, design, engineering, etc.
People often mix up augmented reality with virtual reality. VR totally blocks your ability to see or hear the real world. AR overlays holograms onto what you already see. Meta has tried to make its version of the workspace feel familiar.
You grab the hologram instead of using a controller or a mouse, and your brain already knows how to do it. In other words, we've designed an operating system that humanity has always known how to use. So you can see this eyeball, which is, by the way, photorealistic. You can see my hand is occluding the eyeball, and now the eyeball is occluding my hand, right? You see those two circles? They get small, and then they turn into this glowing white ball, and then I can move my hand around supernaturally. I can do this with two hands and rotate the thing. I could stretch it. I can throw it back right into the shelving system, and that's all you have to learn to become a modern worker.
And to prove this, the employees at Meta have started to get rid of their computer monitors, trading them in for Meta's augmented reality headsets. Mayron thinks that in less than a decade, we'll all be just wearing strips of glass that can project holograms.
In the early 80s, everybody had computers on their desktop, but no one was using them because they had a lot of work to do. So they were still using typewriters. And at some point, the CEO took all the typewriters away and everybody was forced to use their computers. So it's very exciting to see a new generation of technology, a new paradigm.
I consider us like pioneers in the holographic wild. I'm pulling up my browser with my hands and sending out emails to colleagues and just kind of really acclimating to the new environment.
Now you're putting on my computer, essentially. Our digital lives live on our phones. We have all of our pictures and notes and all these kinds of things. So why don't you write yourself a little sticky note? I like it. And go ahead and just take your fist right over the top of the sticky note and close your fist. And now.
Oh, what? Meta's own transition to augmented reality has run into plenty of unexpected problems. And it's still going to be a while before you'll start to see these devices in your office. But I think it's a future worth waiting for.
If we could see these holograms between us, we will have been able to share our work with one another more naturally, more efficiently, and more productively than ever before. Humanity will have evolved slightly.
This is Hatsune Miku, Japan's sensational virtual pop star. She's released over 100,000 songs in multiple languages and performed sold-out concerts around the world. Her image has appeared in games, on TV, in car races, and is even etched on the side of a Japanese space rocket.
I came for Hatsune Miku, Carlos.
She's Lady Gaga's favorite digital pop star and opened shows for her in the US 3 years ago. Tens of thousands of fans attended her exhibition and live shows near Tokyo recently.
理想のアイドルっていうと、どの曲でもミクはすごい綺麗に歌ってくれる。
他没有缺点啊，没有任何让我们感到不开心的一些新闻。
She's everything to everybody. That's probably why she's so popular.
Miku's creator Hiroyuki Ito and his Sapporo-based company have been developing the virtual diva for over 10 years.
初音ミクとは、キャラクターとしてすごく、YouTube とかで検索すると、たくさんの初音ミクが出てくるんですけども、元々の、初音ミクのその原点は歌声を合成する、ソフトウェアなんです。
Both the software and character are named Hatsune Miku, meaning the first sound of the future. Originally based on Yamaha's Vocaloid technology, Miku the software has a sound bank containing voice samples and a huge array of tools. You input the melody and lyrics, then Miku the character sings them. To date, Krypton has sold 120,000 software licenses at $200 each to fans around the world who use it to create numerous songs and share them online. Some of the fan-created songs are chosen to be part of Miku's concerts, for which they're paid a royalty fee.
もともと初音ミクっていうその、存在自体がそのボトムアップって言いますか、中にはアマチュアクリエイターじゃなくて今もうすでに、プロになって活躍している方もいらっしゃるんですけれども。
The company also has other revenue streams. It makes money from merchandising, licensing deals, and concert ticket sales. According to the real-life musicians who perform with Hatsune Miku, the virtual pop star is interesting and surprising.
今年で3年ぐらい、ちょうど3年ぐらいになってきて、ライブも数十本、数百本だったと。そういうことが演奏によって起こせるための、そういう器みたいな感じになってます。初音ミクらしさって僕はあんまりない。初音ミクって何だってあり。
For Ito, Miku has the potential to change the way we think about music.
そういう新しいそのテクノロジーによって新しい音楽のあり方っていうものを模索していきたいと思っていました。
And for her fans, it goes even further.
初音ミクって魂がないので、だからみんな魂を作り上げるために存在する。
Now, there are a lot of fitness gadgets out there. In my quest to get fit, I tested 17 of them over the last few months. At least one personal trainer I know was a little bit skeptical.
Yeah, I've been watching these new technologies come to the market for almost as long as I've been a personal trainer. They're just tricks and tropes. They're not much different than the Bowflex machines or, to be honest, the original Jane Fonda workout video.
But some of these gadgets that are just coming to the market do so much more than what they used to do, just tracking your activities. Out of all of them, this chest strap was my favorite. It comes with a robot coach that points to the future, one where you might not need a human trainer at all. And it works like this. You wear the chest strap so that it can read your heart rate, and that connects to Move's free app that talks to you.
Welcome to Move Heart Rate Hit Outdoor Running. Let's get moving and warm up in Zone 2.
Move's computerized coach tells you what to do at that exact moment, whether you're running outside or you're doing body weight exercises indoors.
Swing your arms faster to get your legs moving quicker. Let's crush this round.
And by reading your heart rate, she knows exactly how hard you're working. She keeps you honest.
Way to go, you are in the target zone. Keep pushing, you're almost at the end of the round. Don't give up.
I've been running for 7 years now, and my biggest problem is that I never push myself hard enough. I end up going on the same slow, comfortable 30-minute jog, but the Move HR Burn blasted me out of that rut. By the end of these half-hour exercises, I was drenched in sweat in a way that I never am when I work out alone. Training with a real person is great, whether that's your group instructor or your coach or your personal trainer, but humans, they're expensive. For the rest of us, this $60 gadget is all you need.
what does it take to change the world? A big army? A cure to a pandemic? A revolution? All of these take either a lot of people, thousands of hours, or massive amounts of space. But for Julian Assange, all he needs is one room, an internet connection, and the world will listen. Assange is located here, and more specifically, right here. And from that location, he's posted government secrets, classified documents, and leaked emails from some of the world's most powerful people. And in doing so, has been labeled a hero, a villain, a nihilist, and everything in between. This is how an Australian programmer sequestered in the Ecuadorian embassy in London became one of the most influential and notorious people in the world. Born in 1971 in Townsville, Australia, Assange has always been on the move. Living in over 30 homes by the time he was in his mid-teens, Assange, along with his mother and half-brother, finally settled down in Melbourne. His introduction to hacking started at 16 when he was given a Commodore 64, which he attached to a modem. He attended the University of Melbourne, where he studied programming, physics, and mathematics. He never graduated, but that doesn't mean he didn't get an education. By 1991, Assange hacked into the Pentagon, US Navy, and other branches of the US government. In 1996, he was caught by the Australian Federal Police and charged with over 30 counts of hacking and computer-related crimes. He didn't get any jail time, but he was fined $2,100.
I think the first taste of what would come later was the hacking that he did as a young programmer, and that really sort of foreshadowed a healthy skepticism of the use and abuse of technology by governments.
That's Vernon Silver.
I'm a reporter for Bloomberg's investigations team.
Assange's youth as a hacker laid the foundation for him to start WikiLeaks in 2006. But what is WikiLeaks? It's a website that posts unfiltered, usually classified documents. What separates it from every other media outlet is that they have no editorial hierarchy. With a publication like the New York Times, information comes in, they take that information, package it, then disseminate it for the public to see. WikiLeaks, however, cuts out the middleman.
WikiLeaks gathers information, most of it given to them anonymously. So what they're doing is really very simple. They get the information in one end from who gives it to them and out the other with sometimes minimal interference. Julian Assange is the leader of that, the mastermind, the creator, and really, because he thinks of it as a journalistic enterprise, the editor-in-chief.
But every story starts with a source, and Assange has some unconventional sources.
Julian Assange does not hack as far as we know. He is the recipient of people who are either insiders who give him secret documents or hacked emails from a foreign power.
That's Eli Lake.
I am a columnist for Bloomberg.
And there was no source bigger for Assange than Chelsea Manning, who used to be known as U.S. soldier Bradley Manning. In 2010, Manning provided Assange and WikiLeaks with hundreds of thousands of leaked government documents. WikiLeaks quietly began releasing the documents in February of 2010, then made big headlines in April by posting what is now known as the Collateral Murder video.
Come on, fire!
It was a vivid, graphic video. It changed the debate on the Iraq War, and importantly, it put WikiLeaks on the map when they put it online, and they couldn't be ignored at that point.
And those leaks were just the beginning. They went on to post more than 90,000 leaked documents known as the Afghan war logs, 390,000 documents known as the Iraq war logs, and 250,000 private messages between diplomats called cables in what is now known as Cablegate. These leaks were met with very real ethical questions.
The problem with publishing those cables was that a number of confidential sources for U.S. diplomats who faced real danger when their names were exposed.
Then Secretary of State Hillary Clinton drove the point home that
every country, including the United States, must be able to have candid conversations about the people and nations with whom they deal.
Shortly after Cablegate, the Swedish government issued an arrest warrant for Assange on allegations of rape and molestation. He claimed the allegations were fabricated to get him extradited to the United States, a claim the U.S. government denied. Either way, Assange's next move was
to seek refuge in the Ecuadorian embassy, which really was the beginning of the new chapter in his life and what we're dealing with now, which is him being stuck in London.
What was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped in the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft to the Trans-Pacific Partnership. And then came the 2016 U.S. election.
Thousands of leaked emails showed Democratic Party officials possibly plotting against Bernie Sanders in his race against Hillary Clinton.
Over the course of 68 days, WikiLeaks released 20,000 confidential Democratic National Committee emails. In terms of the presidential race, if you look right here, when Assange released the first batch of emails, Trump actually takes his first lead against Clinton.
I think we've had enough of the Clintons, in all fairness. Don't you think?
Once WikiLeaks started exposing secrets of the Democratic Party, Julian Assange became a hero to many on the right. Public opinion kind of flip-flopped.
WikiLeaks.
From the emails, we now know Hillary Clinton's campaign manager makes risotto, and also how the DNC squashed Bernie Sanders' campaign. One thing we don't know is who gave Assange the stolen emails in the first place.
Many leading Democrats say they suspect it was the Russians. They released an analysis from a private cybersecurity firm that had said it was the Russians.
But Assange claims
our source is not the Russian government, and it is not a state party.
So this is where we stand today. The public still doesn't know who provided the emails to WikiLeaks. Meanwhile, Assange is still running WikiLeaks and still releasing documents. In March 2017, he started publishing documents from the CIA's Center for Cyber Intelligence called Vault 7.
The CIA, the agency charged with finding and keeping our top secrets, can't keep its own secrets.
As long as Assange has a connection to the world, no government secret will be too far from exposure.
Julian Assange is still in the embassy. Maybe he'll leave, maybe he won't. Kind of regardless, his work has been done. He's changed the way people think about their governments, about their own secrets, about their own hackability, and really the world has changed because of him.
I'm about to expose everything you won't admit. And action! This entire video is based on a true story. When I do like motivational speeches or even tell myself like, love yourself and you should love yourself.
This is Lily Singh, but to fans all over the world, she's the YouTube star Superwoman.
What if everyone is a girl, superwoman? I know we can change the world for the better, one positive day at a time.
My parents now know what I do. They didn't know what I did for a long time in the beginning of my career. I was just making videos in my room. They had no idea.
Mom, Dad, have you seen my keys? I can't find them anywhere. Because you're always on phone.
Until someone called them, like a family member from another part of Canada was like,
Canada,
is your daughter making videos? And my mom was like, I don't know, Lily, are you making videos?
Just making videos grew into an entire career. Today, Lily's YouTube channel has some 12 million subscribers, over 2 billion views, and guest stars like Michelle Obama, Dwayne "The Rock" Johnson, and Seth Rogen.
I think a lot of young girls are raised to believe that you're gonna go to school and then graduate and then get married and then get a job and have kids.
And Lily was on that path, all the way through a psychology degree at York University in Toronto. But when she started thinking about a career,
I started to immensely panic and think something was wrong with me because I tried to figure out my life and it wasn't working in that straight line.
It was 2010 and YouTube was only 5 years old.
I thought nothing of YouTube. I was probably the last person in my circle of friends to discover YouTube. And I remember when I did, I thought, this is so strange. There's people making videos in their rooms and other people are watching them.
So she figured, why not give it a shot?
I one day posted a video because I was sad and I wanted to be creative and happy.
She didn't know how to edit video or write scripts, so she winged it.
It was so bad and so cringe, and my expectation was literally nothing. I was like, I'm gonna put this video up, a couple of my friends are gonna watch it, probably make fun of me, and that's gonna be the end of this. The second and third video came from, wait, 70 people watched my first one, can I get 80 to watch the next one?
She kept creating, she kept posting, and the viewers kept coming. Lily had found an audience.
A lot of the comments were, oh my God, there's a brown girl on YouTube.
More specifically, Indian. Lily's parents immigrated to Canada from India, and Lily was born and raised in Scarborough, near Toronto.
My home life was awesome. My parents, even though I portrayed them to be quite strict in my videos.
Oi, Lily, where the rest of your skirt, huh? I teach you like this to walk around like this, showing everything to everyone?
They actually aren't like that at all. They're pretty modern and pretty cool.
Your dress is short. Don't know what for.
And were pretty lenient with me. I mean, I got away with a lot of things. I was a brat. I was a brat.
She had a different idea of what she wanted out of life than other kids. In a grade school graduation slideshow, her classmates said they wanted to be lawyers and doctors.
And then I came up and I was like, rapper.
Making out with your friends, man. But then you say that you hate hoes.
I could just feel my parents being like, why?
Because that's just not something women really did in the Singh family.
I know there was a ton of people that weren't happy about my birth being a female, so I think, and that's some real-ish, but it's a real thing. The best thing I could have done to prove to so many people that didn't want my mom to have a daughter was to become Superwoman.
What up, everyone? It's a girl, Superwoman.
It was the name of Lily's favorite hip-hop song by Lil Mo featuring Fabulous.
I love the song so much because it was one of the only songs at the time that was an empowering female song, where Lil Mo's going on about, like, I will save guys with my superpowers, and I will save girls with my superpowers, and I am the Superwoman. I thought, this name that I've had for so long that empowered me when I was younger, I'm gonna make this my screen name.
Maybe there should be a new series.
Superwoman didn't just burst onto the scene overnight with a viral video. It was a steady climb fueled by hard work.
The moment that I thought this is going somewhere and this could be a career was the first time I performed internationally. It was in India. And it was the first time where I was truly across the world and people knew my videos.
Singh has transformed herself from a bratty kid to an internet personality to a media mogul. She started a feature film, A Trip to Unicorn Island, in 2016. And her book, How to Be a Boss, hit the New York Times bestseller list in 2017 while she was on a 30-city international tour. Lily started out with the goal of getting millions of subscribers and financial security.
Hurry the hell up!
But after surpassing those goals, success has new meaning.
I've really come to terms with the fact that my definition of success is what's the best legacy I can leave behind. And it's not the number of views, the number of subscribers. It is the number of people that can say, this girl changed my life or changed something in my life positively.
CTE is often found in the brains of deceased athletes, military veterans, and others with a history of repetitive brain trauma. Hundreds have donated their brains to the VA Boston University Concussion Legacy Foundation Brain Bank.
This is a former NFL player who died in his early 70s, and this is a veteran who also died in his early 70s.
Dr. Ann McKee dissects these brains.
The hippocampus and the mammillary bodies are very important for memory. I can see that they're slightly affected.
McKee recently dissected the brain of former New England Patriots player Aaron Hernandez, who was convicted of murder and later committed suicide.
You'll see right away that the brain is showing signs of shrinkage. You can see the crevices in the brain that you can't see in the normal.
McKee says Hernandez's severe case of CTE impacted his decision-making, depression, and ability to control rage and aggression. Right now, she thinks we're underestimating how many people have CTE.
We were able to distinguish between CTE and controls and CTE and Alzheimer's disease. The next question is, can we do this in the blood, and can we do this in living people? And we aren't there yet with those answers.
But the need for a diagnosis in the living is motivating companies such as Quanterix in Lexington, Massachusetts, to work faster on technology that could diagnose concussions and CTE in as few as 30 minutes. Kevin Rusovsky is the CEO.
It's like a high-powered microscope, and so by doing that, we can see little biomarkers that you couldn't see before in the blood.
Quanterix received a grant from the NFL and just went public. Since then, its stock is up more than 40%. The company sells a machine called Simoa for $175,000 to other biotechs, hospitals, and researchers.
And for the first time in history, we're able to see brain health in blood, and that's a major breakthrough, and that's leading to less invasive testing, and we've already been able to see evidence of concussions, and there's the beginning evidence of being able to see the accumulated effect of concussions.
Quanterix is also trying to detect Alzheimer's disease, multiple sclerosis, and ALS. Rusovsky says he thinks diagnosing concussions will be easier than diagnosing CTE.
Diagnosing CT in the living probably is a couple years away. We're real excited to see the progress, but reducing some of that work into actual tests.
Diagnosed CTE in the blood are Athlon Medical and Exosome Sciences, and New York's Mount Sinai Hospital is scanning for the disease in the living. But it's just one step in a series of questions for those with serious head trauma. There's still no cure for CTE.
Even if we had a great idea for a treatment, there's no way to test whether it's effective or not. So that's the enormous advance that we'll get if we can develop a biomarker for this disease.
In Boston, Ann Mostu, Bloomberg News.
Wine is a $300 billion global industry where one person's opinion can make fortunes or break them. That's because of this man, Robert Parker, and his newsletter, The Wine Advocate. For 3 decades, he dominated as the world's most influential wine critic. Now Parker's protege is building an empire of his own. Antonio Galloni runs Venice.
Antonio, tell me, what are you trying to build at Venice?
Well, at Venice, we started with the idea in 2013 of building a world-class platform. We have a database of about 250,000 professionally written reviews. On Delectable, we have 7 million user reviews. Through Delectable, we also have a partnership with Whole Foods and several other partnerships that we can't announce just yet. And when you put that all together, what we have is something that no other company in our space can even come close to.
Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Venice is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was at his prime. You know, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did? And should anyone's palate dominate it the way his did?
I just think the world is very different today. You know, I mean, it's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that 1 or 2 people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, you know, it's like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have 2 guys who are ahead of that and 1 knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. You know, that was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left the Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company, and that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
In the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW.
Some examples. These tag team partners are called babyfaces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! That's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette.
I'm a writer for Bloomberg News for the global business team.
And Kim Basine.
And I'm the U.S. luxury reporter at Bloomberg.
To find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW,
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
With violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner, and they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag #GiveDivasAChance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to big stars' entrance music and their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves ahead.
Laura, thank you very much for coming here.
Thanks for having me.
I've always been relieved ever since you were appointed, because at least until your appointment, I seem to have the most unpronounceable name. But now we will keep it as Dara and John. This conference is called The Year Ahead, but in your case, you are close to 6 months into the job. And I wondered what you saw in terms of the year ahead at Uber as your biggest challenge. What's the thing that you think about most when it comes to 2018?
We definitely have our share of challenges at Uber. And for me, where I want to get Uber to the year ahead is a year of normalcy. 2017 was, I think, will go down as one of the most difficult years for any company out there. And I have to give credit to the Uber team and the employees there. It is a group of true believers who believe in our mission, who believe in mobility as a service being available to consumers everywhere at a reasonable cost. And what my job in 2018 is to get rid of the distractions and get the company back to business, get the company back to normalcy. There's a lot that we've done in the past 6 months as far as bringing new investors, driving a new culture and norms where doing the right thing, period, comes first, bringing a new management team, et cetera. There's a lot that we've gotten done, but this is a company that knows how to execute. This is a service. Mobility as a service is something that's universal, that's needed in the world, and I just want to get back to doing business.
It's quite interesting. You said true believers.
Yeah.
Normally, true believers are the last possible people where you're able to change a culture. Can you explain a bit about that?
Well, I think that they understand that mobility as a service, bringing the cost of transportation down, making transportation services available to anyone and everyone on a local basis, and partnering with cities to be a solution to traffic, to pollution, et cetera, that is a mission that they all believe in. And I think that they, having seen what happened in 2017, to some extent the crisis, the enormous crisis that the company has gone through, is a benefit because everybody at the company knows now that we need to change, that we need to break with the past as far as the way the company was run. We need to go from growth at any cost to responsible growth and growth in partnership with other players out there. That's clear, but now I've got to kind of get the company down to the normalcy of execution, of building great technology, and I think we're going to get there. It's still some tough sledding early on, but I absolutely think we're going to get there.
When you talk about execution, is profits one of the things you want to get? I think you lost $4 billion last year.
Well, profits,
peanuts by the standards of
profits would help. So at some point, we absolutely have to become profitable, and that's part of the plan.
But do you have a kind of goal for that? Do you think you should be profitable by 2022 or by 2020?
I think that we'll be profitable before 2022. This is the business itself.
Do you want to come back a bit closer, 2020?
Yeah, listen, it's not going to, I don't want to name a specific year, but this is a business that the core business, the ride-sharing business, can be profitable within 3 years. We will continue to make very aggressive investments in building out autonomy because we think that's a terrific opportunity for building out new technologies such as Uber Elevate, where near-term profitability is not a goal, but long-term growth is. So we will look to balance near-term profitability, but as a company, we will always be a company that makes big, bold bets and takes big risks.
To what extent, though, do you think that drive to become profitable fights against a little bit of this culture change? If you want to make, you talked about making money, but not at all costs. Do those two things spar against each other?
I don't think that profitability and culture are their issue. It's the company in the past was willing to make trade-offs as it related to how it did business. And I think was guilty of hubris, was guilty of thinking that they knew better than others. And I think that what we know now clearly is that breakneck growth can hide cultural issues, that there are no excuses for not doing the right thing, and that you do have to make trade-offs. And as a management team, we're specifically talking about those trade-offs that you have to make. We have to be a little more patient sometimes because working with governments, regulators, et cetera, sometimes takes longer, but in the end, you build a more lasting business. And so maybe what we went through was necessary, but we're here. We can control our actions from this moment onwards, and I think everyone at Uber from this moment onwards wants to build a great company, not only in terms of growth, but in terms of the kind of company anyone would want to work at.
Can I ask you one thing which you have got as sort of hangover from last year, which is all the regulatory problems, and particularly all the cases against you? I think there are 6 criminal probes or whatever going on.
The lawyers are lining up outside the door.
Which one do you sort of think? Which one do you fear most? I suppose out of these different things.
Listen, I think that all of them are serious issues, and my response is that we're going to be transparent and we're going to take responsibility for our actions in the past. I do think that there are certain circumstances where there was smoke but no fire. And I think as a company, we have to defend ourselves and work within kind of the appropriate frameworks. And my goal is just to get beyond this stuff.
But some of these things like pricing policies, surely they go right to the heart of what Uber is, or am I wrong about that?
Yeah, I think they do, but I think that there's a way of being smart but transparent at the same time, and that's where we've got to take the company.
Take me through governments. When you talk to governments privately, do they talk any differently than they do publicly?
Governments?
Yes, governments.
I think that they are honestly a bit relieved with how we are engaging with them, because I think that the engagement is now real. I think they feel like we're out there, we're genuine because we've learned our lessons of the past, and I do think that we can take, for example, the data that we have in terms of traffic and in terms of movement of our drivers and riders, and we can use that data to partner up with cities in order to solve congestion issues, because congestion doesn't help anyone. It wastes enormous amounts of time for consumers. It hurts the environment. And I think that we are aligned with cities, for example, to partner with them in a fundamental way to solve these problems. And I do think that when these are conversations that a number of regulators and cities have wanted to have with us for many years, and I think we are really engaging with them at a depth that I think is going to create a real win-win going forward.
Do you think you were too confrontational on this before?
Yeah, I do. I think that the company was pushing growth. And listen, any innovator, to some extent, the innovation is about questioning past kind of present practices. It's about breaking things, the Facebook breaking things. We just went a step and a half too far. And what I want to keep, hopefully, is the best of both worlds, which is this spirit of innovation, the spirit of can-do, et cetera, but the responsibility of partnership. We don't know better than you. We're actually going to work with you, of actually having dialogue and respect for our city partners, for regulators, and then continuing to take risks and continuing to do daring things. And I think we can accomplish that.
Imagine this audience here is a collection of mayors or a collection of city officials, and you want to depict, this is the Year Ahead conference, depict what the years ahead in this thing are going to be like. How far is driverless cars going to go? You talked just a few days ago about the idea of there being flying cars in 10 years' time. Can you just give a description of what you think transport is going to look like?
Well, I think that we think there are three keys to transport and where the industry is going: autonomous, electric, and shared. And I think all three are necessary in order to get to the next level of city planning, et cetera. There are many cities where up to a fifth of the space taken in these cities is taken by parking and storing these cars. And so I do think that you need autonomous, you need electric, and you need shared. And I do think it's going to take some time. True autonomy for every single use case is some ways away. What we bring to bear is our developing autonomy, and we will have autonomous cars on the road, I believe, within the next 18 months, not as a kind of a test case, but as a real case out there. And over a period of time, we're going to bring autonomous transportation and feather it in with the non-autonomous transportation with drivers.
What does feathering in mean?
Feathering
mean
means
to a layman like
feathering
me?
crashing. Yeah, feathering in means if you're, for example, in Phoenix, and you make a request to go from A to B, which is what you do with Uber, there will be 95% of cases where we may not have everything mapped perfectly, or the weather may not be the right weather, or there may be an accident on the road, or you may not have 2 or 3 ways of getting from A to B, where you may say, you know what, that's not an autonomous use case. We're going to send a driver to pick that person up. For 5% of cases, everything is going to fall into place. And we will send an autonomous car. The user will be able to pick, do you want there's an autonomous car, yes or no, and we'll be able to service that A for B. That 5% is going to go to 10 and 15 and 20 as our computers and our algorithms learn more and more about what it takes to drive in a city in a real life situation. And every minute of every day, that driver, that computer is going to get better and know Phoenix better and better and better. And in 5 years, we'll have the perfect driver in Phoenix. We will have to retrain that driver in every single city. We're going to have to build out 3D maps of these cities. And it will take time, but over a period of time, you essentially have a driver who becomes the perfect driver. It'll take 10 to 15 years, but that's the feathering in that I'm talking about.
And will a child born today, will they ever need to learn how to drive?
A child born today? No, I don't think so.
So within sort of 20 years from now, we will...
I don't think so. Listen, I hear some groans.
And also,
listen, I heard a couple of groans. 1.3 million people die from car crashes every year. 1.3 million people die from car crashes every year. That doesn't count an estimated 20 to 50 million people that are injured. Okay, this is actually a public safety issue. If you look at cars, 96% of cars, 96% of time, cars are sitting there not being used. It is a huge amount of pollution that's caused by these cars being in the road, and a huge amount of wasted time. So the safety is there. Electrification is absolutely key, and sharing these platforms is going to allow us to be much safer and also put our assets where they add value.
But it's quite interesting because when you first came in, I remember you sounding somewhat more skeptical about self-driving cars. You've been converted. Is that a?
The choir has spoken, and I'm listening. It's pretty exciting technology out there. But again, it will be a hybrid technology for some period of time.
What about flying cars? That came as a slight surprise.
Yes, that's a great project that we're working on. It's called Uber Elevate. And it is actually about battery technology.
It would have helped a lot of people here.
I know. I wish that I was available. We'll launch it here if we can. But battery technology is allowing us to have multiple rotors on planes, or helicopters, if you want to call them that. These rotors that are much smaller will be much quieter than helicopters are. Much quieter, much safer. If you add sharing into the equation, you can actually get the economics of going from A to B. We think within 5 to 7 years to a place where normal people would think about taking these flying cars. That'll be the beginning, and then it's about scaling. And we're working with a number of partners right now.
Do you think the regulation on flying cars, I've heard some proponents of it argue that it might be easier than it has been on driverless cars, because driverless cars you have to deal with existing roads, existing everything. Flying cars, essentially you're going into unconquered space.
I think that mayors that are forward-thinking understand that traffic and pollution are a real issue, and I think flying cars can be a significant solution to traffic issues in cities. And these cars, to start with, they're going to be very specific. They'll be kind of highways in the air. There'll be very specific routes that these flying cars go on. They're not going to be able to take you to your backyard and land in your backyard. There'll be these skyports. So there'll be very specific routes that you go on. And I think if you build a regulatory framework that has that kind of structure around it, I think you get to a better solve.
Can I drag you back somewhat reluctantly back to the real world? But you have Rajiv Misra, who came in with you from SoftBank.
Yes.
He's going to become a director. Last week he said that Uber should focus on repairing its market share in the US and on key European markets rather than going to new ones. Do you agree with that? Is that the way you look at Uber?
I think one of the fundamental strengths of Uber is the global scope that we have. This is
you had that motto, everywhere. What's it? Everywhere for everyone.
Yeah, everywhere for everyone.
Do you want to make it some places for some people?
No, we like the everywhere for everyone. It's much sexier than some places for some people.
That's telling me.
Just not interesting. I do think seriously though the global scope that our company brings is important. Our being able to build technology that we can amortize essentially everywhere in the world is hard, but it is part of the fundamental value that we introduce. So I would look at Uber very much as a global brand. That said, we're going to look at all opportunities, but at this point we are leaning forward, and 2018 for us is going to be very much a lean forward year for the company.
But without, I'm not trying to create new boardroom tension at Uber, but that would appear that SoftBank is keener on a more limited idea, whilst you're keener on everywhere for everyone.
Well, listen, SoftBank is a very important shareholder. They're our largest shareholder, and many of our shareholders have opinions over what's the right thing to do. Ultimately, the governance of the company is going to be at the board, and we'll have those discussions at the board, and we'll set our long-term strategy and then execute on it.
One of the things which Uber played, perhaps not very fortunately, a role in was the whole sexual harassment questions and everything to do with that. I suppose one very obvious question, do you think that you have solved that part of the culture? But secondly, do you think that this is a real revolution and it's going to stick?
I think that what was happening at Uber was serious, and I think that while what Uber went through was difficult, I think the Susan Fowler blog was probably one of the best things that happened for Uber, and it certainly started a movement that's an incredibly important movement of the company. I'd be reticent to say that it's solved.
Yeah.
But it's not an endemic issue within the culture of the company, and I think the company has learned, and I think the company took very harsh and appropriate steps to make sure that kind of behavior is absolutely clear, that kind of behavior is not accepted in any way, shape, or form of the company, regardless of where you are, regardless of if you're a great performer or not. So I think we're at the right place for Uber as a company, but I think in general, we're not where we need to be in terms of women in senior positions, making sure that we're welcoming of women in technology, and we help women really build their careers within our company. There's a great kind of bottoms-up energy there, but we're not where we need to be, and we have a lot of work ahead of us.
On the issue of, you talked about the top performers, is that looking back, and also I suppose looking forward for many of the people in this room, because there are a lot of people's businesses which have been affected by this. If you had to give lessons to other people who are now looking at this issue perhaps more seriously than they have done before, is the really bad issue, and I suppose I'm thinking some ways about the media industry in this, is that giving top performers more room for maneuver or whatever than people, or more discretion than people thought? Is that top performers need to be treated the same as everybody else?
I think they absolutely need to be held accountable. One of the really valuable lessons that I got early in my life was actually through Jack Welch, and he said, it's very tempting to allow top performers to misbehave in any way, but for me, he was talking about being aligned with the CEO. Sometimes you allow top performers, the tendency is, well, let them get away with some kind of behavior that is not the right behavior because they're so good. And what Jack told me very early on is that it's the top performers who are problematic culturally that are the most dangerous, because they have followership within the company, because people look up to them. So he's like the dumb person who is bad culturally. He's not the problem, because everyone says, well, that's a dumb person, so who cares? It's the smart person who has followership. So it is incredibly important for the top performers to actually be held to account more radically than anyone else, because they're the ones who have followership at the company, and they have to set the example. So for me personally, that has absolutely guided how I've managed. Expedia was a company that had, excellent cultural values, and one of the first things we did at Uber was to go out and reset our cultural values, and we call them norms, because to me, it's not just these values that you put on the wall and kind of people stare at and it's all nice. It's about behavior. And we set out to change behavior at Uber, and I think that the company was thirsting for it, and we are starting on a path, and I believe it's going to be a positive path.
an inevitable question. I hope you won't regard it as a cheap shot, but you talked about smart people who have followers throughout a company. I mean, Travis would seem to be the epitome of that sort of figure. Is that, do you think of him as being in that category of people that Jack Welch was talking about?
I think, listen, Travis was the CEO of the company, and he had incredible followership, and he was held to account, right? I mean, he's no longer the CEO of the company, and he's a board member. He's a big investor, and so he's absolutely going to play a part on the board. But we've also been very clear as a company that we do have to make a break with the past, with how we behaved as a company. And to some extent with the new CEO being a very different kind of a CEO. So in the end, you have to be held accountable, and I think that Travis was held accountable, and at this point, he's a board member and a constructive one at that.
If you look around the world now, where do you see the next competitors to Uber?
A lot of people think about Uber and ride sharing as a significant enterprise, and it is. But the fact is that we account for less than 1% of miles driven on the road now. When autonomy comes in, that number over the next 10 years is going to be closer, I believe, to 15 to 20%. So because we're not yet a true alternative to car ownership, and I believe that as you bring autonomous and you bring the price of mobility down and make it available to everybody, everywhere, then we become a real alternative to car ownership. And that really opens up the market for us, but it also opens us up to many more competitors.
And is Google at the forefront of those competitors at the moment?
Google is one of many. I think that they've developed very strong autonomous technology, but what we think, which is exceptional, is having autonomous technology and the network under one roof, which allows us to use autonomous in a very practical way, nearer than you think.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser on Bloomberg Radio.
I'm just going to say, this is one of those days where you've been running around and you're like, oh yeah, I got to do a show.
I think it has to do with the week after Thanksgiving. It always feels hectic the week after Thanksgiving.
That's a good excuse for me. I'm going to take it. You're listening to Tim Stenovic and Carol Masser. Tim, of course, of Quick Take. And you remind us what shows you do.
I do the 9 a.m. show.
Yeah.
It's called Quick Take Charge.
So get into the market.
We get into the markets, and we really talk about everything that you need to know to start your day.
Okay, so you know everything, so you're all set.
Yeah, I'm all set. But then we have our noon show, too.
And you do that as well.
Yeah, take a break.
All right, so good. So you're all set up.
I'm all set for the show.
And all of those stories really are shaping what's kind of going on, including Biden's economic team. So we're going to get into that.
They just wrapped up.
They just wrapped up. Janet Yellen. All right. I know Charlie Pellet's waiting anxiously to set the tone for the trading day. What do you got for us, Charlie?
I got an up market on this Tuesday. First trading day of December. Up and away for the Dow, the S&P, and Nasdaq looking at records right now. Global and American stocks starting the month on a bullish note with a rebound from yesterday's retreat. The dollar extending its slide to a more than 2-year low. Treasury yields jumping. Look at the 10-year right now, 0.92%, down 27.30 seconds. The risk-on mood powering the S&P and Nasdaq to records. Traders continue to bet that vaccine news will lead to an economic surge next year. Among some of the vaccine names surging today, we've got Pfizer up by 2.8%, heading the other direction, though. Shares of BioNTech lower by 8.2%, and Moderna is down now by 6.5%. S&P up 52, up 1.4%. The Dow up 287, up by 1%. Nasdaq up 189, up 1.5%. Worth pointing out the year-to-date numbers up 38% on Nasdaq, the S&P up 13.7%, and the Dow up by 4.9%. Gold surging 2.1%, 18.14 the ounce. West Texas Intermediate crude down 1.9%, 44.50 a barrel. I'm Charlie Pellet. That's your Bloomberg Business Flash.
All right, Charlie, thank you so much. And you are listening to Bloomberg Business Week on this Tuesday, first day of December. Carol Masser with Tim Stenovic of Quick Take. We got to set the Business Week agenda. Let's do it. Elena Shalecheva is with us, senior U.S. economist at Bloomberg Economics. She's on the phone in Long Island. We're going to talk a little Powell, a little Yellen. Dave Wilson, stocks editor at Bloomberg News, on the remote access from New Jersey. So, Yelena, I do feel like the big story today was a former Fed chief who has now been nominated to be Treasury Secretary, and then, of course, the current Fed chief, Jay Powell, who, along with Steven Mnuchin, was up on Capitol Hill.
Yes, absolutely. I think, let's start with the testimony from Chair Powell and Steven Mnuchin. I think they once again, how many times did they do that? They highlighted that the economy really needs fiscal policy help, right? So they have done a lot already. They once again praised how the CARES Act helped the economy in the middle of the crisis, and really did. But those things are starting to expire. We see that expiring unemployment benefits are already robbing households of critical income support. We saw that in the latest report on personal income and spending. We saw a decline in personal income. That means that consumers don't have enough money to spend, and that means that growth, economic growth, that so much depends on personal consumption, will slow down significantly in the final quarter of the year and perhaps decline in the first quarter of next year.
So I do wonder if lawmakers are listening to him, because this is a lame duck right now, lame duck session. Is anything going to happen before the Biden administration takes office in January?
Nothing will happen before then. And even after, I think the chances of a big comprehensive package, fiscal package, are really minimal. So our team is projecting something in the vicinity of 500 billion to 750 billion as a possible fiscal package, something that a divided Congress can agree upon. So I think, anything is better than nothing, right? So,
but it's not the trillion plus that people have talked about and some say is necessary. Hang on for a second, Yelena. I do want to bring in Dave Wilson and take a look at the equity markets because, Dave, we had a couple more records, right? The S&P and Nasdaq hit a record today.
We sure did, but I got to tell you, I mean, today is just a little bit wacko, paying attention.
My favorite kind of days.
Yeah. I mean, early on, it looked like we were going to go back to where we were in November with sort of the value-oriented areas of the market, shares that have been beaten down leading the way, think energy stocks, raw material producers, industrial companies. As the day has gone on, though, I mean, you're getting back to something that you would have seen earlier in the year. What's leading the S&P 500 right now? You've got communication services, and that's Facebook, that's Google's owner Alphabet, and then you got technology companies, and the consumer discretionary category, which includes Amazon.com, isn't doing half bad either. So
all those tech names that have provided so much momentum to the market that everybody said, okay, it's time now for the value names and smaller cap, right? So Dave and Tim, right, they're back.
They're back. That was last week's conversation.
So Dave, they're still in favor.
It sure looks that way. I mean, if nothing else, you're kind of seeing people return to stocks that have done relatively well all year. And, what's going on with the COVID-19 vaccine stocks is just, you got to wonder what the heck is happening. I mean, Moderna was at one point up almost 17% today, and now it's lower. I mean, similar story with BioNTech, which is, of course, working with Pfizer on a COVID-19 vaccine. Pfizer's shares are still higher. They're up 2.8%. But if you look at the American depository receipts of BioNTech, I mean, they're lower at this point, and they've really taken off early in the day as well. I mean, I should say they were up 3%, a little bit more modest. But, now, I mean, they're certainly following Moderna. They're down more than 7%.
So I want to bring back Yelena and just ask why stocks are moving so much higher despite the dismal words we heard from Powell.
Well, Powell actually talked a little bit about that, not specifically about stocks, but what is happening right now is that things will get worse before they get better. So, Chair Powell is very much optimistic about the medium-term outlook, and that's what the markets are focused on. But before we get there, we need to cross that bridge between now and when the vaccines are actually available and accepted. So the economy will slow down before that happens. and that there remains a huge risk for small businesses in particular, and for lower income, households.
Right.
That will struggle in between. So that's why this fiscal package is so much needed in the near term.
Well, it's kind of amazing because I feel like it's if there's been any theme we are talking about, there needs to be more of a fiscal package. We're going to leave it with there, guys. Thank you so much. Yelena Shulecheva, senior U.S. economist at Bloomberg Economics, along with Dave Wilson, stocks editor at Bloomberg News. Dave will be back a little bit later on with his stock and chart of the day. But I do think that, Tim, I am just amazed even that the Republicans ahead of the election didn't want to say, look what we did for you again, another stimulus package.
So we're sort of would have been the easiest message, right? And it also shows that and we've talked to so many economists about this over the last few weeks, Carol, is the best thing for stimulus right now would just be to get cash in Americans' pockets. Right. And we don't have a Congress that's willing to do that. Right,
which is kind of staggering to me. So, and we talk about once an economy goes down, it's much tougher to bring it back. So you really kind of want to shore it up as much as possible so that the bounce back ultimately is easier to do. So we're going to continue watching that. We're going to continue talking on that. We're going to talk a little bit about the virus because we've got someone who knows a lot about it, CEO of a large New Jersey health system, Atlantic Health. So he's going to come our way in just a moment. I'm curious, they were smack in the middle of it come last spring. I'm curious what they're seeing right now.
Yeah, are they seeing hospitalizations the same thing that we're seeing in other parts of the country? Are there any warning signs from that as to how the next few weeks are going to play out?
Yeah, so we're going to talk to him about that. I got to say, I'm really excited. It was a stock of the day by our own Dave Wilson. We're talking about Vital Farms, and so our producer, Paul Brennan, I'm like, we got to get this person on. So we've got the CEO of that company. We've also got what is our most read story on the Bloomberg about how finance is being upended permanently thanks to remote work and digital banking. It's changing.
It's crazy. I mean, Carol, I was saying that I went to the ATM in March until last week. And one of the themes from this story is people aren't using cash the way they used to.
No,
so true.
Not at all. My husband mentioned having some, cash from last spring that he, got some money out and just hasn't used it. So it's very different. All right, so we got a lot going on over the next few hours. Let's get you going, though, on World and National News. For that, it's over to Nancy Lyons in our newsroom in the nation's capital. Hey, Nance.
Hey, Carol. How are you? President-elect Joe Biden says he's putting forth an economic team that will help restore the nation's economy following the pandemic.
We're going to create a recovery for everybody, for all. We're going to get this economy moving again. We're going to create jobs, raise incomes, reduce drug prices, advance racial equity across the economy, and restore the backbone of this country, the middle class.
He introduced his nominees, led by former Fed Chair Janet Yellen, who would be the first woman to hold the job as Treasury Secretary. He's nominating Neera Tanden to head the Office of Management and Budget. If confirmed, she'd be the first woman of color to lead that agency. Biden has also tapped labor economist Cecilia Rouse to chair the White House Council of Economic Advisors. She would be the first African American to lead the council. Well, Treasury Secretary Steven Mnuchin is defending the current administration's economic response to the ongoing coronavirus outbreak.
We continue to work to implement the historic CARES Act with speed, efficiency, and transparency, but our job will not be complete until every American gets back to work.
Mnuchin testified before a Senate hearing and called the response unprecedented. A Chinese robot probe is now on the moon, where it will drill into the lunar surface and load nearly 4.5 pounds of rock and debris to bring back to Earth. The Chinese government announced the landing today, but offered few details. The probe was launched on November 24th. Its mission is another step toward the Chinese goal of landing a human on the moon. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nancy, thank you so much. You are listening to Bloomberg Business Week on this Tuesday. Carol Massar along with Tim Stenovec of Bloomberg Quick Take. And I know this is something that you covered, I'm sure, on Quick Take this morning, also at noon, which is when you are on. But what's interesting is, these virus headlines, they continue to worsen. And we're starting to see it pick up higher here in, that's not good English, but pick up here in the New York Metro.
Yeah, and it's one thing that's concerning is when we continue to see superlatives like, highest capacity, or we see some sort of number that is the highest since April or May, because we were here then and we know what it was like. And it was a scary time in New York. I
got to say, I was talking to, and our company's been really great about car service and keeping us safe. And I was talking to one of the drivers this morning because I said, is it busy? What kind of activity are you seeing? Because I'm hearing some say it's getting quiet again. And he said, back in the spring, I remember actually pulling aside and kind of being in tears because the only cars that were going by were sirens and ambulances. So it's got a little bit of a different feel, and I don't know whether that means, well, even though the hospitalizations are going up, we're able to understand when somebody starts to have some symptoms and knows when to go to the hospital, and maybe the cases hopefully are not as severe.
Yeah, I think that's part of it. And Carol, I also think part of it is that this is the new normal. This is the reality that we've been living through. It is, because if we think about where we are as a country, we're in a worse place collectively than we have been at any point since the pandemic began. But the way that I feel is like, I don't wake up in the middle of the night the same way that I did back in March and April, because this is something that we've gotten used to, and it's really sad, and it's something that I think we're going to have to keep in mind until we do get that vaccine. Right, exactly. It definitely is going to impact us. And I mean, I saw some more, headlines in terms of the vaccine, and maybe we might start to see some of it coming through. I know people are starting to think more about logistics. I think is it Friday that states have to kind of, file some of their plans in terms of how they will distribute a vaccine? Yeah, so those dates I'm not totally certain on, but what I'm also seeing is that it's not just something that's happening in the United States, but happening in Europe as well. We spoke to one of our Bloomberg intelligence analysts over in Europe today, talking about the timeline over there. All right, so yeah, obviously it's a global thing. All right, you are listening to Bloomberg Business Week, and this is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a headline from the Bloomberg Professional Service. Attorney General William Barr tells the Associated Press that the Justice Department has not uncovered widespread voting fraud that could have changed the 2020 election outcome. Stocks are pushing higher with the S&P at or near the best level of the day right now. In fact, also a record for Nasdaq, right to the numbers. S&P up 54, up 1.5%. We've got Nasdaq up 196 now, up 1.6%. The Dow's up 299 points, up by 1%. Stocks starting December on a bullish note with a rebound from yesterday's retreat. The dollar extending its slide to a more than 2-year low. Treasury yields are jumping right now. We've got the 10-year up at 0.92%. Gold up 2.1%, 18.14 the ounce. West Texas Intermediate crude down 1.9%, 44.48 a barrel. So again, recapping the equity numbers. Stocks rally, S&P up 54, a gain of 1.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Like not a care in the world, Charlie Pellet. Pretty amazing.
You got it.
All right, Charlie Pellet, thank you so much. You're listening to Bloomberg Business Week. I'm Carol Massar along with Tim Stenovec. And we covered some of today's virus headlines. You've heard it. We continue to see the big pharma companies going for regulatory clearance for their vaccines. New York State, statewide, daily hospitalizations jumping the most since April. One system in the New York metro area that was on the front line last spring dealing with COVID is the Atlantic Health System. They've got 7 hospitals in New Jersey. They've got about 17,000 team members, and they are really covering much of the state of New Jersey. So great to have back with us Brian Granulati. He's CEO of Atlantic Health System. He joins us on the phone from Morristown, New Jersey. Hey, Brian, good to have you here with Tim and myself. I think we talked with you at the end of April. It was not a good time. Where are we today in comparison?
Well, thanks for having us back.
Yeah.
It's quite different for us than it was back in the spring, particularly the time that we spoke. We were up over 900 patients in our hospitals per day, and today we're at about 225. The pace of increase has been a lot slower than we experienced in April. And we're also seeing fewer patients in our intensive care unit and fewer patients on ventilators. And that's because of some of the great strides we've made in learning about this virus and how to take care of patients differently. We've also set up a program called Hospital at Home, and that really has allowed us to keep more people in their homes getting oxygen treatments and other needed treatments. So all in all, the virus is back. It is really endemic in the community, but we're not seeing that crazy growth that we saw over a 3 to 4 week period in the spring.
Brian, are you concerned at all that you will start to see that crazy growth again as we see the cases rise around the country, and then also the positivity rate, at least in the New York City area, above 4% in the last 7 days and rising?
Yeah. It's interesting. All of our modeling that we're doing does not show us hitting those levels again, because you got to remember, we were doubling the number of cases that we had in our hospitals every 2 to 3 days for about a 3 or 4 week period. And this has been a slower uptake starting probably at the end of September, beginning of October. And, we're seeing things plateau a little bit, then go up a little bit. The big concern we have, though, is what human behavior is going to be like. And so we are expecting to see a bump now in probably 4 or 5 days after the Thanksgiving holiday.
Brian, how are your team members right now? Carol mentioned that you have about 17,000 of them, and I know they've been working around the clock keeping us safe. How are they doing?
This has been tough on all people who work in healthcare. I know there's a general fatigue in the country right now regarding this crisis, and we do have light at the end of the tunnel with the vaccines, and we can talk about that. But our team members have been at this for a long time, and even when our case count went down over the summer months, we were still preparing for, I called it coexisting with COVID, but we were preparing for what we're seeing right now. So while they're ready and, we're taking great care of our patients and we're keeping our team members safe, they are fatigued, and like all of us, would like to see life get back to a bit more normal than it is right now.
It's interesting what you said about it. It's been a slower uptake. And why do you think that is? Is it because when the numbers do start to pick up that we've all kind of been there before, understand what we need to do to kind of back off, so we all go back to social distancing, wearing masks? Is that why it's slower, Brian?
Well, when we first saw this occurring, I used to say follow the train lines, because we have, organizations in northern New Jersey, and right off the train line. And when you did the mapping on that, you could see that high concentration. And so working from home, not having as much transit is obviously a difference right now. So that's part of it. The other part of it is the measures that were taken by the state of New Jersey, the state of New York. I think our governor here in New Jersey has done a very responsible job of trying to balance the health of the citizenry, the resources that we have available to care for them, and the economy. And, we're all doing our part to keep the economy open, because we don't want to go back to that time where everything was shut down. The dilemma, though, strikes on your point about masking and other things like that, because it's your personal responsibility as a citizen to take these things seriously. And one of the reasons in New Jersey that we're seeing, a better performance right now is because people are taking that seriously. But you can track back these outbreaks to gatherings, to events where people didn't do that.
Yeah.
And that's really where personal responsibility steps in. So I always tell people, if you want to get back to where we were, you want to not have restrictions in place. Just do simple things. Wear a mask, use common sense about gatherings and social distancing, and wash your hands. Because we have such good news about vaccines right now that, we can have a much different summer if we really work hard this winter.
I'll tell you what, Carol, that's what's keeping me going, is just thinking about being able to see my family in July. That's what we're saying to each other. They live all over the country. July is when we're going to see each other.
If you think about, we've gone through, 9 months now? Just a few more months to kind of hold on.
We're so close.
Hey, Brian, hang on for a second. We have to do a little bit of news, but we want to continue the conversation. We're going to get back to Brian Granulati. He's CEO of Atlantic Health System, on the phone from Morristown, New Jersey. You can hear, though, in his voice, we all remember, and anybody who's in the healthcare world, last spring, how tough it was.
Yeah, those nights of going outside of your apartment and banging on pots and pans to thank the healthcare workers. We don't want to be there again.
No, exactly. We don't want to put their lives at risk again. All right, you're listening to Bloomberg Business Week. Carol Massar along with Tim Stanovic, and this is Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It is Bloomberg Business Week on this Tuesday, December 1st. Carol Masser with Tim Stenovic, and we're going to get back to the CEO of Atlantic Health System, really kind of giving us a little bit of a gut check of where we are with the virus.
And a little bit of optimism.
Yes, because I do feel like I keep saying this over and over, we've got a little bit of a playbook on how to deal with this. All right, we'll get back to Brian Granulotti in just a moment. Hey, Charlie Pellet.
Well, hello there. A lot going on today. Let me begin with news out of Washington, repeating our earlier headline. Attorney General William Barr says the Justice Department has not uncovered evidence of widespread voter fraud that would change the outcome of the 2020 presidential election. Barr's comments coming in an interview with the Associated Press. Investors dumping treasuries amid a glimmer of hope that Congress will reach an economic stimulus compromise, driving yields up across the curve. 10-year yield now 0.92%. Stocks starting December on a bullish note with a rebound from yesterday's retreat. The Dow, the S&P, and Nasdaq close to session highs right now. The S&P's up 51, higher by 1.4%. The Dow's up 262 points, up 0.9%. Nasdaq is up 185 points, up right now by just about 1.5%. Gold surging 2.1%, $18.14 the ounce. West Texas Intermediate crude down 1.7%. $44.54 a barrel. Pfizer and partner BioNTech are seeking regulatory clearance for their COVID-19 vaccine in the European Union, putting the shot on track for potential approval there before the end of the year. Pfizer shares, they're up today by 2.8%, but shares of BioNTech out of Germany lower now by 8.8%. Dr. Amish Adalja is senior scholar at the Johns Hopkins Center for Health Security, and on Bloomberg Television this morning, he was asked about the biggest challenge after vaccines do get approved.
To me, I think it has to be logistics, because we know already, looking at the phase 3 data, that everything does appear to be good in terms of safety, in terms of efficacy, a much higher efficacy than we ever expected with these first-generation vaccines. So now the question is really just getting the approval, which most people think is going to be forthcoming in a matter of weeks, and then the scale-up of production, and then getting this vaccine into the arms of people all around the world, turning it into a vaccination. And I think that's going to be one of the biggest public health challenges we've ever faced.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. United Healthcare Group expects the pandemic to carve $2 billion out of its profits next year, with COVID-19 testing and treatment costs remaining steady, even as more Americans return to their doctors' offices for routine care. The company unveiled that outlook for the year ahead in its annual Investor Day presentation. Shares of United Healthcare, ticker UNH, up now by 1.9%. Recapping equities advance 10-year 0.92%, S&P up 51 at a record of 1.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, appreciate that update. You're listening to Bloomberg Business Week. Let's get back to the CEO of Atlantic Health System, Brian Granulotti. He is still with us on the phone from Morristown, New Jersey. Hey, so Brian, one thing, and before we move on to kind of talking about a vaccine and the rollout of that, is the types of COVID patients that you're seeing. It does sound like it's not as severe, but are you seeing a lot of COVID long haulers? I'm just curious what you're seeing in it and the demographics of who's getting the virus. Has any of that changed?
Yeah, we're seeing a much younger population testing positive right now, and we're seeing fewer patients go into the hospital. But your point about what happens afterwards is an important one. We've opened something at Atlantic called the COVID Recovery Center, and we've had that open for about 2 months now. And what we're trying to do is create a medical home for these patients who can't seem to shake some of the impacts of this virus. So I'll give you a quick example. We've got some young patients who are seemingly doing well, but when they exert themselves in any manner, their oxygen levels just drop dramatically. And we can't figure out why, and we're trying to understand that. The same thing with this concept of brain fog. We've got so many patients that just don't feel right and are suffering from that. So this is turning into a real chronic disease. And one of the things when I talk about this, particularly to younger folks who think that they're bulletproof on this, is that this is a very difficult virus. And while you may not see the dramatic impacts on you like we saw in New York and New Jersey in the spring, ventilators and everything like that, this is still something that you have to take very seriously. And we're hoping to get that message across. But in the meantime, we've created a service that we think will be a medical home for patients who really are taking this on as a chronic disease now.
Yeah, I don't know if any of you have seen, I think it was at 60 Minutes did a piece on some of the long haulers, and it was, one was a runner, and it's just young people, and just their life has been, turned upside down, and it's devastating that couldn't walk. So it is, Tim, definitely something that has to be taken seriously.
Yeah, and it's something that just affects everybody differently.
Exactly.
If you get it, you don't know how it's going to affect you, and that's something we all need to keep in mind. Brian, I want to talk about the vaccine and how you're planning on rolling it out and distributing it once it becomes widely available. How do you do that at Atlantic Health System?
So we've had planning underway for the last several months to make sure that as soon as we are able to, we will get this vaccine in people's arms. Because the development of the vaccine has been nothing short of remarkable, because what the government's been able to do is to hedge companies' financial bets on this vaccine and allow them to follow the science and get it done safely, but at the same time begin production on these. So we're going to start to see, assuming this moves forward like we expect this week and over the next couple of weeks, vaccines being sent to each of the states and then being delivered to sites like our Atlantic Health hospitals. And then we have plans to get those into the arms of people. And that's going to be the real challenge. We're going to have to set priorities at the beginning, and so we're looking forward to the guidance that we're going to get from the government this week. States have put together plans, but generally it seems like it's going to be healthcare workers first. And we think that that's really important. And then working on people who have other vulnerabilities and people who are older, because the goal here is to obviously get as much vaccine out into the general public by probably the middle of the year, and that's going to be important. But the key thing is people having confidence in taking it.
Yeah, no, I know. I think the CDC, right, I think they're voting actually today on who will be first in line for a vaccine, so we will be looking out for that headline. Hey, Brian, thank you so much. I know your world is crazy, and you're so kind to always find some time for us, so stay safe, and we wish you well, and I'm sure we'll be checking in again with you over the next couple of months. Brian Granulotti, Chief Executive Officer, Atlantic Health System, on the phone from Morristown, New Jersey. But it is about logistics and getting it out now, right? Like you got to have a plan. You got to think about it. It's got to be kept cool. You got to make sure if somebody gets one dose, they're going to get the second dose, right? To make sure it is effective.
It's incredibly complex, and I'm eager to see how we pull it off.
Yeah, I am fingers crossed, and hopefully it all goes well. All right, you're listening to Bloomberg Business Week. Carol Massar along with Tim Stenovic, and let's get another check on world and national news. Over to Nancy Lyons in our 991 newsroom in the nation's capital. Hey, Nance.
Hey, thanks, Carol. President-elect Joe Biden is looking at an ambitious recovery plan once in office. Today, he introduced those who would lead the economic fight, including Janet Yellen as Treasury Secretary.
We will find collective purpose to control the pandemic and build our economy back better than before, to rebuild our infrastructure and create better jobs, to invest in our workforce, to advance racial equity and make sure the economic recovery includes everyone.
Economists warned that failure to provide additional government stimulus would drag out the recovery and threaten more small businesses. Fed Chair Jay Powell told senators today the central bank will do what it can.
We'll use our tools until the danger is well and truly past, and that it may require help from other parts of government as well, including Congress.
A bipartisan group of lawmakers is proposing a $908 billion stimulus plan that offers additional unemployment relief and money for state and local governments. A panel of U.S. advisors is meeting this afternoon to vote on how initial supplies of a COVID-19 vaccine will be given out once one has been approved. Former CDC Director Dr. Thomas Frieden says the panel will be asking several questions.
One is, how much good are you going to do? How many lives are you going to save? Second is, what's fair? What's the fair way to do it? And the third is, How can we do this openly, transparently, so that there's no backroom deals?
He says it's likely frontline health workers would be given priority. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. You're listening to Bloomberg Business Week. Carol Master along with Tim Stenovic of Bloomberg's Quick Take. You can catch him at 9 and at noon. He's a busy guy. Bars. When do you think is the next time you'll go to a bar? Have you been to a bar?
I have not been to a bar. I did over the summer do some outdoor drinking at a brewery a couple times.
Okay, so
but
some social
we did not
distancing.
step foot inside anything.
So it might be a while.
It's going to be a while,
maybe next fall.
Until there's a vaccine, Carol, I think.
Well, it's interesting because you do wonder, this industry, right? We know restaurants have been hit hard, bars have been hit hard. There's a story on the Bloomberg terminal. They did actually talk to the Molson Coors Beverage co-CEO, or CEO, excuse me, Gavin Hattersley, and he says drinking at bars might never recover post-COVID. I don't believe that. Is that
I don't either.
Cities
okay,
are
I'm so
cities
glad
are going to
you say
go
that.
away? I mean,
I'm so glad you say that because I pretty much replied
so
when our executive producer sent us this story, and I said, "Give me a break. Drinking will come back."
It will. I think people get it. This is not where you can be right now. And that's why all the bars have been shut down or limited. But I think we're social beings. I think ultimately these businesses will come back. I think people will come back to the cities. I just think some of these trends will not.
Look, Zoom happy hours are not going to replace drinking in bars.
Have you done a Zoom happy hour?
I haven't done a Zoom happy hour, but Carol, this weekend we're doing a Zoom family wine tasting with my family all over.
Wow.
I'm really excited about it.
That's cool.
Yeah, it's taken a long time to set up.
That's actually a great idea.
It's going to be fun.
So you send bottles to everybody?
Yeah, yeah. We're pulling it off.
All right,
California,
stay tuned,
Colorado, Washington. It's happening.
That's actually clever. That's a really sweet idea. Well, we've done actually wine on this show where we've figured out how to, and we've talked to vineyards and so on and so forth, and stay tuned. You'll get involved with that. But anyway.
The sooner the better.
But what's interesting is they talk about Molson specifically, like a lot of the alcohol industry, they've actually done really well, and people have found some comfort in familiar brands while working at home, living at home.
And if they're not buying them at the bars, then they're buying them at retail locations. The company is saying that those brands like Coors Light and Coors are growing significantly.
Yeah, so it's kind of interesting.
Miller Lite, I should say.
I think bars will be back, no doubt about it.
So
See, Tim and I both, we agree about that.
I'm not concerned.
You're listening to Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Risk on. The Dow, the S&P, and Nasdaq all rallying. S&P, Nasdaq at records. S&P 500 index up now by 54 points. That is a gain of 1.5%. Again, at or near session highs. We've got the Dow up 305 now, 1%, while Nasdaq is up 192 points, up 1.6%. 10-year at 0.93% right now, down 28.30 seconds on the 10-year. Gold surging 2.2%, up 38.59 the ounce at 18.15. And West Texas Intermediate crude down 1.6%, 44.62 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Tim Stanovic. And we know running a political campaign, it's about fundraising, it's about getting voters, it's about building infrastructure and support. It's also about building out campaign technology, which we know is critical for Donald Trump and the Republicans back in 2016 and for the Democrats this past November. So let's get into a great story in the magazine. It's about the digital machine that Democrats need to keep winning. Bloomberg Business Week national correspondent Josh Green, is joining us. He's on the phone in D.C., along with Bloomberg Business Week editor Joel Weber on the Access line in Brooklyn. Joel, this is an interesting story. I mean, technology, we saw the Republicans use it. Now it seems like Democrats have figured it out.
Yeah, and who better than to write about the story than our great M&A reporter Josh Green, who also
headed to the title,
national correspondent. Yeah, exactly. He's multifaceted, that Josh Green.
He is.
But that was sort of the root of it, because he had done a story for the magazine in 2017 about Mobilize America. But the biggest theme here is not only that marriage that I'm sure he's going to talk about in a second, but there's a line in the story yesterday's story where he throws back to the Obama moment back when Obama was reelected, and sort of the tech prowess that was bestowed upon Democrats then. But there was one thing that was missing, which is it didn't have any lasting ability. And what Josh has found here is that we're beginning to see a marriage here that may be able to become something of a machine. How about that, Josh? Can I just take every word out of your reporting?
We're done
say
now.
It for myself. But over to you for more M&A.
I like the idea that I think this might be the first M&A I've ever reported on. Let's put it to you. The reason that I was prompted to report on an M&A for the first time in my 10-plus year Bloomberg career was that, as you said, I wrote about one of these companies back in 2017 because they were a startup by a couple of young millennials who were sort of appalled that Donald Trump had gotten elected and the Democrats couldn't beat him. And so they wanted to develop new political technology to reach the kind of voters that Hillary Clinton couldn't reach and hadn't turned out. So they called me up actually a couple of weeks ago and said, hey, we've built our company into 100-plus people. We're now going to merge with a big Democratic tech company called EveryAction. They were being acquired. But to me, the evolution of this company and its acquisition was really emblematic of something I think was really important in this last election, hasn't gotten enough attention because Democrats, frankly, spent the month since Trump was defeated kind of bickering and shooting at each other, which I think has taken away from what I talk about in the lead to this piece was that the Democrats' organizing and fundraising prowess, driven by this kind of political technology, has produced more than 80 million votes for Joe Biden. And any hope that Democrats have of broadening their governing coalition and winning races in the midterms and that sort of thing is going to depend on this machine that was built. And the fact that these two political technology companies are coming together and joining means that Democrats' organizing and tech abilities are going to grow even larger. Now, as Joel alluded to, Democrats were plagued for years and years and years. Even when Obama was winning, they were plagued by a fundamental structural shortcoming in the way that they did politics. And that was that every time you had a big presidential campaign like Obama come along, he actually had to build his own technology internally. They had to kind of start from scratch. It's like getting a job at Bloomberg, but in order to get there, I have to build my own car to sort of drive there. I mean, it's one of these problems where when you step back and look at it from somebody outside politics,
it seems sort of absurd that nobody thought to fix this earlier, but this was a big problem. Obama built a big tech operation. As soon as his campaign ended, it all dissolved and went away, and Hillary had to start from scratch. So what these companies done is basically take the technology building from outside campaigns that can grow and exist and innovate, beyond a single campaign cycle. I think the fact that Democrats turned out 80 million votes, even while they didn't achieve all they wanted to, shows how powerful this was and how powerful it can be moving forward.
So, Josh, I mean, you described this as a Salesforce-like platform for liberal campaigns and causes, and the company Mobilize. When these two companies together, I mean, what is the actual technology that they have? What are they able to do now?
Well, they do a lot of things. I mean, what was interesting about Mobilize, which I first wrote about, was they looked at Hillary's loss and they saw, all right, she performed really badly among millennials and really badly among black voters compared to Obama. Why? And what they figured out was that the traditional ways of organizing, you get a list on a piece of paper, you go out and you knock on doors, didn't really reach those populations, either because, they're transient like millennials or they move around a lot. And so they thought that, well, look, the one way to reach everybody has a cell phone now, whether you're young, old, black, white. They built the technology through an app, and this is something that scaled, and they tested it out in 2017. I wrote a big feature for Business Week about how they were doing it in the Virginia off-year elections. It worked wonderfully, and the party, to its credit, recognized this and spread it all across the country in the midterm election, in the midterm races, which Democrats won handily. I think 20 of the something like 26 Democratic presidential candidates from this past cycle used the technology. So what it really is, one of the founders described it to me as an engagement funnel. You have all these sort of hyper excited, new to politics activists who people were out in the Women's March, doing March for Our Lives, not necessarily things that were campaign related, but suddenly they're inspired and they want to get involved. These apps and this technology helps funnel that initiative, that eagerness to participate, and connects them with a local campaign that can actually use their help. That's really what we saw with Joe Biden's campaign. The fact that Biden really was kind of in his basement. He wasn't out there campaigning, and yet through this use of technology and being able to kind of connect people, they managed to turn out 80 million votes and help Biden to defeat Trump. I think that's a critical piece of technological evolution that's going to be important going forward for both parties, but especially for Democrats.
So, Josh, let's spin this forward. We've got, Georgia Senate race here on the horizon. After that, we're going to have some midterms. Like, when are we going to see sort of the fruits of this marriage, and how are we going to be evaluating them?
I just got about a minute, Josh.
Well, yeah, I think we're already seeing, there are people on the ground. There's lots of volunteers. I was talking to one of the Mobilize founders who said that the engagement, the volunteer engagement around the Georgia Senate races is even higher than it was in the midterm elections in 2018. On the other hand, Republicans have their biggest engagement driver, and that's Donald Trump, and it sounds like he's going to be heading down there in the next week. Both sides, this won't come as news to anybody, but both sides are just trying to turn out every single vote they can because it looks like this is going to be a very close pair of elections. I think if Democrats are able to rekindle the outpouring that Joe Biden received, they're going to be in pretty good shape. We just don't know yet whether Democrats can win or excite people with Trump not on the top of the ticket. But we're going to find out on January 5th.
All right. Well, good stuff as always, Josh. Thank you so much. Who knew? Political M&A reporter, also Bloomberg Business Week national correspondent.
He can do it all.
He can do it all. Josh Green. Anything you want to ever know about politics and the campaign trail, man, you've just got to read Josh's stuff. Of course, author of the book that explains the 2016 election outcome. We're talking about Devil's Bargain, Steve Bannon, Donald Trump, and the Nationalist Uprising. Josh, of course, on the phone from D.C., and Bloomberg Business Week editor Joel Weber on the access line in Brooklyn. For those of you listening in New York, D.C., and San Francisco, watching on YouTube, Bloomberg Business Week, we're going to come right back. If you're listening on Bloomberg 106.1 in Boston, Bay State Business is coming up next. We're going to talk politics. We're going to talk about that Biden economic team.
It's something.
It is something.
A lot of firsts.
Which I love. A lot of women, a lot of diversity.
And they just finished speaking about an hour ago.
So we're going to break it down in just a moment right here on Bloomberg.
From Bloomberg World Headquarters, I'm Charlie Pellet. Final hour of trading on this Tuesday, December 1st, first trading day of the new month. Stocks beginning December on a bullish note, a rebound from yesterday's retreat. The dollar extending its slide to a more than two-year low. Treasury yields are jumping. Look at the 10-year with a yield now of 0.93%. Risk-on mood is powering the S&P and Nasdaq to records. Traders continue to bet vaccine news will lead to an economic surge next year. S&P 500 index up 48 points, up 1.3%, again at a record. The Dow is up 265 points, up 0.9%. Nasdaq advancing 168 points to a record 12,367. That is a gain now of 1.4%. Again, the 10-year worth repeating, the yield there 0.93%. Gold up 2.1% higher by $36 the ounce at $18.13. West Texas Intermediate crude slumping 1.6%, $44.60 a barrel. The OECD has cut its 2021 global growth forecast to 4.2% from 5% as the resurgence of the coronavirus dramatically weakens the global recovery. The Paris-based organization also warns the situation could deteriorate if governments withdraw support too soon or fail to deliver effective vaccines. Dr. Laurence Boone is chief economist at OECD.
What I'm concerned about is in some instances there's a lack of connection between the size of the fiscal stimulus and the effect on the economy. And that's where fiscal public spending are not spent wisely, which is why we're insisting on the need to target the appropriate people, the viable firms. Some countries do that very well as all those that are left behind.
BlackBerry surging the most ever after the wireless company signed a multi-year agreement with Amazon Web Services to develop and market its intelligent vehicle data platform called Ivy. BlackBerry shares up now by 25%. They are off session highs. And Tesla is gaining after S&P Dow Jones Indices says it will be added to the S&P 500 index in one shot on December 21st. Tesla up 2.3%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser on Bloomberg Radio.
For Secretary of Treasury, I am really pleased to be able to nominate Janet Yellen. No one is better prepared to deal with these crises. I wish it weren't as much of a crisis, future Secretary.
And of course, that was President-elect Joe Biden just earlier today nominating Janet Yellen, former Fed chief, to be the next Treasury Secretary. And I really do think this Biden economic team, Tim, is really one of our top stories of the day, and certainly at this hour.
Yeah, it is. It's a lot of firsts. Not only does it include Yellen, of course, but Neera Tanden as well. And if she would be confirmed, she would have a lot of firsts to go along with her as well. And it's, I think, exciting to see for a lot of people because President-elect Biden has said he wants his cabinet to look like America. And it seems like he's making good on that promise.
Yeah, really. When he was announcing all the people, very, very diverse. Let's get some thoughts from our Bloomberg News politics editor, Wendy Benjaminson. She is back with us on the phone from Washington. So, Wendy, I mean, it really does look like, in general, and certainly with this economic team, that Joe Biden is thinking about diversity and thinking about what America looks like and what his team needs to look like.
Yes, absolutely, Carol. I mean, he is making a point about them being diverse. He is certainly showing them to be diverse, and there are many, many firsts. As you said, Janet Yellen would be the first female Treasury Secretary. Cecilia Rouse would be the first African American to head the Council of Economic Advisors. Neera Tanden is an Indian American who would lead the Office of Management and Budget, although women have led that office before. So he really is working on that. Now, there are some. Representative Jim Clyburn from South Carolina, who feels that there aren't enough African Americans being selected yet, but there's still a lot of names to go, and we'll see where that leads.
Wendy, I want to hit on Neera Tanden for a second, because it does seem like if there is one person here who is seeming to get a lot of flack from both the right and the left, it's her. And I'm wondering what the chances are of her being thrown in there, because the Biden team needs someone not to be confirmed, someone to be rejected by Republicans.
Well, you know politics, Wendy. You know how this works.
Right. Well, if you ask the Biden team, of course, they are 1,000% behind her, and they, did not want to shirk from nominating someone they believe to be highly qualified, even though she has irritated Republicans to no end. And the second highest ranking senator, John Thune, today said, pretty much it's not going to happen. And the Lindsey Graham, who chairs the Budget Committee, which would have to first confirm the director of the Office of Management and Budget, said it's going to be a real uphill climb for her. But their reasoning is not that she's not qualified. It's not anything else. It's that she has tweeted insulting things at Republican senators. And I think anyone who's been on Earth for the last 4 years.
Yeah, who else is
would know
tweeting?
that,
I was just gonna say, who else? Who does that remind you of?
Republican
Tweeting insulting
president
things.
Does that a bit, yeah.
Two wrongs don't make a right. I'm just going to say it, kids.
That is right, Carol. We're parents.
Exactly.
So I do wonder, though, is there somebody on this list who you think faces better chances or worse chances of getting past Republicans if Mitch McConnell and Republicans hold on to the Senate?
Right. Well, I do think Janet Yellen will have almost no problem getting confirmed. She was confirmed to be Fed chair by a Republican Senate, and senators really don't like to admit they're ever wrong. So if they confirmed her once, they'll confirm her again.
Great point.
And she's well respected. Her politics may not agree with their politics, but there's no question she's respected. She's top notch. I just don't see that one happening. Neera Tanden may be the one that gets tossed back. She is the only one so far that everybody has said, hold the phone, this may not work. So that's going to be the fight to see if Biden decides it's really, really worth it to have that fight. And he may.
I just want to mention, a couple of headlines that have crossed the Bloomberg terminal. Bill Barr, saying that the Department of Justice hasn't uncovered widespread voting fraud. I just find it fascinating that these kind of headlines are still crossing. And then we've got, the president-elect putting together his team. I mean, it's just, how do you continue to make sense, Wendy, out of these kind of two Washingtons right now?
Exactly. Well, I think it's 90% one Washington and 10% another Washington. I think really there's one person in town who believes that Donald Trump won the election, and that's Donald Trump. His own attorney general, as you said today, said he's seen no evidence of election fraud to an extent that would change the results of the election. Bill Barr did just leave the White House. We're waiting to find out if he left with his job or he left, to carry a cardboard box out of the Justice Department. We don't know yet. We don't know. But Trump's lawyer, Rudy Giuliani, came back and said, well, Barr doesn't know what he's talking about. We have tons of evidence, and he won't look at it, and that sort of thing. So, no, everyone, even these senators I was just talking about, are talking about confirming Biden's picks, even though they will not call him the president-elect or acknowledge that he won the election. So that's where we are right now.
Yeah, and Wendy, we are seeing another headline cross the Bloomberg from the Associated Press that says that Barr has appointed Durham's special counsel to keep investigating the Russia probe origins under the new administration. What are the implications of this for President-elect Biden when he becomes President Biden in January?
Well, this is a big decision President-elect Biden will have to make, and his administration, and we should watch very carefully who he chooses as Attorney General as a signal to where that decision will go. Does he want to spend the next 4 years relitigating the Russia probe, the Trump, and everything that Democrats feel the Trump administration did wrong, and investigate your political opponents, which is always sort of anathema in American politics, or it used to be, or does he want to, as he said throughout the campaign, heal the country, unify the country, and move forward, focusing on the economic recovery and getting us all past the pandemic? So I think, there was talk that someone like Preet Bharara, who used to be the U.S. Attorney in the Southern District of New York, might be the Attorney General, not so much anymore, which does signal that maybe he doesn't want to, spend the next 4 years investigating Donald Trump.
It's fascinating. My understanding, just reading the AP write-through, I guess Barr is saying that Durham's investigation narrowing to focus more on the conduct of FBI agents who had worked on that Russia investigation. So it is kind of fascinating to see that could continue, into the next administration. Wendy, thank you so much. Really appreciate it. Wendy Benjaminson, she's politics editor at Bloomberg News, joining us on the phone from Washington, D.C. That will be fascinating if it carries over right to a Biden administration.
Yeah, and he'll have serious choices to make about whether he wants to end it or keep it going, because there are implications for both.
Yeah, exactly. And I do get the feeling he wants to move forward, so we shall see. All right, let's get back to world and national news headlines. Following it all for us, Nancy Lyons. Hey, Nance. Hey, Carol, you've been talking about it. President-elect Joe Biden has formally introduced his nominees and appointees to key economic posts. Biden has tapped, among others, Janet Yellen to be Treasury Secretary, and if confirmed, she would be the first woman to lead the Treasury Department. Biden says his team is comprised of experienced officials, including those who helped during the 2008 financial crisis. He says their expertise will be especially needed now.
From the most unequal economic and job crisis in modern history, we can build a new American economy that works for all Americans, not just some, all.
Federal Reserve Chairman Jay Powell and Treasury Secretary Steven Mnuchin have been giving their take on the economy in a periodic appearance before the Senate Banking Committee.
Powell said the economy is proving more resilient than expected, but 10 million Americans are still out of work, and widespread vaccinations are still months away.
There are a lot of small businesses that are at risk of going out of business during this winter, which could be a tough few months. The risk of people at the lower end of the income spectrum, these are not people with a lot of savings, a lot of resources, or a lot of opportunities right now. There are parts of the economy that really might need help to get that last span of the bridge in place.
Mnuchin added that small businesses, notably restaurants, need not loans but cash grants. In Washington, Irv Chapman, Bloomberg Radio.
Attorney General Bill Barr is weighing in on the election and says the Justice Department has found no signs of voting fraud on the scale needed to change the outcome. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Tim Stenovic of Bloomberg's Quick Take. And Dow Jones has a story. I mean, I feel like there's a story like this every day, every week. A new setback for big cities as return to the office fades. You and I were just talking, though, earlier about, bars are going to come back, big cities. New York City will come back.
Look, I'm talking my book here, of course, because I live in New York City, and I love New York City. But New York City is going to come back. Carol, I don't think the working from home thing is for everybody. I don't think it's going to stick around. And you saw a lot of suburbs, the demand for houses in the suburbs go up significantly over the summer.
Right.
But what is that? What are they betting on? Right? They're betting on, if you think you're going to be working remotely, you're not going to live in the suburbs. You're going to move very far away where you can get an even bigger house, right?
That's right.
So these people are saying, in a sense, okay, well, we were thinking about moving to the suburbs for in a few years. That accelerated, like everything the pandemic
let's just
has
do
done.
it now.
Let's do it now. And we're probably going to be commuting to the city at some point.
What I want to watch in particular is what happens in Silicon Valley. Like, because you have seen companies who say, yep, you want to work from home from now on, right? But they've also said that we're going to reduce your salaries if you're going to be working from home, because you could essentially work, in the middle of the country, but be working for Microsoft. And so that to me could be a very significant shift. But I think ultimately, the reason, I work in the city because I love the city and I love to come to the city. I have a 17-year-old who, has gone to school in the city. She's going to go somewhere else for college, but she says, I want to come and live and work in the city. So I don't think cities are going to go away.
And I also think people are really starting to miss their colleagues. My wife went and got coffee with one of her colleagues yesterday, and she ended up staying with her for hours because Microsoft Teams and Zoom is not the same.
It isn't the same. I was thinking about that because we're doing so many virtual conferences that way, and it's great because the accessibility, everybody's available, right? Everybody's home. But I do miss, I said to somebody after doing an event, I miss being kind of next to you in front of a crowd, just having a conversation. It's a different feel. It just is.
And for me, working from home is hard.
Yeah. So, all right, go ahead. Keep churning out these stories. There might be some more hybrid working, but I don't believe big cities, the end of it. I don't think the end of office work as we know it.
Hear, hear.
Hear, hear. All right. You're listening to Bloomberg Business Week, and this is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business
From Bloomberg World Headquarters, I'm Charlie Pelleton. Up Tuesday, first trading day of the new month. We are seeing a late day fade, but still we've got the S&P and Nasdaq at records. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks in the green, although, like you said, well off their morning highs. Dow's currently up 195 points, was up 444. S&Ps are up 40. Nasdaq is still up 147. The U.S. 10 yield at 0.92% now. Gold trading higher by 38, and transports gained 93 points. Among the main 11 SB sectors, all were in the green, led by gains in telecom, financials, and the industrials. And leaders to the upside in the Dow, Apple, Intel, and Travelers, Salesforce, and 3M led to the downside. After earnings, Zoom Video fell 15%. And in other news, Reuters reported that Elon Musk said he'd discuss it if a rival car maker offered to merge. And wrapping things up, Salesforce reports after the bell. CNBC reported a deal for Slack could come then. Live from the first breaking news desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill. And to hear live breaking news over at your Bloomberg Time Squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It is indeed. Thanks so much, Charlie Pellet. You're listening to Bloomberg Business Week. Carol Masser along with Tim Stenovic of Bloomberg Quick Take. And we're going to talk a little small business right now. We like to do this once a week. Bloomberg Business Week Small Business Survival Guide. And there's a story about a Brooklyn-born lifestyle brand that has been expanding in real life. They actually came in just as the pandemic was like getting underway. So it's amazing, right, that they were able to get started.
Yeah, talk about bad luck.
Talk about timing, right? Yeah. But they seem to be doing it. So let's talk about it. Let's bring in Bloomberg News editor Dimitra Casanidi. She's on the phone in New York City, along with Jill Lindsay, owner of the business and shop that bears her own name. She's on the phone in Brooklyn. So, Dimitra, you always bring us these interesting small businesses. How did this come to your attention?
Hi. Well, again, we have our amazing small business reporter, Nick Leiber. And Jill Lindsay's shop in Brooklyn is not far from where Nick is. And he'd heard about it through a couple of people, possibly even one of our own editors who have noticed the store, noticed the people going in, have been part of that community. Her store is very much about community and building a community. And then we heard that she got this space at Rockefeller Center because Rock Center is starting slowly on this effort to bring more local community-based businesses into the complex there.
All right. So let's talk about it. So Jill, come on in. I mean, tell us about creating this business in the middle of a pandemic.
Well, hi, you guys. It's such a pleasure to be here. It has truly been such a wild ride to open another store after, there was a moment when I wasn't even sure that the Brooklyn store was going to make it after we were closed for 5 months. So it's been truly a gift, and Rockefeller Center has been incredibly supportive, and I am so excited for their reimagination of this space and bringing in local businesses to help. So it's, we're there, and we're so excited to be there, and we don't ever want to leave.
So Jill, take us into what it was like for you in the spring when the pandemic hit, when you had to close the store. How did you recover from that?
Yeah, so we closed in March, and it was about, mid-June, and I'd applied for all the loans, and we only got a little bit from the PPP because, I'm a really small business, and we only had a really small staff. So the number, that we got for the loan was pretty small, and then I applied for the EIDL loan, and I got that, and it was truly one of those moments where I was like, I believe in the community. I believe in the small businesses that we sell and support. And I feel like it's my mission to try to stay open. So I'm going to take this loan and try to go for it.
And forgive me, because you have been in business for 2014, and the Rock space was all about additional space. But it is pretty remarkable that you've been doing it. What have you kind of learned during this process?
100%. I have learned that community can overcome anything, and we're so blessed to have such an amazing community. And, during the pandemic, we had 2 of our customers create a GoFundMe for the store. And I really believe that creating community and supporting local artisans and a local economy is what we need to do. And so that's what, we'll continue to do with hopefully more locations that we're able to open. And I think especially for Rockefeller Center, bringing local New York City makers to a place where we're surrounded by J. Crew and Anthropology is going to be a really big thing.
Yeah, that's very compelling, the local piece of it, Jill, just looking for people who are making things. That really does contribute to the community feel. There was a story that Nick talked to you about a little bit, and I thought you'd share it with us about the incense maker who was selling on a card table on the street in Bed-Stuy. Can you tell us about that?
Of course. It's one of our top-selling brands. It's called Encausa. They do incense and ceramics, and they work with artisans out of Peru. And, when I first found out about them, they were selling literally on the street, and it was on Bedford Avenue. And so I reached out to them, and I was like, I love your incense and your, what you're doing. And through the almost 7 years that I've been in business, it's been amazing to watch them grow because we were one of the first stores that they sold to. And, there came a point where Nordstrom had reached out to them, and that was one of my first design jobs in my previous career. And so they reached out and they were like, Jill, what should we do? Like, how do we do this? And then Whole Foods reached out to them and they're like, Jill, how do we, so it was like, what I love most about what I do is being able to support brands and their growth as well. So it's rewarding on so many fronts.
And Jill, I wonder about what your store is going to look like on the other side of the pandemic. What changes that you've made now are going to become permanent? What does it look like in July when hopefully we're at the other side of this?
And just got about 30 seconds here.
Sure. So a big part of the store that we haven't gotten back is our wellness services because I'm not in a way to bring that back to people yet. So, which was the biggest part of the store, which is caring for the people around us. So I'm excited for that part to come back and for our food and beverage part to come back full force and continue to grow and help support brands.
I got to say, it's great to hear a small business owner who's actually figuring it out and able to expand, keep the business going, and actually support others. So great story. Jill Lindsay, thank you so much. And Demetra is sending me a note. She's making history as the first indie woman owned, retail outlet at Rock Center. Rock Center is so traditional, right? If you think about it.
It's so nice to hear a story like this when we're just hearing so many stories about stores closing.
Yeah, figuring it out, right? Exactly. Demetra Kasanides, editor at Bloomberg News, on the phone from New York, and Jill Lindsay joining us on the phone from Brooklyn. Check out more at Bloomberg.com. You are listening to Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week. I'm Carol Master along with Tim Stenovic. And coming up, we've got the chart of the day. And you know what that means.
It means we have to guess a song that I'm not going to
I think
guess
you're
correctly.
actually better than you think.
All right, well, I'm 0 for 1 now.
0 for
Yesterday
1.
was tough, though. That was what they call a deep cut, right?
And I did do a little tease. I did a little Googling. Dave Wilson's going to be along with his chart of the day in just a second. First up, though, let's check in once again on the trading day with Charlie Pellet. Hey, Charlie.
Well, hello there. We have got 28 minutes to go ahead of the closing bell with the Dow, the S&P, and Nasdaq all advancing records right now for both the S&P and Nasdaq. Got to stay with Bloomberg to see where we close 28 minutes from now, and of course, how Asian markets react tonight. Let's get right to the numbers. I'll give you the why in a moment here. S&P up 40, up 1.1%. The Dow up 198, up now by 0.7%. Nasdaq up 141, higher by 1.2%. 10-year yield 0.91%. Gold up 2.1%, 18.14 the ounce, and a retreat for crude down 1.7%. West Texas Intermediate down 75 cents a barrel. 44.59 on WTI. We're off session highs, stocks trimming gains after starting December on a bullish note in the wake of last month's rally. Dollar extending its slide to a more than 2-year low. Treasury yields jumped. The risk-on mood is powering both S&P and Nasdaq to records. S&P, as I mentioned, up now by 1.1%, on track for a record. Gold up 2.1%, 18.14 the ounce. Pfizer and partner BioNTech are seeking regulatory clearance for their COVID-19 vaccine in the European Union, putting the shot on track for potential approval there before the end of the year. Pfizer shares are up by 2.6% right now. As for BioNTech, it is down by 8.9%. Should mention Moderna as well. It is down now by 9.9%. Dr. Amish Adalja is senior scholar at Johns Hopkins Center for Health Security, and on Bloomberg Television this morning, he talked about the challenges of getting the entire world vaccinated.
It really has to be all hands on deck when we're vaccinating this level of the population. Initially, it's going to be kind of a trickle, healthcare workers, high-risk individuals, and that might be manageable with existing resources. But when we're talking about vaccinating the entire world's population of adults, it's going to be something you're going to need non-traditional vaccinators. It's not always going to be doctors and nurses. You have to think about pharmacists. You might have to think about first responders, EMTs, paramedics. We need as many people that are able to vaccinate to be able to vaccinate.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. United Health Group expects the pandemic to carve $2 billion out of its profits next year, with COVID-19 testing and treatment costs remaining steady even as more Americans return to their doctors' offices for routine care. Shares of United Health, they're up right now by 1.4%. Recapping, looking at records for both the S&P and Nasdaq. S&P up 39, up 1.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week, and this is Bloomberg Radio. All right, we're just lost. Oh, man, I don't even know.
You know, Tim, you were saying yesterday was a deep cut. Nah, not
This
really.
is a deep cut?
See, I thought
This is a deep cut.
you were going to give Tim a gift today and like.
I was
play
expecting
some...
little Bruce.
Exactly,
you know,
Dave
but that's
Wilson.
okay.
What's up with that?
There's always going to be. There's going to be.
Bruce
Yeah.
eventually. But
I
you
know.
gotta mix it up. I mean,
I can't even Google. My computer's like, I don't know what that is. I have no idea.
twisting by the pool.
Twisting by the pool. Now we're like we're
Yeah.
both Googling. What is
Fortunately, I have the internet.
it? Yeah, I know, right? Is our
Wait,
internet good?
is this the Dire Straits?
Yes.
Oh.
So you know
You
how to
Googled.
I Googled, yeah, I
Totally
Googled.
Googled.
Congratulations.
Nice
I Googled.
job. I would have never guessed.
You know, the chart headline says time for a dip, so I thought, where do you
cute.
take a dip? You do it in the pool.
I see what you did
Hence
there.
Dire Straits. In any case,
Well
what
done.
kind of a dip are we talking about here? A dip for the Russell 2000 index. And we know that last month The Russell had its biggest gain ever, of course, ever going back to the late 1970s when the index was first.
It was
compiled.
remarkable, yeah.
Yeah. So the question is, what now? If you kind of missed it, and it's something that Tony Dwyer addressed in a note yesterday. He's the chief market strategist at Canaccord Genuity. And what he did is look at, the biggest gains in the Russell over time. Looked at 9 of them. So you figure that last month was first in the top 10. He looked at the rest of the top 10. And what struck me about the numbers he put together is that if you look at the last 5 instances, going back to 2000, you saw that in each case, the Russell was below its end-of-month reading within the next 45 days. And, the average decline was more than 8%. So, in other words, you didn't get, much of a continuation of the gains. And at some point in short order, you saw the shares of smaller companies pull back and fall below, as measured by the Russell, where they were at the end of the big, month with the 10% plus gain. So, it's an interesting kind of potential prelude to what may happen in the next few weeks.
Well, it makes sense, though, right? Dave, we often see that with an index or even as in a particular equity name. Like it runs up a lot, and then there's a little consolidation or indigestion or digestion, I should say.
Right. Or in this case, as Dwyer put it, relative indigestion.
Right.
Which is what investors may well be left with. In any case, if you want to know more, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
Tim's going to be serious. I can just see it. Go ahead. What do you got?
I just want to know what this tells us about stocks that are not in the Russell 2000. Does this send any sort of signal about the S&P 500 or about big tech names?
Well, you'd have to kind of go back and look at the data. But what makes, the Russell particularly interesting is that, last month we really saw it take off, and it had been dormant for some time. You had this whole kind of shift, towards smaller companies, toward cheaper shares, value stocks, toward, non-U.S. shares. And so the real question is, given the magnitude of the moves, what happens next? Have investors kind of missed it if they, waited it out? Or, is there the potential to buy the dip?
Well, it's interesting. If you look at in terms of correlation, S&P 500 was up about 29% last year. Small caps were up about 24%, so maybe not as much. Previous year, S&P was down about 6%. Small caps were down about 12%. So I don't know what the correlation is, Dave, specifically.
Yeah, it all comes down to, did you miss it? Is that it? Or do we just kind of go up in a straight line from here? And, what the history shows us is the short answer is, no, we don't go up in a straight line. There's a potential for another move down.
All right, good stuff. I was going to say, do you ever read lyrics and they just feel so different versus singing them?
That's what happened with this song.
That's where I was going to go. All right, but anyway, let's get back to world and national news and back to Nancy Lyons. Hey, Nance.
Hey, Carol. President-elect Joe Biden is rolling out his economic team that will be responsible for his administration's response to the economic fallout from the pandemic. He says there's no need to wait. He says there's still time for the current Congress to act.
And right now, the full Congress should come together and pass a robust package for relief to address these urgent needs. But any package passed in a lame duck session is likely to be at best just a start.
Biden's remarks come as a bipartisan group of lawmakers in the House and Senate unveiled a $908 billion stimulus proposal. Speaker Nancy Pelosi offered her own revised plan, and Senate Majority Leader Mitch McConnell started circulating his own proposal. Well, the fallout from the pandemic may have begun in March, but the coronavirus may have been in the country as early as December of last year.
A newly published study identified 106 COVID-19 infections in nearly 7,400 blood samples collected across the country between last December 13th and January 17th of this year. The first reports of mysterious pneumonia coming out of Wuhan, China, emerged in late December of 2019. This study adds to evidence that COVID-19 was silently spreading around the world even before that. In Washington, I'm Nathan Hager, Bloomberg Radio.
President Trump still claims the election was stolen, but Attorney General Bill Barr today said the Justice Department has not found any evidence of widespread voter fraud that would change the outcome. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Master along with Tim Stanovic, Bloomberg Quick Take. And what's interesting, I don't know whether, when you're doing your show in the morning, when you're doing it at noon, how much you guys have been talking about IPOs, but it has been a very busy IPO year, and December is going to be a busy month.
Yeah, I want to talk about some of the stats that have been compiled by Bloomberg. So Airbnb is looking to raise $2.6 billion. That's a lot of money, right?
It's a lot of money.
But guess what? It's going to be the fourth biggest in the U.S. just this year. That's according to data compiled by Bloomberg.
Which is pretty remarkable.
That really puts things into perspective for how much of a gangbuster year it has been for IPOs of $2.6 billion is the fourth largest.
It's remarkable considering the volatility that we've seen in this year. We're going to actually talk with somebody who IPO'd a little bit later on our broadcast. But, it feels like, some companies, all of a sudden, their business looked more promising kind of under the pandemic and found a way to get back into the market.
Yeah, the story of Airbnb
to enter
has
the
been
market.
Absolutely remarkable because it pretty much, do you remember back in March and April when we were reading all those stories about Airbnb hosts, people who had bought these homes, who were worried about what was going to happen because everybody had stopped traveling. Then fast forward a couple of months and it was impossible to find Airbnbs in certain locations because everybody wanted to go to them.
Which is so interesting, right? We had the CEO of Trivago on recently, and it's what you've seen in terms of trends, right, Tim, is that people don't want to go to the they can't go to the big hotels, right? And it's not safe or they don't want to, but they're like, a home with some space, like, sign me up. Yeah. It's pretty remarkable. And that, so Airbnb is going to come into this market. What I think, $35 billion valuation is pretty impressive, like out of the gate. That's what's expected. I think they're going to IPO on, I think they're saying December 9th.
Yeah, and it's one of those stories, we heard a lot about fundraising at down rounds and going for companies going public for less than they had raised in the private markets. Airbnb's highest valuation as a private company was $31 billion. That was back in 2017.
Yeah.
But they took some money from Silver Lake and Sixth Street Partners, where the valuation was $18 billion very recently. So that if they're going for a $35 billion valuation, that is a massive increase in just a few months.
We'll see if investors have the appetite. Just a little perspective, Marriott has got a market cap of $41.7 billion. So this is just a little bit below it. Yeah, context. Right? All right, you're listening to Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. 13 minutes to go ahead of the closing bell. Stocks of trim gains, but both the S&P and Nasdaq are at records as traders continue to bet vaccine news will lead to an economic surge next year. The S&P up now by 38 points, up 1.1%, bringing its year-to-date gain to 13.3%. The Dow powering higher by 175 points, still below 30,000, up by 0.6%. Nasdaq looking at a record right now, up 144 points, higher by 1.2%. 10-year down 25.30 seconds, with the yield at 0.92%. Communication services, financial, and information technology are among the biggest S&P industry sector gainers. We've got gold up 2.1%, 18.14 the ounce, higher by $37 the ounce, and a pullback for West Texas Intermediate crude down 1.7%, 44.56 a barrel. So again, records right now for both the S&P and Nasdaq. Should point out that Bitcoin did reach an intraday record before pulling back. Bitcoin down now by 2.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the drive to the close
That funky music will drive us till the dawn.
on Bloomberg Radio.
Yes, indeed. Just about 11 minutes left to go in the Tuesday trade. It is time for the drive to the close. Nice to welcome Sarah Malik. She is head of global equities, chief investment officer of global equities over at Nuveen. They've got roughly 1.1 trillion in assets under management, and she's joining us on the phone from San Francisco. Sarah, nice to have you here with Tim and myself. Let's talk a little bit about what we're seeing in the markets, because it does feel like there's some enthusiasm, some risk on, once again, back in the trade. What do you make of it?
We think that the market basically is setting up for a return to normal. We have a nice setup for 2021 once we're past some of these near-term bumps in the road. You know, the election's behind us. We likely have a divided government, which is market-friendly. We have a vaccine coming, potential stimulus, low interest rates, low inflation. All of that's very good. We do think 2021 will be a focus on earnings growth. So 2020 was about valuations expanding and driving the market. 2021 is going to be about earnings growth driving the markets. Now, in the meantime, we do have concerns. Obviously, we have a huge spike in the virus, and we're seeing some economic shutdown. So the next few months are going to be bumpy, but we're setting up for a nice period past that time.
Sarah, we'll talk about that in just a second, but I'm seeing in your bio right now that you went to Cal Poly in San Luis Obispo.
I did.
That's where I'm from. So it's great to talk to a fellow former resident of San Luis Obispo. It's a fantastic place. Yeah, go Mustangs, exactly. I grew up going to those soccer and basketball games when I was a kid. It was so much fun.
So nice.
What do these next 2 months look like, these bumpy 2 months? If, we have, potentially the president is not going to concede. We have no idea if he will go to the inauguration. Do markets care about that?
I think that's more noise because the markets do realize that we will get through that. The main concerns for us over the next couple of months are really how bad is the economic slowdown, because that resets the bar that we recover from. So how low does that bar go before we finally have that reopening? And that, of course, depends on how this virus continues to go. Now, there could be some upside if we got stimulus during the lame duck session, but our view right now is that you likely don't get that until the first quarter. So definitely a rocky couple of months, and the market will stay volatile around that kind of information coming out.
Well, oh, go ahead. Did you want to say something? No. Oh, San Francisco, how does it feel right now with the virus?
Definitely quiet. It's definitely California is having a lot of issues. San Francisco is slowing down. We moved back to the purple tier. Things are closing again. So, it's starting to feel a lot more like March and April around here.
So as an investor, I do feel like we understand a vaccine is coming, right? We can, at this point, get a little bit of a timeline and understand maybe we're back to normal by late spring, maybe by summer. Having said that, how do you play the market at this point? We constantly talk about rotation, but again, tech was interesting again this, on this Tuesday. So I'm wondering how you see it, especially from a global perspective.
I mean, November was an interesting month because the market's up about double digits for the month. So really, we expect the market most likely to take a breather as we go through this volatility. And we're less about the rotation at this point. Cyclicals have had such a nice rally. We know growth stocks were very crowded. They gave back a bit. We're more focused on more of a mild risk-on environment in 2021 and focusing on earnings. So it's not, we think it'll be less about is it growth, is it cyclicals, which one do you want to own? It's about owning those companies in any of those areas that can have strong earnings growth. So areas like healthcare where the election's behind you, as the yield curve starts to gradually steepen, are there financials that we like? And in growth and technology sectors, which ones look more attractive, like Google looks more attractive maybe than Amazon because Google has not had the run that Amazon had this year. So being more selective within the sectors rather than making that larger macro trade of do I want to be in growth or do I want to be in value?
Carol and I were talking about Airbnb just a few minutes ago and just the massive number of IPOs that we've seen this year and the way that December is shaping up to just be the end of a huge year for IPOs. Why are so many companies right now saying this is the right time to raise money?
I mean, I think, the markets have been strong. Companies like Airbnb obviously had their own secular tailwinds. Those could accelerate as more people feel comfortable staying in houses going forward as they travel, and the way that we travel changes over time. I think access to capital with low interest rates has just been interesting in general in terms of M&A and debt that companies are taking on. So I just think there's a lot of capital coming into companies. All that's very positive, especially with the market returns that we've seen year to date.
So I don't know how much you guys talk about this, Sarah, but the disconnect between Main Street and Wall Street. And, Tim and I were talking about it off air, that it really does feel like the small business community, the mid-sized business community has been left behind. And I know a lot of that isn't publicly held, but we talk about it being the backbone of the economy. How many discussions do you guys have at Nuveen where you're seeing this disconnect between people who feel okay if they're in the markets or other asset classes versus those who are not, but are really important to certainly our society and our economy overall, and what that means potentially going forward?
I would say that's a bigger discussion almost on Main Street. So I hear more about that from individuals who are investors and clients who are concerned. Mm-hmm. Internally, our view has been that this recession was event-driven, and if you look at history, they tend to be deep and short-lived and have these pretty fast rebounds, which is what we saw. And because it's based around one event, which was COVID-19, once we start to see a path out of that, the market tends to rebound quite quickly. I think in the small business space, we're actually big fans of small caps as public companies because they were pretty recently at about 2-decade lows in terms of valuation, and we think they'll have a lot of operating leverage coming out of this cycle. So we do like small companies, but we do think that things are going to change in terms of which ones are successful and which ones are the survivors, and even new industries that may pop up because of what's happened in this pandemic. But it definitely is a concern, and all that cash that's on the sidelines. A lot of people left the market in March out of fear, and now they're having trouble trying to figure out how to get into the market. And that's why on most of these downdrafts, you see people buying on the dips as they're trying to get back into equity.
Sarah, I'm eager to get your take on Biden's economic team and what the market is saying about it. We saw today that he's officially nominated Neera Tanden for OMB, Wally Ademo for Deputy Treasury Secretary, and of course for Treasury Secretary Janet Yellen. What do investors think?
And just got about 40 seconds.
Yeah, the investors basically have been pretty positive so far on it, that Janet Yellen is fairly market-friendly, regulatory-friendly, and so I think people like this economic team. It's more moderate, it's in the middle, and that should, again, be a positive and less noisy for the market.
All right, good stuff. Thank you so much. Really appreciate it. Sarah Malik, head of global equities over at Nuveen, $1.1 trillion in assets under management, on the phone from San Francisco. Yeah, big day.
Go Mustangs.
Go Mustangs. God, it would be nice to be in California, wouldn't it be?
Yeah, it would be.
Do you go back there much?
I used to. I mean, this will be the first Christmas that we don't go back in a long time.
Yeah. Well, you'll get back there.
Yeah, we will.
Hopefully in the summer. All right, everybody. We're going to count you down to the closing bell. Just about 3.5 minutes to go. Carol Massar, Tim Stenovic, and this is Bloomberg Radio.
Sports, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Records on Wall Street. Folks from Salesforce.com, Giving Tuesday on the 92nd Street Y, virtually ringing the closing bell at the New York Stock Exchange as we await the latest numbers out of Salesforce, HPE, and NetApp, among others. Records again, this update brought to you by PGIM, the investment management business of Prudential. Join the pursuit of outperformance at PGIM. Learn more at PGIM.com. That's PGIM.com. Stocks higher as traders continue to bet vaccine news will lead to an economic surge next year. Also, signs that appetite is picking up for a federal spending package, with a bipartisan group of lawmakers arguing for relief. S&P up 40 points. That was a gain of 1.1%. The Dow up 184, up 0.6%. Another record for Nasdaq, surging 156 points, up by 1.3%. 10-year down 24.30 seconds. 10-year yield 0.91%. Gold up 2.1%. 18.14 the ounce. And West Texas Intermediate crude down 1.7%. 44.56 a barrel. So we begin the first trading day of the new month with stocks jumping to records. But what about the outlook for the new year, for 2021? Sarah Malik is head of global equities at Nuveen. She was our guest moments ago right here on Bloomberg Business Week.
We do think 2021 will be a focus on earnings growth. So 2020 was about valuations expanding and driving the market. 2021 is going to be about earnings growth driving the markets. Now, in the meantime, we do have concerns. Obviously, we have a huge spike in the virus, and we're seeing some economic shutdown. So the next few months are going to be bumpy, but we're setting up for a nice period past that time.
BlackBerry surged after the wireless company signed a multi-year agreement with Amazon Web Services to develop and market its intelligent vehicle data platform called Ivy. Shares today of BlackBerry up by 19.25%. So again, recapping, records today: S&P up 1.1%, Nasdaq up 1.3%, the Dow up 0.6%. And that's a Bloomberg Business Flash.
Whoa, yeah, what I say.
Nobody move a muscle. Bloomberg Business Week. Movers and shakers.
Damn, Stiffy, you got some move.
On Bloomberg Radio.
All right, everybody, time to take a little bit of a deeper dive into today's trade. I'm Carol Masser in our Bloomberg Interactive Brokers studio. Bloomberg News cross-asset reporter Sarah Ponzak on the phone in New York City. And let me do a little bit of a drill down into the trade. S&P 500, more of a risk-on trade. 384 names in the S&P 500, higher today, 119 lower, 2 unchanged. And if I take a look at the major industry groups in the S&P 500, top of the pack, we heard Dave talking about it at the top of the broadcast. Communication services up nearly 2%. Financials right behind it, up about 1.6%. Only one of the 11 major industry groups in the S&P that was down today were the industrials, down about 0.2%. All right, Sarah, so all of a sudden big tech was okay again.
Right. It was an interesting mix of a trade today. In the early morning, we had seen this cyclical value rotation taking hold, but through the day, that kind of got shaken up a little bit. As you mentioned, financials was at the top of the pack, but right along with plenty of tech stocks. For example, if I look in the Nasdaq, which yes is tech heavy, but if I look at the best performing stocks on a points basis, it's Apple, Amazon, Facebook, Tesla too, your classic names that we have seen rising before, but you still saw financials up at the